starting. All attendees are in listen-only mode.
Okay, Jeff, you're live.
All right. Good morning, everybody. Hope you're doing well. I'm Jeff Gibby. I'm going to be talking about, well, I'm going to be helping us. I'm going to run in the whole event today. So I hope you're doing well. It's good to see you. Welcome to day 5 of the conference. It's good to see you. Let me go ahead and kind of read the legal disclaimer so we can kick off. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. A couple of items of housekeeping. Thanks for being here. I want to say thank you. I hope you've been enjoying the week-long event now. If you are watching us on YouTube, make sure to like and subscribe. It helps a great deal. If you have any questions, make sure to ask. We monitor and keep an eye on those particular comments. So if you have anything you need to say or you want to say, or any questions, let us know. So also say hi. We like to see you. If you have questions in GoToWebinar, there's a questions button. You click on it. Easy enough. We will be doing raffles pretty much all day long. And if you want to be on the raffle and you're watching us on YouTube, maybe stumbled across the thing, there's a pinned comment, and if it's not there, it'll be there in just a second with the MetaStock registration page where you can register and enter yourself in to randomly win prizes as we go today. So I do want to say thank you to the sponsors we have. AAII.com, the American Association of Individual Investors. It's a great nonprofit. They've been doing some work with us for a couple of years. We really appreciate the work that they've done, the support of the forum, the support of the conference, and appreciate it. Also want to say thanks to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great partner of MetaStock over the years. They've been publishing since 1982. You can get a subscription there, which will give you access to all 17,000 articles they've released, as well as a new magazine every month delivered in the mail if you're in the US, or by PDF if you're overseas or international. You can do that at traders.com. Also want to encourage you to join the Traders Forum. You can do that at thetradersforum.com. There you can chat with other traders, talk about the markets, talk about maybe the gap down today. I don't know, whatever you want to do. Thetradersforum.com. We do have a number of educational resources up there. We do educational webinars. We bring in guests, and it's a really, really cool community. And all of that stuff that I was just talking about, you can do for free at thetradersforum.com. So we are MetaStock. MetaStock's been the highest rated software in this program for 32 years in a row. We'll be talking about it all day long. So without further ado, our first speaker today is Zaheer. Zaheer has made a very cool set of kit called the Market Edge technology. He's going to be talking about that today. He's going to be showing kind of how he can use that to identify positions and how he uses it to kind of get better trades in the market. So Zaheer, without further ado, let's get you started.
Hey, Jeff.
Hey, how you doing?
Good, thanks. Yourself?
I'm doing great. I'm going to go ahead and make you the presenter here.
Thank you.
Okay, there we go. I should have just asked you if you wanted to share your screen. All right, it's coming through. I can see it. I can hear you fine. I'll get out of the way. It's your turn. Go.
Fantastic. All right, guys. Well, I hope everyone's well and has had an excellent week. It's Friday, believe it or not. So let's dive straight in. I'm going to be covering how to consistently identify high-performing stocks and assets. Excuse me. There we go. Okay, so we're going to be covering specifically how to use MetaStock and a trend-following investment strategy to significantly improve your portfolio performance to 30% plus a year every year. Now, just a little bit of a warning, guys, upgrade ahead. Ultimately, you can't unlearn these principles that I'm going to be sharing with you today. I believe all endeavors in life have best practices. That people say there's, a million ways to skin a cat. Yes, there's an element of truth to that, but there's always a better way to do something. So there's always best practices. And with the technology available today, we have evolved in terms of the techniques that we can use as retail investors. I believe that a lot of investors are using old, outdated techniques. We've come a long way. So today is a day where we're going to upgrade that. At the end of this, you're going to then have a choice, which is either continue doing what you're doing or adopt these new upgraded principles that I'm going to be sharing with you. Just a bit of background about myself. I have a degree in software engineering, which is where my love for the trading technology came about. When I discovered MetaStock over a decade ago, it was a complete game changer for me because of what it allowed me to do in terms of using my programming skills. I worked for Oracle for a year, Larry Ellison's Oracle. Of course, Oracle is all over the news at the moment, particularly with TikTok, but back in the early 2000s, I worked for Oracle. I didn't really enjoy it, working a 9 to 5. It's one of my strengths, I guess, is just making strong decisions. And I learned very early on that if I'm going to do a 9 to 5, which is often longer than a 9 to 5, you've got to do something that you enjoy. So I quit. I became an English language teacher. I lived in Taiwan, Japan, the Philippines, out in Asia teaching English. Absolutely loved it, but not much money in it if you want to build a sort of an affluent career. I then came back to the UK, back to London, where I'm from originally, and got into advertising photography. This is, when I started actually making really good money, images going on the side of buses and on billboards. So we were getting usage right and repeat clients. It was just a very good time. Started making some decent money. I then started getting into the financial markets around 2005, actually. That's when I started day trading, like everyone usually does. Quickly learned that day trading wasn't the best way forward for me. I feel it isn't the best way forward for retail investors in general, but each to their own. I started trend following in 2007. This is when everything really sort of came together for me and started falling into place. I co-found Sublime Trading in 2018, which is our education platform, and then co-found the Reversy Fund, which is our hedge fund, incorporated in Luxembourg in 2023. Our track record, our audited track record, goes all the way back to 2016, and it comes in at around 30% a year. I'm now in a blessed position to be able to speak and contribute to all these wonderful publications. I've had a long-standing partnership with MetaStock, one that we are extremely proud of. But alongside MetaStock, I've had all of these other platforms give me a voice, which has been great because of one particular reason, and that is my goal has been to put trend following back in the limelight, as it became a forgotten art form with lesser strategies taking center stage, particularly those sort of short-term strategies, day trading, swing trading, scalping. Even if we talk about value investing because of Warren Buffett gets a lot of attention, but value investing as well isn't often the best way forward for everyday retail investors to invest. There is a much more powerful approach, simpler and more profitable, which is trend following. Now, we've achieved this in two ways in terms of putting trend following back in the limelight. We've achieved this in two ways. One, as already mentioned, is Sublime Trading, which is our education platform, and now Reversy Fund, which is our fund management offering. At the very core of that is the Market Edge technology, the MET add-on that we have developed alongside MetaStock. And the reason for that is that it works, and it works perfectly, and it also works as a legacy toolkit. And I'm going to expand on that shortly, that term there, legacy toolkit. Now, just to get some feedback, give you guys some feedback on what our members are saying in terms of the results that they have achieved over the last couple of years. We have helped our members achieve 100% return in this bull run that we have been in since 2022. You can see 100% return, 100% return there, 30% on average. in excess of 100% returns. For 2024 made 40% return when the S&P 500 made 25%. Another testimonial there showing 100% returns. Ultimately, guys, the point is this: at the core of all of these returns is the technology that we have built, and that is all established alongside MetaStock, because it starts with picking the right stocks. Doesn't matter how good an investor you are, if you're continuously picking the wrong stocks, you will never gain traction in your portfolio. So it starts with being able to scan and find the right stocks, and then go from there. Let's just do a comparison of the kind of returns you can expect over a period of time. Let's say you've got two portfolios running side by side, $20,000 in an S&P 500 tracker fund and another $20,000 in a broker account where you can invest in stocks that are outperforming the index. I'll explain exactly what that means as we go along. Let's say you've got a 20-year time horizon, and each month you are adding a further $100 to each pot. Let's be generous, and let's say you get 11% a year with a tracker fund. It's usually less, and remember, we have to think about inflation as well, so the returns will be adjusted. Life is getting more and more expensive, unfortunately. And just to add to that, it's out of our control. People often complain about inflation, and yes, of course, we don't like the fact that we're living in an ever-increasing world, but I tell people to focus on what is in our control. And what is in our control? Earning, saving, budgeting, investing, and compounding. So the more we funnel into a process that can outpace inflation, the less then we will have to sort of really worry about the sort of world that we're living in. 30% a year, if we push it from 11% to 30% a year, investing in stocks outperforming the index. After 20 years, you'll have around $250,000, which in itself is not bad. If you look at it in isolation, it's not bad. But if you have 20 years of retirement, 25 years of retirement, it's not a lot of money. However, at 30% a year for 20 years, you're looking at $4.5 million. So you can see what a difference it makes in terms of your returns by putting a bit of time and attention into learning how to find stocks, investing in them, managing them, compounding them. The returns are significantly superior. And so when you're dealing with these kind of numbers and these kind of returns, you will then outpace inflation rather than worry about it. And then, of course, when you're dealing with these numbers, there's a whole set of benefits that comes with it. First of all, the confidence that comes with it. No one is doing this correctly. A lot of people are underperforming. A lot of people don't have any portfolio. A lot of people are worried about their future. If you get on top of this, the confidence that comes with it is second to none. Your future is exactly where it should be, which is in your hands. All the money is under your control. It isn't locked away in some scheme and then drip fed to you later in life. Retirement, it's all in your hands. You don't have to retire at 65 if you don't want to. Instead of worrying about retirement, you bring it forward. In terms of, a lot of people generally have gone down a career path that isn't one they often wanted to be down. They've all got business ideas. When you're dealing with those kind of numbers, you can go back and start that business that has been forgotten about. If you're a contractor, you can pick the hours that you want to work. I believe deep down, everyone is good. If everyone had more money, people would be more generous. We'd live in a better world. So when you're dealing with these numbers, generosity just comes as standard with it. And then, of course, we all like the finer things in life. You know, people who know me know that I love my tailored suits, because for me, it really sums up that bespoke experience of life that you want to aim towards. My tailor comes to me, he brings the materials to me in my house. It's just a really nice experience. You can do these kind of things when you've got the money. Of course, you may want to upgrade, but the most important part is what I said earlier about having a legacy toolkit. Financial illiteracy is a pandemic that gets no media attention. And so what that means is that we as adults have to go out into the broader world and learn about money and learn about how to manage and invest it. And as mentioned earlier, people are underperforming. So what are you going to teach your kids? The schooling system isn't going to do it. In fact, it's going to get more and more difficult for children to find the right information. So someone has to get on top of it, and that has to be you. You've got to find a system that fits into your lifestyle, that delivers the returns, and then you can then learn and pass that on to your kids to carry on your good work. And so that's what I mean by the MET being a legacy toolkit. It will be in your family for generations. So just to give you an idea of our portfolio, we have a copy service in our community. So all those testimonials that you have seen are showing 100% return. To be honest with you, some of those testimonials we collected at the start of the year. We've moved on since the start of the year, and our portfolio is now running at 221% return on investment. So over the last 2.5 years, the portfolio is performing very, very well. And as mentioned, at the very center of this is the MET that we have developed for MetaStock. So this is what the portfolio looks like: 47% winners, 26% break even, 27% losers. So out of all the positions that we've taken, only 47% are winners, but those 47% have returned 220% profit. And so this is something that's really important, guys. You have to learn to think in terms of profit versus loss and not winners versus losers. If you go down the route of thinking of winners versus losers, you're looking to take on the market, you're looking to beat the market, you will lose. The market will defeat you. If you think in terms of profit versus loss, instead what you'll do is pick good stocks and align with the market and make much better decisions. It's not about how many winners and losers you have, it's about how large your winning positions are. This is a breakdown of the portfolio in terms of sector allocation. Look how diversified it is. It's a really nice, a really smartly diversified portfolio. If you go online, all we ever hear about is big tech, and you seem to think that big tech is the only sector in the stock market. There are 11 sectors. Our goal as investors is to find the strongest stocks in the strongest sectors and invest in those. 20% of our portfolio is in commodities, which is gold and silver. We had positions running on live cattle, which was doing very well, and then we had a big correction, so we stopped out of it. We got stopped out with a small profit. 70% in US stocks, simply because it's the largest, most mature market with the best opportunities each year. And then we've got some positions in UK stocks because I'm here in the UK and sometimes these good opportunities appear. Now, if you look at that in terms of individual positions, we've got 16 US stocks. In fact, we've added a few more this week, so this needs to be updated, to be honest with you guys. So I believe we've got 18 or 19 US stocks. We've still got we've got gold and silver. That should say 2. Live cattle has been removed, which came out yesterday. I should have updated this. And UK stocks, we've still got two UK stocks. We've only got a handful of positions in terms of individual stocks, but if you look at our portfolio, we've got something like 50 or 60 positions running. And that's because all we do is repeatedly buy more of those winning assets. So instead of overly diversifying, which kills portfolios, instead we are smartly diversified, but we are concentrated. That means we diversify across the best assets, but then we repeatedly buy more of those winning assets. It's a timeless process that all the best investors and traders have used. Some examples here: Amphenol. Since 2022, it's climbed 203%. BWXT Technologies is up 146%. Cencora, which is a healthcare stock, is up 202%. Nvidia is up 1600%. Now, Nvidia is one of those buzzword stocks. What we need to do is remove the buzz element of it, and instead, as investors, understand when is the right time to enter, how to manage risk, how to exit, and not get caught up in all the hype and often fear-mongering around Nvidia. And when I say fear-mongering, if we go to the beginning of the year, DeepSeek came to our attention, and DeepSeek was supposed to end Nvidia as we know it. But if you look at Nvidia now, it's a $5 trillion market cap company, the first company ever to hit $5 trillion. So that was incorrect for whatever reasons that may be. So we need to get away from all of the buzz and really make smart, sensible decisions. McKesson Corporation is up 247%. This is a healthcare stock. So what do these stocks have in common? These are trending stocks that are outperforming the S&P 500. Now, I mentioned at the beginning, I was going to expand on what that means, outperforming the S&P 500. The S&P 500 since 2022, when the bull run came back in, has climbed by 92%. So 2022, we had a 28% correction in the S&P 500. If you remember going back to 2022, the world was going to come to an end as we know it, all across our media channels. It was a repeat of 2000, a repeat of 2008. Instead, I said to people, remain calm, particularly in October. when it came to the weekly 200 simple moving average, which is a key support level. And I said, look, guys, if it breaks this level, we're in a bear market, but there's a very good chance it could bounce. And in fact, it bounced and it's climbed by 92%. And so the S&P 500 has climbed 92%, but all of these other stocks I've just showed, Amphenol 203%, BWXT 146%, Cencora 202%, Nvidia 1600%, McKesson Corporation 247%. These are just some stocks that have outperformed the index. And what I mean by that is that they moved up further and quicker than the index. If the S&P has moved up 92%, all of these stocks have moved up significantly more than that. And that's a really important point to note. The S&P 500 is an average of 500 stocks. So if you invest in the average, you'll get an average performance. But with the MET, what we're doing is we're finding those handful of stocks that are performing better than the average. If we can find those, hold and invest in those, then we will push our performance from average to that 30% plus mark that I have mentioned. Now, all of these stocks follow the same method or the same phases. Ultimately, a good stock moves up like a flight of steps. It goes up for a period of time, months or years, then it'll go sideways for months or years, then it'll go up for months or years, sideways months or years. So it's continuously going up like a flight of steps. Each up, sideways, up is what I call the 4-phase sequence method. And this repeats over and over and over and over again on good performing stocks. Phase 1, proven performance history. If a stock has performed well in the past, it's very likely to perform well in the future. Consolidation base, phase 2, a sideways market. You know the expression, guys, the longer the consolidation, the bigger the breakout. So we want a consolidation base. Typically, I look for 3 to 6 months, but the longer, the better. Then phase 3 is the breakout. This is when it moves out from phase 2 to phase 3 and it starts its next uptrend phase. And then phase 4 is the new trend. So all of the stocks and assets that are in my portfolio right now, they're basically all in phase 4, all at various steps of phase 4. Some have just started, some are a year to 2 years old, some are a few weeks old, a few months old. I have a portfolio of phase 4 trending assets. And each phase 4 asset typically lasts 12 to 18 months. So that's an idea of my holding period for a winning stock, often much, much longer. For example, I've been holding gold since March of 2024. So it's coming up to 2 years now that I've been holding gold. Amphenol, BWXT, these have all been in my portfolio since early 2023. So I've been holding them longer than 2 years. So McKesson Corporation, phase 1, this is an example of how I apply it. Phase 1, 2009 to 2015. So that's a 6-year trend. So if it's done that well in the past, then it's very likely to repeat that. Phase 2 was that 7-year sideways market from 2015 to 2022. Phase 3 was the breakout in January 2023. And we are now in phase 4. From February 2023 to the present day, we are in phase 4. So I repeatedly, if you take these 4 phases and apply them to all the stocks I've just shared, this is how they will look. You can take this phase 4 system, apply it to the stocks and assets in your portfolio, and you'll be able to identify precisely why your portfolio is underperforming or not performing as well as it should be. So the question then is, how do we find these stocks? Well, we use a 2-tier process. Now, a point to remember here, guys, is that good investing is simple but not easy. The best techniques are simple to learn and execute. Following the process without deviation is where people fail. Simplicity is the ultimate sophistication. So everything that I'm going to show you can be learnt. And of course, there is a learning phase. But once you've learnt it and spent some time with it, you then run away with it and it becomes repetitive and repeatable and something that you can consistently use time and time and time again. Because that's another reason why people fail. They fail because the systems they use lack an edge and they aren't repeatable. If you combine those two, you're ultimately on a losing streak. So the 2-tier process, how does this look? Well, first of all, we use a professional scanner, MetaStock. MetaStock is simply the best in the business for what it does best, which is explore and scan the market. And believe me, guys, I've been around since 2007, I've tried all sorts of scanners. And when it comes to being able to program a scanner to do precisely what you need, MetaStock is undefeated. MetaStock on a daily basis, based on my process, scans around 20,000 assets. That's US stocks, UK stocks, commodities, currencies. I click a button on the scanner, which I'm going to show you in a second how it looks. It goes through the scans, which takes 10 minutes, 15 minutes to do all the markets, and it will give me a more manageable list of 50 to 500. Now, on an average day, I get somewhere from 100 to 200. That's an average day. On a quiet day, the lower end of that, 50 to 100. On a very, very, very bullish day, for example, the day Donald Trump was re-elected, when we ran the scanners on that day, we got back something like 600 or 700 stocks. So you can see how it can differ, but on an average day, which is most days, you'll get somewhere between 100 to 200, which is a far more manageable list. Now, I know some of you are thinking, damn, that's still a lot of stocks, but I'll show you how we get through 100 to 200 stocks in literally 20, 25 minutes. Now, the explorers, what MetaStock call explorers, the scanners are programmed with our blueprint. What we're looking for are those stocks that are outperforming the index. So the explorers are designed to find stocks that are moving from phase 2 to phase 3. So instead of manually going through 20,000 stocks every single day, which is an impossible task, we can click the button on MetaStock. It will scan 20,000 assets, and it will give us all the stocks that are going from phase 2 to phase 3. Ultimately, what it's doing is scanning the sectors, and it's finding the strongest stocks in the strongest sectors. Here's the thing, guys. Trends rotate between sectors. There's 11 sectors out there. Money could be in communication services, technology, real estate for 12 to 18 months. Then the markets go flat and it moves into the next set of sectors. Then the markets go flat and it moves into the next set of sectors. Then the markets go flat and it goes into the next set of sectors. Our job as investors is to find the strongest trending stocks from the strongest sectors. If you cannot do this, you haven't earned your stripes, and it's a bit far-fetched to call yourself an investor or a trader. Maybe you're learning to invest, you're learning to trade, but you've got to have a certain sense of accomplishment to be able to really earn the title of investor. And I believe that a lot of people are short of that at the moment. So let's switch to MetaStock so that I can show you how this looks. MetaStock, when you first open it, for the guys on here who already have MetaStock, you'll be familiar with this. For the new guys on here, when you first open up MetaStock, this is what it looks like. Rather unassuming at first. All the magic happens when you click on this P in the top corner called the Power Console. This window opens up, and now this is when we really start getting into the nuts and the bolts of what MetaStock can do. There are a number of tabs here on the left-hand side. Explore is where the explorers sit. Now, with the MET add-on, I've already checked these for you. Let me just get rid of that. I've checked these for you here. You've got the MET breakout explorer. This is for medium to large cap, and where it says volume over 200k, that explorer will scan for stocks from medium to large cap market. So ultimately I use that for the US market. And then we've got the breakout scanner for volume over 50k. So that's for small to medium cap market. So for the Indian market, we have members in India, for example. Here in the UK, you will use the medium to low cap scanner. And then we've got scanners that scan for short positions as well. That's for medium to large cap and small to medium cap market. So we have a scanner that scans for long opportunities in a bull market, which is what we're in right now, for any market in the world. And we've got scanners to scan for shorting opportunities from any market in the world. In terms of the actual markets that I scan, if I just close this and go down to the public data here, you can see right here, NASDAQ, New York Stock Exchange, Amex. Look at the amount of stocks. This is just US stocks alone, something like 11,000 stocks just in the US market alone. It's a phenomenal amount of stocks. And if you look at my portfolio from earlier, there's only something like 20-25 stocks in the portfolio. And that's where your job as an investor comes in. You've got to be able to find these stocks, these handful of stocks that will return you on average 30% a year. You don't want to be jumping online and seeing what everyone's talking about. Okay, Michael Burry has closed his hedge fund. The world is coming to an end. Let me go to cash, which you probably already have been for the last 2 years. You know, it just makes no sense. If I'm making 30% a year, if my portfolio is up 220% in the last 2.5 years, and you're in cash or you're underperforming, something is wrong. Something has to change. And this is where, as I said at the very beginning, if you do not start with the process of finding the right stocks and assets in the first place, your portfolio will always struggle, regardless how good you could be in terms of the potential of being an investor. If you don't have the right stocks, it's always going to be difficult. So this is where we start. We start with the explorers. The explorers that I'm using right now are the breakout explorers for long, and a long for medium to large cap, and long for small to medium cap markets. That is all I have been doing for the last 2 to 3 years. Occasionally I use my pullback scanner, that is for the MAT, that's for the next add-on. There's pullback scanners as well, but in the market that we're in, it's definitely a breakout market given how quickly stocks have been moving. Okay, so once we've gone through that, once we've gone through the scanning process, once we have scanned the market, the next goal is to compound and maximize profit from winning stocks and assets. So how do we do that? Well, we use bespoke charting tools to take the 50 to 500 assets that the explorers, the scanners, have given us, and we're looking for the 10 to 20 best stocks and assets that make it into our portfolio. And we do this using manual analysis. We use bespoke charting tools and a blueprint checklist system, again within the MET, to help find the best 10 to 20 assets. Now, this can take anywhere from 1 to 3 hours on a daily basis. You don't need to do it on a daily basis. At the very least, you need to do it at the weekend. So you can imagine at the weekend, you've got 2 days to find some time, settle down, find an hour to scan the market, build your watch list, and then prepare for the week ahead, which is what I do. But I also like to scan the market every single day because it's a service that we provide for our members, but also because there are opportunities appearing on a daily basis. And I want to make sure that I get them into my fund and into my personal portfolio. But on average, you want to be doing this once a week. Sorry, at the very least, you want to be doing this once a week at the weekend. Now, what does the checklist system? I said that we use bespoke charting tools and a blueprint checklist system. What does this look like? Well, when we open up MetaStock in a second, we'll be presented with a 4-screen setup like this. In the top left is the monthly, where we have 6 indicators. In the top right is the weekly time frame, where we have 4 indicators. In the bottom left is the daily, where we have 6 indicators. So you can see that we have 16 indicators that each stock or asset is referenced against, and if it meets that, we then put it on the watch list or in the portfolio. If it doesn't meet that, we discard it. It's as straightforward as that. And by having this checklist system, we can go through a list of 100 to 150, 200 stocks literally in 15 minutes to 30 minutes, because the monthly time frame and the weekly time frame tell you a lot of information that you can then easily dismiss those assets. If the asset meets our criteria, the daily in the bottom right is our execution time frame. That's where you'll find the entry points, the stop losses, the trailing stop losses, all the information that we need to transfer into our broker account. This is what the checklist system looks like. This is our edge. Now, here's a point to note about our edge, guys. The checklist defines our edge. An edge defines high probability stocks and assets. If you cannot define your edge, you don't have one. If you don't have an edge, you will get eaten by someone who does, right? I'm going to say that one more time, guys. If you cannot define your edge, you don't have one. So if you're underperforming, if you're losing money, you don't have an edge. And if you don't have an edge, you will get eaten by someone who does. Remember, this is a zero-sum game. If you take the broker account, it's a zero-sum game. So if you're underperforming, someone out there isn't. And that is the person that is cleaning up. We have to switch which side of the edge that we are on. The MET is our edge, and it must be yours too. So let's switch to MetaStock. Now, once we have completed the explorers, what I then do is I then save those lists. So for example, if you have a look here, you can see these are all the lists that I have been saving for this month for India. These are the lists that I've been saving for the UK market. Here are the lists that I've been saving for the US market. So when the explorers have completed their job, it will pump out a list. I will then save that list, and then I can manually go through that list. So if I open up, let's go to the US market most recently, you can see that 112 stocks were picked up on the 11th, on the 12th of November. A sizable list. What I then do is I select the first one and I open it up. When I open it up, it will open up into this 4-screen setup that I have just described. Monthly in the top left, weekly in the top right, daily in the bottom left, and daily in the bottom right. Excuse me. So this is the S&P 500 that we're looking at the moment, but I'm going to switch to Amphenol because Amphenol is one of those stocks that I shared earlier, and I'm going to show you precisely why it ended up in my portfolio. We'll start with the monthly time frame. So I always like to start with the monthly time frame and then move down to the weekly and then the daily. So I start with the bigger picture and then move down to the weekly and the daily to find market alignment and then take a position. So first of all, we've got key levels of support and resistance all on the monthly time frame. A mistake that people often make is use them on lower time frames, 1 hour time frame, 5-minute time frame, where there's just too much noise and a lot of weaker levels. For me, key levels of support and resistance are on the monthly, the weekly, and the daily. So these are all marked for you. If I just compress the chart, you can see that all the support and resistance levels with the diamonds as well, these are all marked on there for you. And what's great about it is that when the next set of support and resistance levels are detected, the software will automatically mark them for you. So you don't have to spend hours wasting your time plotting these on the screen. It's all done for you. We've also got this marker here, this solid green line, which is the highest point of last year, and this red line, which is the lowest point of last year. Any asset which is trading above the highest point of last year that meets that 4PS method. So you can see phase 1 is this trend. Phase 2 is when it was between the high and the low of last year. Phase 3 is when it broke out. And phase 4 is when we started buying in. And you can see that by following that 4PS method, we got in. We started buying more positions because we've actually been holding this since 2023. But most recently, the new 4PS method, when it was confirmed, we started buying in May, and you can see how well it's performed. When we got in at May, it was around $80. It's currently trading at around $134. If we go to the weekly time frame, now what we have on the weekly time frame are weekly support and resistance levels. So you can see again all the pivot levels, all the diamonds marking the support and resistance levels. We've also got moving averages, which is the 200 and the 50 simple moving averages, key moving averages. Any asset trading above those moving averages has a bullish bias, and you can see how well the trend has performed since we entered in May. Now notice the color. We have a trend filter over the top. When the trend is bearish, it's red. When it's neutral, it's gray. So most recently around this area here, which was around the Trump tariff time, when everyone was screaming market crash, our trend filter turned gray and said apply patience. So while everyone was caught on the wrong side, we held our positions, and we've now been rewarded with more profits while everyone else is still wondering, what's going to happen next. So the trend filter has kept us in Amphenol since 2023, riding out all that fear mongering on social media around Trump tariffs. And then on the daily in the bottom left, it aligns with the weekly. The way to look at this is that the weekly is big sister, the daily is little sister. Whatever big sister is doing, we want little sister to be following. So we've got that trend filter. Look how well it's been supported by the 20 and the 50 simple moving averages, the blue and the brown line. the 200 simple moving average all the way down here. Even in this correction of this week, it's still within the 20 and the 50 simple moving averages. So we know precisely the levels and the markers that price will come towards and bounce, and it's been doing that repeatedly since May. So you can see why Amphenol, first of all, was picked out by our Explorer, B, when we did our analysis, how it met our criteria, and then C, how it made it into the portfolio and how we managed it in the portfolio. Now, what I like about MetaStock is there's some very, very cool features. When the indicators are aligned, it comes up with a green ribbon at the bottom to say, right, the monthly is bullish, the weekly is bullish, and the daily is bullish. So when that green ribbon appears, that means we are looking at a time frame that meets our criteria. And so when we've got that bullish ribbon across all three time frames, that means we have a high probability asset that is displaying an edge. And so we can then come down to the daily in the bottom right. If I open up the daily in the bottom right, this is our strategy time frame. So first of all, what I like about, again, MetaStock with its really cool features, the bars have turned blue. The bars have turned blue because the monthly, the weekly, and the daily have all aligned. When that alignment drops, the blue colors disappear. So you can see this area here during the whole sort of Trump tariff saga, the blue ribbon disappeared. But post Trump tariffs, and when the trends kick back in again and the timeframes aligned, our bars turned blue. And so they have remained blue since May, April, May, end of April, beginning of May. When the trend started, we started getting these green diamonds. These are entry points. So each time the asset broke out, we were getting entry points. So the scanners, the explorers, they are scanning for these entry points across 20,000 assets alongside all the other criteria that goes into the scanner. One of the criteria the scanner, the explorer, is looking for is which of these assets is producing entry points. So if you think about Amphenol, if you bought Amphenol in May on this first entry point, then all of these additional entry points are compounding opportunities. So you can imagine how many times you could have bought Amphenol. Just having that one stock and repeatedly buying it will have you make better returns than buying 5 different, 6 different stocks. Now, with each green diamond, if you look here, the most recent green diamond, there is a blue line just above it. Let me just expand this. There's a green line here. That's the entry point. The red line here, that's your stop loss. This line here is your target level or your compound level. So the software is producing these markers for you, these price levels for you, so that you can transfer them into your broker account. Now, there is complete transparency in the way that this is created. Why is the entry there? Why is the stop loss there? What is the logic? What is the algorithms behind it? It is all fully explained in a very detailed manual that MetaStock and us have put together. In addition to that, what I love about MetaStock is the inbuilt commentary. Each time frame has its own commentary. So if you click on view and go to expert commentary, you will get this window pop up, and it will give you a breakdown of what is happening on that time frame. So on the monthly time frame, this is what we see. If I go to the weekly time frame, it will give me the commentary for the weekly time frame. So if we go to the daily in the bottom right, and if I open up the commentary window, it will tell you why the bars are blue. It will tell you why the entry is there, the stop loss is there, the compound levels are there. Also, we have the exit management clearly displayed on the chart. So you see this red line across the bottom. This is our trailing stop loss. Now notice how much distance there is between price action and the trailing stop loss. And that is because a trend is a function of time. The reason why people get stopped out of positions regularly is because their stop losses are too tight. Why are their stop losses tight? Because they're focusing on money, they're focusing on greed, they're focusing on over leverage, rather than focusing on a process that allows winning positions to run. And let me tell you this, guys, the quickest way to wealth is compounding. It's not being in and out of the market, making short-term decisions. That is a one-way trip to disaster. The quickest way to wealth is holding and compounding positions, because once you get on the exponential curve, there is no looking back. So everything you need is built into this system. You've got the explorers that go from 20 that scan through 20,000 assets and give you a list of 100 to 200. You then save that list and you go through each stock doing this 4-screen manual analysis. A list of 100 to 200, once you get into the rhythm and the routine of what you're looking for, will literally take you minutes. And by doing that process, you will be continuously finding the best stocks. When you find the best stocks, you then go to the daily in the bottom right, where you find your entry points, your stop losses, your compound levels, your trailing stop losses, and you can then transfer those into your broker account. Okay. In short, the MET, the market edge technology, finds trending stocks that are outperforming the S&P 500. I cannot stress this enough. S&P's moved up 92%. All of these stocks that I've just shared with you and that have all gone through the same process have all moved up further and quicker than the S&P 500. These are stocks outperforming the index. This is the 3-step blueprint. First, you want to use first pinpoint when to invest for maximum ROI. That's market conditions. This is where the S&P 500 comes in. If the S&P 500 is bullish, the market overall is bullish. So use the S&P as a guide for what the market is doing, but don't invest in it. Invest in stocks that are performing better than the index. So that's where step 2 comes in. Identify top stocks and assets to invest in for maximum ROI. So that's where the explorers and the analysis comes in. And then clarity on how to invest for maximum ROI. That's where the trend following strategy comes in. So you've got the blue bars telling you that the trend is in play. You've got the diamonds that are giving you entry points. You've got entry points, stop losses, compound levels, trailing stop losses, all displayed on the screen so that you have a objective approach to the market rather than trying to second guess yourself all the time. And I think that's something that is really, really important to stress here, guys. People often fail because they are bringing emotions and subjectivity. You want to remove that and you want a strategic, mechanical, objective approach. And the MET is designed to do that. This is what a day trader's portfolio looks like. I mean, even just looking at this image will probably send you into a different place. It's a lot going on. And ultimately, this is a day trader's portfolio. This is what an investor's portfolio looks like, where you cut out of the losers, maybe some break evens, which is the orange one, but ultimately you just hold and you compound the winners. You can see how it's a much calmer approach, much clearer, and a much slower approach initially. But when that compound growth process kicks in, it's just, as I said, it's the quickest way to riches. Day traders focus on winning versus losing. We focus on profit versus loss. I think there's a fundamental shift in mindset. Day traders focus on winning versus losing, which is why people lose so much money. Trend followers and investors, we focus on profit versus loss. So this should now make a lot more sense to you in terms of how we are achieving these numbers. This will make a lot more sense to you in terms of how we're holding and we're compounding positions. These numbers will make a lot more sense to you in terms of how we're holding positions, holding stocks that are outperforming the index. And of course, these goals should now all be really just what I say. They're ultimately goals with a deadline. When you're dealing with a process that can deliver significant numbers, then all of these goals that just remain a vision in your head ultimately become a goal with a deadline. So this is your edge powered by the MET. Ultimately, you're using the explorers to scan for the best performing stocks from the strongest sectors. We then use the 4-screen setup, which is the tools, the expert advisors, and the commentary to shortlist the very best stocks and assets, which I do as a tier A, tier B system. Tier B is watch list. Tier A are the ones that make it into my portfolio. Create a risk management framework. Typically, I don't risk more than 2% per position. So once you've done your analysis and you find the best stocks and assets and the bars start turning blue, Use the daily bottom right to place positions in your broker account. Place a set of positions, for example, 10 stocks. Cut out of losers with a small loss. Strategically hold and compound winners only. Never add to losing positions, never. Only add to winning positions. Use the trading stop loss in the daily bottom right to manage positions. Take profits and rebalance every 12 to 18 months. Repeat the process for life. Train your loved ones to carry on your good work, a legacy to be proud of. And this is what I mean, guys. Financial illiteracy is a pandemic that gets no media attention. It's down to us to learn how to invest with the technology that is available today, get it working for us, and then bring your kids and your loved ones in and say, listen, this is what I have achieved. It's now down to you to carry on the good work. And this is how I did it. So with the Market Edge technology, you get 4 explorations, which I showed you guys, the breakout, the 2 breakout scanners for long, 4 breakout scanners to go long and to go short for all market cap markets. 16 expert advisors, 11 bespoke indicators, that 1 4-screen template where you can do your analysis, a detailed manual explaining everything. That the manual in itself, the amount of work it took to create that is unbelievable, but it explains everything. This isn't a black box system. This is a system that will train you to be a very accomplished investor. And then a support structure that comes from both us here at Sublime Trading and MetaStock. And one of the aspects of MetaStock that I love and why we have such a good relationship is that the support from MetaStock is second to none. You will have a white glove service all the way through, and that really mimics our ethos that we have here at Sublime Trading. So Market Edge technology, guys, it's 1497 as a one-time offer. That's $1,497 one-time offer. We have some wonderful bonuses that we are going to throw in. One-to-one onboarding call with myself, a private community to discuss daily setups, which is live every day, and a live bootcamp recording and future live training. So at the moment, there is a live training which I did a few months ago. The recording of that is in your members area, so you will be able to access that, and it will give you a complete run through of how to use the MET. Any future training sessions that we do, you will be able to attend at no extra cost. So the bonuses, they total $3,100. Of course, you don't pay for those. And as for the price of the Market Edge technology, we have a webinar offer of $997. Guys, that's one-time offer. There are, of course, monthly subscriptions for MetaStock itself, which Jeff and the sales team, wonderful sales team, will take you through. But as for the MET add-on, it's a one-time offer of $997. And that's me for today. So Jeff, over to you. Any questions?
Yes, sir. We have a couple. Let's see. Juan wanted to know, how long on average does it take to maintain the positions on selected stocks?
12 to 18 months.
Okay. Michael says, outstanding presentation, wonderful information. Thank you.
Brilliant. Appreciate the feedback.
Lacine says, hi from Algeria. Excited to hear it from you. That's it for in terms of the questions. Tavanda and Maverick say hi. So there we go.
Excellent.
Let's talk a little bit about how to get this. Thank you so much, Zaheer. I'll just Sublime. Let me go ahead and make me the presenter real quick. And I'll just talk a little bit about the offer and how to get it. Thank you so much.
You're welcome. Thanks for having me.
All right, for sure. All right. So Zaheer did a really good job of kind of outlining the offer, what's included in the add-on. I love the 4-on-1 setup. I love the simplicity that he kind of brings to everything as he kind of pushes it in. Everything's put together in a very, very, he talked about the boot camp even, all of that is kind of put together. A couple of ways you can kind of pick this up, the offer that we're doing. It's $997, as Zaheer said. That'll include a money back guarantee, so you can try it out. If you like it, you're going to like it, you can keep it. If you don't like it, you can return it, full refund, no questions asked. If you haven't tried MetaStock, MetaStock again is the highest rated software in its price category. It's been rated that by the readers of Stocks and Commodities magazine for 32 years in a row. Will include a free real-time subscription with the free real-time news data with it. You'll get the opening house, you'll get the money back guarantee. A couple ways you can do that. You can give us a call. You can go online. You can go to metastock.com/conf-promo, or you can actually go here if you want. metastock.com/conf-promo. You can give us a call, 800-882-3040. You can also chat live with us if you have any questions, if you want help getting set up, metastock.com/salespchat. All of those are great ways to go ahead and get it set up. Zaheer did a really good job of showing this off and kind of giving you an idea of how well it works. We're going to give it to you at a discount, $500 off, $997. We're going to give you a money back guarantee. We'll throw in a subscription to MetaStock and all the training you need to go ahead and get that started as well. Give it a go. metastock.com/conf-promo, 800-882-3040, or metastock.com/salespchat. Greg, thank you for putting all of those links in the chat. Juan, thanks for the question. I appreciate it. Okay, as we move on to the next speaker, we'll talk about Stocks and Commodities magazine. I want to say thanks to Stocks and Commodities magazine for supporting the conferences and the summits and the events that we do month after month after month every year for like 15 years or so. They're awesome. Very, very much appreciated. They have been publishing the magazine since 1982. They've done 17,000 articles. Subscriptions for it, the magazine, are about $97 a year last time I checked. That'll include a physical magazine if you're here in the US, and a PDF of the magazine if you're overseas. It'll also include online searchable access to all 17,000 articles that they've released over the last, well, since 1982. So there you go. You can find out more about them at traders.com. Big thank you to Stocks and Commodities magazine for sponsoring our event and all of the events that we do. Really appreciate the work that they've done. So as we get ready today, Greg is going to join us again. Welcome back, Greg. Hope you had a good couple of days off.
I did. Thank you very much.
I'm going to immediately put you to work. Is that all right?
Sure, let's go.
All right. Not that you haven't been working yet, but you know, we got
busy. A lot going on.
Yeah, we got important work
going on.
Let's give away this book.
Let's do it.
Candlestick Profits, Eliminating Motions. You want to talk a little bit about who Steve Bigelow was? Or should I?
Oh, I'm sorry, I didn't quite hear the question. Yeah, no, Steve Bigelow was a fantastic, legendary, actually, if I may say, trader who was a partner of MetaStock for many, many years and ran a trading room that is beloved by thousands. We have carried on that torch as best we can since Steve's untimely passing a few years ago. And Jeff has had that up at the MetaStock Traders Forum. I'm sorry, I didn't mean to make a description of our beloved person a pitch for your. Anyway, Steve, famous, legendary presenter and champion of candlesticks patterns.
Yeah, he taught me a lot.
Did I do okay?
Yeah, he's what I.
And to be sure, Jeff had a much more personal relationship with Steve than I did, so he's really a better person to discuss who he was and his
When
legacy.
we get away the next book, I'll do a description of Steve. Steve was a great friend of MetaStock, great partner of MetaStock. One of the things that we did that I'm very proud of is we put all of his patterns into MetaStock as well. Big love to Steve. Steve was awesome. We're going to give away the Eliminating Emotion books, or a copy of them. And what I need from you, Greg, to decide who that is just a random number, 2 to 6399.
All right, and that number, according to Google Random Number Generator, is 2,272. 2272.
I just had a memory. That's Nick M in the USA. Has an email address. Nick M. If that sounds like you, you probably just won a book. I remember when we used to initially start doing the draws, I'd have these massive spreadsheets and I'd just scroll down thousands and thousands and thousands of columns until I found the right one. So in any case, Greg, thank you for the assist. I appreciate it. Congratulations, Nick. Well, let's go ahead and move on. Thanks, Greg. See you again in an hour. Our next presenter, I love his 3S method. He's going to talk a little bit about it. It's called the 3S code method. A very, very classic technical pattern that he's developed and designed that looks great and works great in MetaStock. And so what we're going to have him do is talk a little bit about it, teach you the pattern, show you how it works, all that kind of good stuff. Silas, let's get you started.
Morning, sir. How are you? Can you hear me okay?
I can hear you great. You sound like an angel. Let me make you the presenter.
But your birthday must be coming up.
Maverick in the chat says Steve Bigelow was the best. His methods were very simple but effective. We love Steve. Anyway.
All right. Can you guys see my screen?
Yes, sir.
All right. You just let me know whenever we're ready to go, and we'll go ahead and kick this thing off.
I'm just going to get out of the way. It's your turn. Go.
All right. Awesome. Thanks so much, Mr. Gibby and the MetaStock team. Always a pleasure to be invited back to these events. I know it's been a jam-packed week full of education, so appreciate everybody sticking around here till the end on this lovely Friday. Am I able to see the questions by chance, just in case we have any questions that pop up?
You can. Let me make you the organizer. The only thing is when I make you the organizer, let me kick you out at the end. That way you don't turn off the thing on accident. Are you still there, Silas?
Yeah. Can you hear me?
Yeah, but for some reason your screen share went away when I made you the organizer.
All right.
There we go.
Back up and now.
Yep. And you should be able to see any of the questions now that come in.
Okay. And you guys
And
see this?
yeah. And when you're done, I will kick you out of the room, just to be on the safe side.
All right. I won't take it personally. All right, guys. Let's go ahead and get this thing rolling. Welcome again. Thanks to the MetaStock team for having me on. I really do appreciate it. I love coming to these events. And Jeffrey has spilled the beans a little bit about what we're going to be talking about, and hopefully, what I'm here to do today is show you an actionable strategy, a real-world strategy that you can literally start using today if you wish. Take it in next week. I'm going to teach you all the rules and something special how you can actually automate the process. So my name is Silas Peters from T2 Markets, and you are in the right place today. You're sick of losing money, tired of confusing strategies, and just want something real, something that works. And then today, by the end of this workshop, you'll see a way that you can start trading with confidence, with a clear set of mechanical rules and high probability setups. And all that means is just no guesswork. Now, we must quickly cover the risk disclaimer. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading, securities, options, futures, Forex, crypto. Only risk capital should be used to trade. So it's very important that you know the risk involved in trading. Now, let's talk about what you're going to learn today. Why price action patterns be indicators, the 3-point setup explained, step-by-step entry and exit rules, real trade examples. And my goal for you is this, that I'm going to prove to you that this works in any market, any time frame. But this is the real benefit of listening to today's workshop, is that how you can start applying this today without chasing hot stock tips, without needing dozens and dozens of indicators cluttering your charts. And you're going to leave here knowing the exact rules for entry, exit, and targets. And this is what a little bit of a glimpse of what this looks like for you today. We're going to show you how to identify these trades basically on autopilot, like this one in General Electric, this one here in Barnes Group, ticker is B, this one in Bank of America, this one on a 4-hour chart of gold futures. $1,800 move here, followed by a $900 move to the downside, simply following the ebbs and flows of basic market movement. 5-minute chart of the E-mini S&P, 8 points, that's $400. 2.5 points, 6 points, 4 points, over $1,000 a contract in a single day. Hopefully, you're starting to see the potential here before we even get into the rules and the methodology. So you are in the right place if you want simplicity. If you want simplicity and consistency, you're in the right place if you've just tested dozens of indicators, subscription services, been frustrated by emotion-driven trades. You just want something simple and mechanical. Okay, simple and mechanical is the name of the game. Now, if you are a retail trader in here, even a pro who's fed up with overcomplicated systems and the endless noise of indicators, then pay close attention, because what I'm about to show you is different. Yep.
Hey, Silas, we have some pretty choppy audio from you. I was wondering if we could check to see if you're on the right mic right now. Are you on a microphone or a headset?
I see what's going on here. It didn't pick up the right test. Didn't pick up the right mic. Can you hear me now?
Yeah. Usually an easy way to fix it is just to plug it back in and go to webinar. I'll say, hey, you plugged in a new mic, and then you just say use a new one.
Test.
Give me just a few more seconds. Hello? Oh, now it got worse. I can't even hear.
Now, is this better?
Okay, yeah. Just tell me a little bit of a joke. Or talk to me a little bit more, Silas.
Test 1, test 2.
Oh, that is much better. Okay.
Okay.
I'll get out of the way.
Then I screwed something up where I adjusted the speakers. I couldn't hear you. I'm sorry about that. How are we now, guys?
Perfect. Sounds good to me.
Okay. Sorry about that. Chris, Oscar, are we all good, guys? The gentleman from Algeria, we good? All right. Let's get back on track. So thank you for that. Sorry about that. So what I'm going to share, getting back on track here, is that you're going to find something here that you can actually rely on and no guessing. Now, before we get started, again, officially, we'll get going, a little background on me. I'm the founder of T2 Markets. I'm a co-founder partner of Blue Marl Advisors. I'm an entrepreneur, risk taker, full-time trader. I'm a speaker, author, educator. Started my career at the Chicago Board of Trade, worked for a private family office. I'm also a husband. I'm a father to 2 beautiful girls, and I'm a mentor to thousands. And really, this all right here is what makes everything worth it. Now, I've spent years in the trenches, trading stocks, options, futures. I've really tried everything, probably a lot like you, indicators that claim to predict the market, flashy newsletters, elaborate strategies that cost me more in frustration than they ever paid off. I've taken losses, right? I've found what works, though, and now I build tools so you don't have to bleed your account dry trying to experiment. Now, what I want to kind of address is this, why most traders fail. My struggle initially, probably exactly what many of you here are going through or have at some point, just overcomplicating systems, chasing lagging indicators, emotional decision making, and just lacking a repeatable edge. You have to have an edge in these markets if you're going to survive. Now, before I discovered this pattern, I was right where you are. My charts look like spaghetti, indicators everywhere, chasing hot stock tips, and just really overcomplicating the process, whether it was, trying out all kinds of Greeks, robot trading or EAs, black box systems, complex strategies, the drill of, hey, we need more damn indicators on our chart. So that's the ticket to success. And, it just leads to emotional guessing, hesitation, entering too late, exiting too early, risking more than I should. And I got burned, again and again. I lost money, lost confidence. I felt trapped in a cycle of hoping and second guessing. Now, does that resonate with anybody in here? Let me just see. I want to see if you guys A can hear me a little bit better, and if this is kind of striking a chord with you. Yeah, I mean, of course it does. And so all this kind of led me to something I discovered very powerful. The 3-point reversal pattern we're going to be discussing shortly. It's been around forever, but most traders ignore it or overcomplicate it. And I thought, what if you could build something completely mechanical around it? Exact rules, precise targets. It just takes the discretion out, which means no emotional guessing. You start with that, and then you back it up with tests. Hell, I was already doing this manually, but I knew so I knew the power of it, and that it already worked. I've already gave you the hint. It consists of only 3 steps. Those 3 steps were spotting a potential reversal structure, defining the exact entry, exit, and target, and then trade only when the rules align. So let me ask you in here, do you feel comfortable following 3 steps? Can you follow 3 steps? And if you do these, your trading becomes cleaner. And then if you skip them, you're back to the noise. And because we are trading price action, we have a strategy that produces repeatable setups, works across all markets, and they're easy to spot in real time. Okay, we're easy to spot in real time, just like these charts here. And this may not mean a hill of beans to you right now. This chart of the SPY, this chart again of the SPY, but trust me, they will. These are going to become your favorite looking charts. How do I know? Because these are clean, clear charts using nothing but price action. Like this in GE, spotting a trade here, spotting a trade here, having those rules in place and letting the strategy do its thing. Okay, again in Barnes, whether it's Bank of America, whether it's gold futures, whether it's the E-mini S&P, or whether it's the Australian dollar versus the Japanese yen. Okay, all 3 of these hitting our mechanical entry rules, and hitting target 1, target 2, target 1, target 2, target 1, target 2. Now, with all of these examples I just showed you, can it really be that simple? How smooth, how clean were those setups I just shared with you? Simplicity beats complexity nearly every single time. So let's get to the rules of this 3-point strategy. Now, as alluded to earlier, this is called the 1-2-3 strategy, and it's a widely used trading trick that helps traders identify trend reversals and continuation patterns to trade with high accuracy. Now, whether you are a day trader or a swing trader or a position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets in no time. So step 1, we're identifying the trend shift. Step 2, we're spotting the pullback. And then step 3 is we're confirming the breakout with a simple trigger method. So let's start with point 1. Okay, this is the baseline starting point for our pattern. Step 1 is about spotting the reversal. Okay, so point 1, we're looking for a trend peak or bottom, which is the highest point in an uptrend or the lowest low in a downtrend within the current price environment. Okay, so let me show you the example. So here we have price making higher highs. With each of these higher highs, that gives us a new number 1 point. Okay, and a downtrend, every time we're making these lower lows and lower lows, each lower low gives us a new number 1 as our baseline starting point. Now we move, and now we're looking for point 2. That's the retracement. It's the first retracement from point 1, which is forming a higher high in a downtrend or a lower low in an uptrend. So let me show you the example of this. Here we are in point 2. We have our highest high, which we know is our number 1. Now we get the retracement. We get the retracement off of these higher highs. That gives us our number 2. Okay, in a downtrend, we have our lowest low. We have the retracement higher. That gives us our number 2 point. Okay, then we look for number 3, point 3. As the name implies, it's our third leg. It's either the second low point, higher low for a long or bullish formation, or the second high point or lower high for a bearish formation. So here in an uptrend, we have our number 1 point, we have our number 2 point, and then we have a lower high, right? This high is lower than that high. That's our number 3. That's our number 3 pattern. In that downtrend, we have our 1, we have our 2. Here's that retracement, but it is a higher low. That's our number 3, okay? It's higher than our number 1 starting point. So now what? Well, that's your 3-point profit pattern. But what are we missing here? What are we missing? Yeah, I mean, what the other important ingredients of the recipe? How do we enter? Anyone want to take a wild guess on where or how we enter? We simply wait for a break above or below the number 2 point. So in our bullish example, it means we're looking to go long, expecting that market to go higher. We're simply waiting for the market to do what? Yeah, break above the high of the number 2 point. We're looking to break above the number high of the 2 point. So as we can see here, price traded through and above the number 2 point. So do we all agree on that entry concept? Yeah, pretty simple, pretty mechanical. Now flipping to the short side, or bearish, we're looking to sell the market. We're expecting that market to go lower. So what are we looking for? We're waiting for it to trade through the number 2 point. Here's our 1, here's our 2, here's our 3. We're waiting for the market to trade down and through the number 2 point. Okay, and what exactly do we get on that next bar? We get a break below the number 2. So who is following me up to this point? Do we all agree on that? Do we see that this is damn near, if not 100% mechanical? We're all seeing the same thing, which is rules-based. It makes it rules-based. It makes it mechanical. So once the price breaks through point 2, after forming our 3, that is our trade entry. Okay, there we go. That's our 3-point pattern. Not very difficult. Pretty straightforward, right? Now, what about stop losses? What about stop losses? Because every trade, as we know, needs a stop loss to manage risk. What about profit targets? Every trade also needs to come with a profit target or a limit order to take profits. And then we also have to have or employ a trade management plan, okay? Once we are actually in the trade, what do? All great questions, extremely important. We must always use a stop loss to protect our capital, and we must always know where we're looking to take profit, as this is why we are in the market in the first place. So let's first cover stop losses. This simply means that sometimes Mr. Market does not do what we want it to do and goes in the opposite direction. That's okay. We're not going to be right 100% of the time. So what we do is we place what's called a stop order in the market to protect our capital in case we're wrong. So for a bullish setup, that stop goes below the number 1 point. Your stop or risk are going to be below the number 1 point, which is that low. Here's our stop level there in red, okay? For a bearish setup, it's the same thing, just flipped upside down. It's going to be above the number 1 point, okay? Above the number 1 point. So here's our 1, 2, 3 bearish setup. Our stop loss or risk is going to be above the number 1 point. So let's go back and kind of review that entry criteria one more time. Completing the strategy, placing our stop orders. Why? To manage risk and protect ourselves against adverse price movements in case the market trades lower and decides to turn around and go back higher. Now let's cover the fun part, which is profit taking. As we know, we must always use a stop loss to protect our capital. We also need to know where we should look to take profit, as this is why we are in the market to make money, okay? The bullish setup targets for a bullish setup are the distance between the number 1 and number 2 point measured up. So here we have a 1, 2, 3 pattern. What we're going to do is measure the distance between the high of the 2 down to the low of the 1. That's our range. In this case, it's $1.98. $1.98. So we're going to measure that range or distance, and then we're going to take that $1.98 and we're going to add it to the high of the number 2. Okay, we measure up from here to here. So we know this is $1.98. We're going to measure that, and that is our profit target. Okay, everybody with me so far? Bearish setup, same scenario, just flipped. It's the distance between the 1 and 2 point measured down. Okay, so now we're going to measure from the high of the 1 to the low of the 2, and we're going to take that range and measure it lower. In this case, it's $3.68. So from here to here, that's $3.68. We're going to measure that down from the low of the number 2. There is our target of $3.68. Okay, do you see how this is 100% a mechanical process? So let's recap. For a bullish 3-point strategy, we've got the trend established, price heading lower, price retraces higher, which gives us our number 2 point, price makes a higher low, and we're going to enter above the number 2 point for reversals. All right. For a bearish 3-point strategy, we have a trend established, price is heading higher, price retraces lower, which is our number 2, price makes a lower high, and we're going to enter below the number 2 point for reversals. All right, let's walk through some additional examples, because at the end of the day, guys, it's just about repetition. So we're going to measure, we're going to get our drawing tool out. We know this is a monthly chart. We've identified our number 1 high, our number 2 low, and our number 3. Okay, 1, 2, 3. And so what we're going to do here is measure from this high down to the number 2 low. We're going to take this, let's just call it $5. I have no idea what it is. And we're going to measure $5 lower to find our profit target. Okay, and from here to here, we're going to take that equal distance, and that gives us our target 1. Let's look at a weekly chart here. Weekly chart, same thing. This is to the downside. We have our lowest low. That's our number 1 point. We measure up. That's our number 2. We come back down. That gives us our number 3. So from here to the number 1 low, we're going to measure that up an equal distance. That's our profit target. 1, 2, 3. Here's our profit target. Daily chart. Another example on a daily chart. There is your 1, 2, 3 pattern. There's your risk. Entry, target 1, target 2. Entry, risk, target 1, target 2. Hourly chart. Again, hourly chart, doesn't matter what market it is. Here we have these setups occurring every single day, because price is fractal and price is always ebbing and flowing. Okay, so here this is an hourly chart of the E-mini S&P 500. Okay, there's our 1, 2, 3 pattern breakout, target 1, target 2. Here's our 1, 2, 3 pattern breakout, target 1, 40 points or $2,100 per contract. Another example here on an hourly chart. Here's another example on a 1-minute chart. Works all the way down to the lowest time frames. I know people doing this on 15-second charts. So do you see how we only trade when the rules are met? It means no forcing trades. There's no guessing. There's no fudging criteria, because you feel like the market should move up or you feel like the market should move down. We're simply waiting for our 3-step criteria to be met. And so this is what happens. This is what separates hobby traders, emotional ones, second guessing, chart hopping, chasing entries, to those that follow a systematic process, a mechanical plan. It's either there or it's not. Just like this here in crude oil, another real world trade example with finding a number 1, finding a number 2, finding a number 3 point. You get short on breaks or closes below the number 2. We have new highs. New highs gives us a number 1 point, a number 2, a number 3. We short on breaks or closes below the number 2 with mechanical exit rules for you. Let's look at another one. Gold. We have a 1, we have a 2, we have a 3. If 1,000 traders are looking at the same chart, 999 should be seeing the same thing. There's always going to be one person that has to, well, I need to add 15 other indicators. I need to try and reverse engineer this and make it rocket surgery. We don't need any of that. The rules are the rules. This is gold futures. This is a $10,000 per contract move. Now, we've got folks trading full-size gold futures, folks trading mini gold, micro gold, GLD options. Anybody trade GLD options? Buy put spreads, sell bear call spreads. I like to sell credit spreads with these setups, so I'm going to come out here and sell bear calls above the number 1 high point. Okay, that way, if the market does decide to just dance around and flounder, I'm still collecting premium from time decay. Delta Airlines. Okay, Delta Airlines, 1, 2, 3 pattern, getting long. 1, 2, 3 pattern, getting long, target 1, target 2, and then we're just flipping. You know, long, 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 short. This is something that, you know, I can't make up. Cardinal Health, again, 1, 2, 3 pattern, 1, 2, 3 pattern longs, 1, 2, 3 pattern shorts. Long, long, you're bullish, you're short. Can you buy calls, call spreads, sellable puts? Yes, yes, and yes. Daily chart of Google, okay? Daily chart of Google. You identify the 1, 2, 3 pattern. You know exactly in advance where you're looking to get short. You know in advance, so you basically prep your entire trading plan. Everyone else out there is asking and struggling. Where am I going to get in? What the heck am I going to do once I am in the trade? Where am I putting my risk? Where am I putting my targets? Completely guessing. You know the exact rules and exactly what your plan is before you even press the button. All right, so let's talk about what you've learned so far. Very simple. Step 1, step 2, step 3 pattern. Have I fulfilled my promise to you on that? Have you learned a simple, mechanical, repeatable strategy? Does everyone here up to this point feel confident in what I've shown you? Something that you could say, yeah, you know what? I can follow this. This is something I can do. 1, spot the pattern. The market is heading south. Market is heading south. We're not momentum breakout chasers. We're waiting for that last low to form to start our number 1 count. We get that retracement. We get that retracement. We get that pull back to get our 1, 2, 3. This retracement is sucking in new breakout momentum chasers, and we're looking to take that long on the breakout of the number 2. we immediately, by seeing this pattern in advance, we have a heads up. We know exactly where our entry, where our stop, where our losses are, all of the criteria we need to place our orders to enter the market. And what are we going to do? This is a daily chart, so we already have this pattern. We got 1 day, 2 days. Well, hell, we already know that we're looking to get long. We know that once we do get long, if we do decide to get long, our stop or risk is going down here. We already know that the target is the distance between the low of the 1 measured to the high of the 2, and then we're going to take that to the upside. And you can do all of this through what's called an OSO order, order sends order. That means we put a stop or a limit order in. If and when we get executed, our targets go in and our stops go in. So we're protected, okay? And then we just execute. You just put the trade on. Market breaks above the number 2. So this one, we had a 1, 2, 3 pattern. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, I don't know, 10, 12 days. We finally break above the number 2 point. That confirms the entry. So now here is what we can do. If we're bullish, buy stock, buy futures, whatever market it is we're trading. We buy call options, outrights, debit spreads. We can sell put credit spreads. Sell put credit spreads if we're bullish. So here is the trade. Here's the trade, $32 on 100 shares. Here's our trade, and we let the trade work in its mechanical fashion. There's no fudging criteria because you feel like the market should move. What if we're bearish? If we're bearish, well, we know we can sell the stock, sell futures, whatever it is we're trading, buy put debit outrights, buy put debit spreads, or we can sell bear call options, okay? Now you're probably wondering, how do I do all this by myself? How do I find these patterns on my own? Well, at this point, you know all of the rules. You know what it takes. You see the steps, but you might be thinking, great, I've got to go learn charts, learn multiple indicators, spend hours back testing, maybe buy expensive tools. No, that's what this strategy is built to eliminate. You get a system that does pattern spotting, the plotting of entries, exits, targets, daily setups across multiple markets and time frames, so you can start trading with clarity. Now, what if you had a tool that locates these patterns for you? What if it could automatically plot your entries and exits for you? What if it scanned multiple markets and time frames for you? Type a 7 in the chat if that would help you find high probability trade ideas on a daily basis. Let me see in the chat. Good. Well, that's exactly what we did, is we built a tool that does just that. Now, do you remember our examples from earlier? We built a tool that replaces the need to hunt and manually draw the pattern. Okay, and we can sit there and spend, hours, looking for, identifying, just, scrolling through hundreds or thousands of tickers, spotting a 1, a 2, a 3 pattern, measuring, getting the old calculadora out, measuring from the high to low, and then measuring back up. Or in this case, measuring from the high to low and back down. We spot the pattern that was forming. We had to map out the 1, 2, 3 points. And then lastly, we had to get the calculations and define the range for our targets. Pretty crazy. It takes a lot of time to do that. But with the powers of technology, all of the heavy lifting is done for you. And it looks absolutely beautiful on MetaStock. And it also sends positive vibes because once you hit a target, you get a little smiley face that says, congratulations, you've hit target, you put money in the bank. Here we have a 1, a 2, a 3 pattern. There's no white knuckled stress going on. You know exactly where you're looking to get in. Once price confirms for you, not you guessing on hunches, not you shaking a magic 8-ball. You know that you're looking to get long and take a bullish position if price trades through that number 2. And then there's no other white knuckle stress needed anymore. You're in the trade, you already know where your risk is, and you already know where your targets are. Here we are on SPY again. Here we are on SPY again. 1, 2, 3. Ooh. We're getting excited. We're getting excited because we know that we have a possible short setup in the making. 1, 2, 3. And then boom. Not only do we hit target 1, we also hit target 2. Here we are in Meta. Wide range 1, 2, 3. We're starting to get excited. 1, 2, 3. There's day 1, day 2. We know, oh, there we go. We're looking to get short on breaks or closes below the number 2. Here we are. We flip it to the other side. Remember, price is always doing pretty much one of 2 things. It's either going up or down. I guess you could say also goes sideways, but it's still, market is either going up or down, right? All we're looking to do is trade the reversal points of the natural flow of the markets we see on an everyday basis. GE. I probably wouldn't be looking at GE Aerospace unless my scanner brought this to my attention. Hey, Silas, you got a 1, 2, 3 long pattern setting up. We trigger into the trade and we hit target 1 with a nice little smiley face to send us on through the day. GLD, quit guessing about gold's going higher, gold's going lower. My $2,000 a year gold and silver newsletter is telling me, you know, to get long. Just look at the price action. The price action is telling you exactly what you should be doing. Crude futures. Crude futures. Check this one out here. 1, 2, 3. We've got plenty of time to put the trade in. We know we're looking to get long where? Breaks or closes above the number 2. Boom. Target 1 right here, already laid out for you onto the charts. Now this looks incredible, works beautifully here on MetaStock. We've also built this out for Thinkorswim. We built this out for TradeStation. We built this out on NinjaTrader 8. We built it out on TradingView, MetaTrader 4, and even Wealth Charts. Now let me tell you why what you saw here is different. You probably saw that you don't need dozens of indicators. There's no chart hopping whatsoever. And there's absolutely no second guessing. Because I know most of you here have probably tried it all. 20 indicators, 15 subscriptions, loads of strategy experts, and all they do is clutter your mind, drain you mentally and financially, and still leave you lost. This is different. You saw how simple, mechanical these rules are that you can follow. These are the benefits of this strategy. Mechanical consistency. Again, we've said this over and over again. It takes the discretion, your emotional guessing out of the framework. Mechanical consistency means you know what to do next. Stress reduction. There's no emotional trades. No emotional trades. The trade is either there or it isn't. And it gives you high probability setups each and every day. When you implement what you've learned today, that's what your new trading day looks like. It's confident. You wake up, you glance at your scanner, you see valid reversals setting up, you know exactly what entry, exits, targets are. Again, no emotional guessing, less stress, better decision making, less margin for error. Now, using this as one of my primary entry method techniques, guys, I've been using this same exact strategy for 15 plus years. There's a reason that I'm still using it today, and there's a reason that I'm sharing this strategy with you. Believe me, I would not continue to be using nor talking about this 15 plus years later if I did not use it, nor if I did not believe in it. Plain and simple. There's a reason. There's a reason why I still use this every single day. Because it's simple, it's repeatable, it's pattern based, it's not lagging, and it works across all markets and time frames. So if you trade 5-minute chart of NASDAQ, awesome. You trade a weekly chart of Alibaba, incredible. You trade a 15-second chart of Litecoin, hats off to you. Works on all markets and all time frames. And now it's automated. We built a step-by-step program for you to master this strategy. And we do it with what we call the 3S code to help you automate, to help you execute, and help you to repeat. Repeat the strategy, repeat the execution, and do it in a mechanical way. Now, our package called the 3S code includes full on-demand training. Watch it whenever you want at your speed. A full indicator and scanner suite, tools that you'll use daily, members only Telegram room, ongoing support and community. You're not alone. And we include weekly live trading sessions where we're walking you through real trades, real examples in real time. Gives you a chance to ask questions in a real live market trading environment. And we do everything here through what we call the 3S code. This is how you too can start profiting from these predictable patterns with the 3S code. Now, let me ask you this. Let's do a little bit of math. How many losing trades have you taken because your system was unclear? How many indicator subscriptions have cost you from, I don't know, $50 to $200 a month? How many hot tip newsletters, promised the moon and delivered scraps? If you added up the time, stress, mistakes, pain, you've already paid way more in losses and wasted effort than what it will cost you. If you try to build what I'm giving you here, the scanner, indicator, rules, training, live sessions, community, you spend thousands and you lose time figuring out what works. Can you put a price tag on that? The mistakes you make cost you money, stress, but here's the deal. What we've done is package, it's proven, it's ready. We're not going to charge $3,000. We're not charging $2,000. We're not even charge $1,000. Nothing close to that. With this package, you're going to get access to the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, and access to our private Telegram room. Imagine being able to spot high probability setups every day without hesitation. Imagine having mechanical clarity. You know exactly where to enter, where to exit, and where your target is. Imagine trading both swing and day or scalp without all the chaos, without worrying if that newsletter or that indicator you just saw is going to suck you in. 3S code eliminates all of this. We're also going to include a 25 top option strategy guide, my chart pattern principles guide, and all of our quick start guides and bonuses. And you get access everything you saw today for a one-time lifetime access of $397. And you get access by going to metastock.com/code, metastock.com/code. Now again, the 3S code is functional on every one of these platforms: MetaStock, Thinkorswim, TradeStation, Ninja 8, TradingView, MetaTrader 4, and Wealth Charts. You're also going to get access to our weekly strategy and scan sessions. Every Tuesday at 11 a.m. Eastern, 10 a.m. Central, we're going to go live. I'm going to cover my top setups. We're going to talk about day and swing trading using the 3S code, using options, trading minis, micros, ETFs, and more. Scanning for the best setups, giving you high top-down analysis, and answering all of your questions in a real live trading environment. Now, the indicator and scanner, again, includes a visual plot of the 1, 2, 3 top and bottom reversal areas, includes your entry, exit, stop, and target levels, all color-coded for easy reference. Customizable settings, multiple look-back periods. If you don't like red, you want hot magenta. You don't like orange, you want yellow, that's fine. You can scan for setups only, or trigger only, or both. What does that mean? That means this is a market that is in the process of setting up. This is an example of a market that has already triggered. It's already broken through the number 2. You can scan for tops, bottoms, or both. You can scan for intraday setups for you day traders out there, or swing setups. You like to swing or position trade. And you can scan for any instrument, whether you trade stocks, ETFs, futures, Forex, now even cryptos. And again, you're going to get access to our chart pattern principle trading manual and guide. This trading manual will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the markets the proper way. Bonus setups, how we use the power of seasonality to trade these patterns, and so much more. Bonus 2 is access to a 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important to me to include this so everybody can take advantage of options if they wish to do so, and do it the right way using the 3S code strategy. And you're going to get access to our private Telegram room, okay? So whether you trade stocks, ETFs, indices, futures, commodities, currencies, Forex, I am sending trade ideas, trade setups each and every day. Actionable setups that you can take. I'm giving you research, analysis, trade ideas, basically handing you fish while you're learning to fish yourself. And it's not just me having results. Students coming to me all the time. I've tried indicators before, they didn't work. But this one is mechanical, it's proven. I'm new, I don't have time. Well, this works on all time frames with complete training included. Markets might change. Will this continue to work? Well, this is based on price action. So it's timeless. So let's tackle what's probably on your mind. You know, I bought indicators, I got burned. I get it. That's why this isn't some secret sauce indicator. It's mechanical. You follow the rules, you don't guess. I'm not experienced. I don't have hours to do this. You don't need to stare at charts all day. This works across time frames, day, swing, scalp, all of our training plus live sessions. And yes, they're all recorded. All of our live sessions are recorded and put into the members area. What if the market changes? Well, that's why we use price action reversals. Because when emotions flare and mega indicators lag, price action speaks clearly. So we've opened up 20 slots here. You're going to get access to the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, access to our private Telegram room, and all of our bonuses plus much, much more. And you get started by going to metastock.com/code, or you can call 1-800-882-3040, and a happy member of the team will be glad to speak with you and answer any questions that you may have. So speaking of questions, I've got a minute or two here to take some questions before I turn it back over to Gibby and the MetaStock team. So are there any questions? What is your website for the software? Metastock.com/code, right here on the screen and also in the chat. And you can always call 800-882-3040. Jeff, are we running this on YouTube again? Are there any questions out there?
Yes, we are. Well, of course. We love our YouTube watchers. One of the questions we do have is, do you have a lot of experience with this running on international markets, particularly the National Stock Exchange of India?
I do not trade those personally, but we're trading price action, right? So, you know, as I joke, if you trade tulips or tea leaves, it will work on that fine too, because, you know, let's say that this is the S&P 500 or, you know, SPX 5, whatever, and then you've got whatever, what I don't even know what the India ETF is. It doesn't matter if you're in Canada, you're in Europe, you're in India. All we're doing is we're just trading price action, right? Price is either moving up, moving down, and you're looking for that pattern. So any Indian stocks that you want to apply this to, any Canadian stocks, European stocks, German stocks, or wherever, the price is price.
Okay. Clark wants to know if there's a TradeStation version. I know you have a wealth charts version.
We do on both.
Okay.
And we do, it is available on all 6 or 7 I think I posted, and you'll get access and instructions to that inside of the members area.
Yeah, one of the things that we will do with that too, Clark, is if you want to try out MetaStock to find out why it's been rated #1, we'll throw in a free trial too. I really personally, I'm a little bit biased, but I like the scanning, I like the expert advisor and the commentary that come along with 3S code. So might as well take the free trial with your wealth charts version and see if you like it a little bit better that way.
Yeah, the MetaStock version is so clean, so clear in the commentary piece that plots out that entry, exit targets, and all that is it just makes trading, makes life so much easier, simpler, and just less clutter, you know.
Also, thanks for the question, Clark. Appreciate it. That looks like all of the, oh, wait. What are the differences between, I would say with the MetaStock version, you do have the differences in the ability to do a lot of scanning and at the market scanning as well. Sometimes like with some of those other platforms that are out there, they're going to run scans for you, but they run them at a server time and it might be yesterday's data. You can't scan today's data if you can do scanning at all. Commentary is kind of a big thing as well. Coverage of data, that kind of stuff. There's quite a few differences just because of the differences between engines. Is the way I'd answer that question. I don't know if you have anything you want to add there, Silas.
Yeah. I mean, they all got their nuances. It's just a really a matter of preference, but you should absolutely take up the offer on the trial MetaStock. Plug this indicator in MetaStock. Again, guys, this is something that I used to do by hand for years, and check end-of-day charts in the evenings, early mornings, swing trading off this pattern. And then when I moved to situations where I could, day trade, can you imagine, you've got a 5-minute chart, S&P doing this, or a 1-minute chart of gold or crude doing this. You're trying to plot and calculate all that in real time. That's what we did, for years. But now with the power of automation, power of technology, the power of platforms like MetaStock that can do all that for you, it's just a real game changer. It makes everything efficient. We got scanners running for us that, we don't have to build a 500 stock watch list to look for these. The scanners are already plotting out, here's your bullish setups, here's your bearish setups, and then with everything you need, all the rules. So it's, the older I get, I like to make everything as mechanical as I can, and this is about as mechanical as it possibly could be. So I'll go ahead and give it back over to you. I really do appreciate the opportunity to be here. I hope everybody has a great weekend. I want to thank Jeff and the MetaStock team. Always love doing these presentations with you guys, and I want to welcome our new students, and have a great weekend, guys.
Yeah, thank you very much, Silas. Appreciate it. Thank you, everybody, for the questions, all that kind of stuff. Regardless of kind of like the platform you're using, try out the free trial for MetaStock with your purchase, but you're going to be happy with it. Like the integration that Silas has done is just on point. It's really, really good. So there you go. Thank you very much, Serge or Silas. My bad.
No problem. Thanks, guys. Have a good one.
All right. Go ahead and do this. All right, and we'll do this. And then I have some screenshots to actually show this. Let me turn on my camera. And let me also share my screen. It doesn't look like that's coming through. So all right, there we go. That should be looking good. Okay, so here's a picture of the box. Silas does such a good job of actually kind of walking everything through. I love the pattern. I've learned it as an M top or a W bottom, very, very similar to the 1, 2, 3 tops. I just love how well it's integrated. So you automatically get the labeling of the lines, you get your targets, so they're all kind of clearly displayed. It's easier to scan. It's easy to scan for. It's easy to find those opportunities, and it's also customizable. So if you want to go in and kind of customize the amount of bars that need to wait between bar 2 and 3, you can, or the difference between 1 and 2 and 3, you can. There's definitely tweaks that you can go in, and we show you that, how to kind of exactly get the pattern you want or customize it if you want in the training that's available. So it does have a full commentary. I love this about the MetaStock version. When you get into a new position, it's going to tell you exactly what your stop loss is, what your target is. It's going to talk a little bit about the strategy. It's all put together for you. So, and of course, scanning. Very, very easy to go through here. In this particular screen, we did about 527 stocks, ran through them, and found everything that had a setup. For the scans, you can do the long setup, the short setups. You can do a position that'll just show you everything that's currently in a trade. Very, very easy to go in and scan and find those opportunities. And I think that's one of the things MetaStock does best of all. So it's a one-time cost. It includes that private Telegram room, the defined parameter sheet, the chart principles guide, all of the stuff Silas talked about in the stuff that he was doing. And it's normally a $497 cost. This is kind of embarrassing. It's $397 here at the event. And you can do that. This kind of just got punched in pretty weird, and I should have checked it earlier, but you can do that at metastock.com/code, or you can give us a call, 800-882-3040, or metastock.com/sales-chat. So big thanks to Silas for jumping in here and kind of helping us. As we move on to the next presenter, which happens to be myself, I do want to say, I'll just talk a little bit about the Traders Forum. Traders Forum is, well, it's a chat room. It's a place where you can go and learn about the markets. It's a community of traders designed to help other traders. There's tons of resources up there. There's tons of great traders that kind of talk about the positions that they like. It's been a really a place where we've kind of been working on it for a few years. A lot of the people there were very, very big followers of Steve Bigelow, as kind of Greg had mentioned a little bit earlier. We talk a lot about the patterns that he traded with. We talk a lot about the setups that we like. I've learned a lot since I've kind of started kind of heading that up. And it's just a great place to go. Right now, we're at about 1,248 members, which is great. That means if you join, you might be 1,249 or 1,250. So you should go ahead and join. All that stuff that we talked about is free. You can go to thetradersforum.com, and I would recommend it. It's a great place to hang out. I'm there almost all the time, thetradersforum.com. And then Maverick had something to say about the Traders Forum. I thought I would talk a little bit about what he said. Traders Forum has over 1,200 members, includes stock trading, swing trading, long-term positions, and a little bit of forex and crypto. So also, Maverick, every time he kind of mentions a stock that he's interested in, I take a look at it to see if I might be interested as well. He has a lot of good picks up there. So Maverick, we really appreciate all that you do in the forum. You do a great job. We just love you. All right, price time. Mr. Lewis, speaking of Steve Bigelow. Clark,
yes, sir, Mr. Gibby.
As well. Theodore, thanks for the question. Lobster, thanks for your interest in the software. Let us know if you need anything. Again, with that purchase of the code, we're going to give you a 30-day money-back guarantee. We'll give you a trial to MetaStock. You get access to all of the versions. metastock.com/code. You can also do it at metastock.com/conf promo. You can chat online with us at metastock.com/sales-chat, or you can give us a call at 800-882-3040. Now I'm ready for you, Greg, I promise.
You're fine.
Okay, yeah, I can see you. Sometimes the cameras get hidden. How you doing?
I'm doing good. How are you doing? You're doing great, by the way. I'm really, really excited about this next presentation.
Right now, we got a little bit of a surprise, don't you?
So there's a little bit of a twist. If you're not, I don't think people are really ready for this.
Is kind of getting like maybe disappeared. Like your shelves are empty. Is something going on?
The Texas extension of the MetaStock studio is moving from down here south of McAllen to Houston, and yeah, there's a lot going on because just a lot. So yeah, this is all going to be a barren wall here in a day or so. And the studio dog, Charlie, is sitting right over there on the chair. You can't see her, so don't say the gato word, or she will freak out. I'm not kidding. Don't say that word, or the studio dog will go on a barking rant.
Okay, what word? I'm just kidding. Okay, let's give away.
I'm telling you.
All right. We're going to give away another copy of one of Steve's books. We've talked about how much Steve was awesome. Steve, I'm going to actually kind of talk a little bit about Steve. Steve was a partner of ours for about a decade and a half. We programmed a lot of the methodologies and the kind of patterns that he would look for. He was very much into price action and looking at price action and what that meant for the markets. He was a funny guy, a great market technician, and had the pleasure of just kind of working with him. We traveled around a bunch and talked about his patterns. We programmed all of his stuff into a MetaStock add-on that's super good at finding his patterns, and just lots of love to Steve. We're going to give away a book of his called High Profit Candlestick Patterns right now. It's there's no price on the back of this book. It's a great book though, and you may be getting one sent to you if Greg likes you enough to pick your number randomly. But no pressure, Greg.
Well, are you ready?
Yeah. Let me get over. Yeah. Just a sec.
Oh, okay.
So you can pick any number.
Well, as I say, it's not me so much as it is the Google random number generator gods.
I think the random number generator is ready. I need a number between 2 and 63.99.
Here you go, spinning around now. That number is 3,275, 3275.
Helen K with an AOL address in the USA. So if you're watching Helen right now live, you don't have to be live to win, but if you're watching live, we do expect you to go, yay, I won, or thank you, or something. We like to celebrate your win with you if you're here.
Yeah, do a little whoo.
Greg, I think it's important that you tell people if they're watching in YouTube how they can make sure they're eligible for the drawing, because we're going to be doing some more today.
If you're watching on GoToWebinar, you don't have to worry about it. You're already registered. If you're watching on YouTube, all you need to do is go to metastock.com. There's a big banner right on the top, a big yellow banner. Just click on that, give us a little bit of info, and you will be registered to win immediately. And people who do register late often win. So there you go.
All right. And Helen, when you get an email from me saying, hey, you won a prize, I promise it's right here. Go ahead and answer me, make sure we have an address for you. And that way, when I go to the post office next week, I can send you your book. So, all right. Greg, do you want to?
Hey, Jeff, before you let me go, I'm going to introduce you real quick.
All right.
Anybody who, I really don't think Jeff Gibby needs much. Our very own Jeff Gibby needs a lot of introduction. If you've watched any single presentation ever, he's probably hosted it, and he's done dozens and dozens of presentations, both online and in person for MetaStock and for trading. And he's really, really a go-to guy for MetaStock. He's worked here for 27 years, 28, 29, 30, it doesn't really matter. You know, after 25 years, no one's counting. He's certainly a great person and a great friend. And I know you're going to enjoy, especially today's, because we're doing a little zig where you thought we were going to zag. What are we going to be talking about today, Jeff?
MetaStock 20. MetaStock 20.
Wait, MetaStock 20. No, we're only on MetaStock 19, aren't we?
Yeah, no, this is a sneak preview of what we're supposed to be releasing next week. We were going to talk about the Ichimoku, but we kind of saved this slot just so we can talk about MetaStock 20 in case we felt like
you can't overstate this, folks. You are right now live, the very first people to get outside of the company to get a view of MetaStock 20, and I know you're going to love it. And Jeff, is there anything else I need to say about you or MetaStock 20 other than you're awesome and it's awesome?
You know, I want to let you know I checked my LinkedIn profile the other day because when I want to know exactly how long I've worked at MetaStock, I have to check. In 2027, it'll be 30 years.
Okay, that's a long time. In January, I'm coming up on 20 years.
Cool.
All right, break a leg, my friend.
All right, very cool. There is a question Theodore asks in the chat. Thank you very much, Greg. What's the difference between MetaStock and TradeStation? Are you direct competitors? What's the price difference? Well, to be frank, when I started back, well, I guess we just covered it about 27 years ago. We got a lot of questions about TradeStation. They've become more of a brokerage. We don't get a lot of questions about TradeStation anymore. We used to get a lot of them, but more, I'd say that they're a little bit more of a brokerage nowadays. Really kind of what our focus is on is very simple. You can see it right here, helping identify the right trades, figure out where they're at, test trading ideas. We've got the patented forecaster in there that's very, very unique. And what I would say is, generally speaking, a big core difference between like TradeStation and MetaStock is with MetaStock, you don't have to open up a brokerage account. What we've been still just focused on for ever since I started here is giving you good tools to help you make better trading decisions at better times and get more educated about the market. And I'd say with MetaStock, we've done a pretty good job of including a good number of systems that you can test and kind of create a programming environment if in case you want to make your own systems. That's very, very good. And I think those kind of things, like with MetaStock, you don't have to give us you don't have to fund an account, and generally you just have to subscribe, and our pricing starts at about $75. Very, very simple. If it's helpful for you with trading, you'll keep it. And generally that's why I've had customers that have been with us for decades. So that might not have been a direct and concise answer to what you're looking for, but that's generally what I'd say. So what we really specialize is the scanning, the testing, the ability to kind of really understand what you're doing when you get into the markets, and really decision support. We're not a brokerage at all. You can keep your brokerage wherever it is. And yeah, pricing starts at $75. So there you go. That's what I would say. Not to say TradeStation is not a bad company, all that kind of stuff. Actually reminds me of a joke Steve always used to tell. Steve Bigelow, we just talked about him for a second. He'd always get questions about, some of the other, Steve Nissan in particular, some of the other candlesticks. And he'd always say, when people ask me questions about Steve Nissan, I generally just say, hey, I don't generally talk bad about people until I've walked about a mile in their shoes. Because then when I start talking bad about them, I'm a while away and I have their shoes. So there you go. Let's go ahead and get this started. I do need to read the legal disclaimer again, and then I just kind of want to talk about kind of like the new stuff in 20, show you around a little bit, all that kind of stuff. There's big changes that have come to the platform. You're going to like them. And then we're going to talk a little bit about an included system, and hopefully we'll have a time to get through it all today. This is the first time I've actually demoed it. I have some notes here. I can usually just kind of come in and just talk. Actually, I can always do that. But whenever we're talking about something new, I like to try and kind of stay a little bit prepared. So just because, and sometimes if it goes really short, I'll figure out something else to talk about, and it won't go really long, because right after I'm done, Dave Landry's going to pick up. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decision based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So if it sounds like I've said that a few times, I have. This is the correct. I might need, okay. I was like, wait a minute. Greg did a great job of talking about me. So just to kind of get started, this is actually the older, the 19 box. I kind of pasted a 20 demo in here just so we could kind of talk about it. In case you're not familiar with MetaStock, though, I just want to kind of talk. I'll give a little bit of a history lesson, not long. You're not really that concerned about where we came from. We have been making software here since 1982. When I started, which we just talked about, was 1997. We were totally owned by Reuters. Reuters then over the years, this became Thomson Reuters. Then they sold the news division of that back over to Blackstone. Blackstone then sold it to LSEG. So it's the institution that was Reuters has kind of changed hands a few times in the last 2 or 3 decades. What Reuters is known for, and now LSEG owns all this stuff, is the quality of news that they've got. They spent over $1 billion developing technologies to kind of compete with Bloomberg. A lot of hedge funds, institutions, you name it, use data from Reuters. Or now it's still actually Reuters as the news organization, but a lot of institutions and hedge funds and banks and brokers get their data through LSEG, which used to be Reuters and Thomson Reuters and whatever the names that they've gone over the year. It's a very well-respected news organization. They have thousands of reporters over hundreds of different news bureaus globally. And the reason they had bought us, so they bought us about 2 years before I started, the reason they wanted us is they wanted some really good technical analysis tools that they could provide to their institutions. So that's why they kind of picked us up. That's why they acquired us back in 2013. So that's 12 years ago. We purchased ourselves back, and we've been able to kind of refocus on what we do best, which is helping you find good trades. So that's a little bit of a history. I've talked all it ad nauseum about how MetaStock's been rated the best software in its price category. We're very, very proud of that. 32 years in a row, the readers of Stocks and Commodities magazine, not the editors, but the readers have voted MetaStock as the best software program. So today what I want to talk about is some of the new changes that we've made to 20. So if you have questions, let us know in the chat, and I'll be happy to kind of talk a little bit about this. To be clear, MetaStock 20 is not shipping just yet. So it will be shipping hopefully next week sometime. We are able to, we're going to talk a little bit about MetaStock. If you're a MetaStock user and you want to pre-order an upgrade, pricing on that starts at about $150. And you can give us a call and we can get an order ready for you, but we won't charge you until it's ready. Okay, let's talk about what's included. Here's another legal disclaimer. I'm not going to read it twice. One of the things that I really like that we've kind of worked on over the years is the kind of streamlining and making it easier to work in MetaStock. A lot of thought is kind of put into how do we make this better and easier and more functional and make it more useful for you. And over the years, there's been kind of some changes that have actually kind of improved even my very own workflow here when I do a lot of trading on my own. And I'm very excited about this one because I think this particular upgrade is going to also improve my workflow. So from a big level, I'm just going to kind of go through all of these kind of new features and just kind of talk about them. But they decided to rethink the Power Console. With the Power Console, that's where you kind of go to open charts and scan for the markets and open option scope and quote center, and all of the power tools have kind of been located in the Power Console. One of the things we were kind of talking about is like, okay, well, it doesn't make sense to kind of have everything in a Power Console, because a lot of times what you want to do is you go to the Power Console and you want to run a scan, so you click on the scanner. So they kind of broke the tools out into what they call an integrated Power Console. So I'll show that. They made a lot of changes to the quote center and option scope applications that I think are going to make them a lot more useful. And then some Zenith integration and an addition of the JCPR system. There's also an offline mode for MetaStock real time. If you want to use that offline, you can. I don't think that's a niche case. That's not something that we're going to kind of spend a lot of time on. So, but let's kind of just talk a little bit about kind of how we decided that the Power Console would work a little bit better. Here I've got the Power Console up. I'm going to go ahead and switch into my MetaStock platform, and we'll just kind of talk a little bit about what's different with it. So before we'd have the Power Console up here, you click in chart. You go ahead and open up your chart after you got into the Power Console. If you wanted to run an exploration, you click on the Power Console, you come down to the exploration, you click on it, you'd run your exploration. Same with system tester, forecaster. And so by breaking these tools back out, what we wanted to do is just make them a heck of a lot more straightforward in terms of getting there. Saves a mouse click every time. You can kind of save a little bit of time in your workflow and kind of get exactly to where you're going. That's very, very helpful. So now if I just want to click on a scanner, I'll go ahead and click on a scanner. It's going to, the Explorer, we call the Explorer, and it'll give us basically our exploration console. This is resizable, so I can make it bigger or I can make it smaller. And it also exists on all of the open layouts that you have. So if you're in a different console, or if you're over here on your other screen, all of them are going to have the scanner instead of just having to go find your main one. You'll be able to find it a little bit easier. In terms of kind of the normal day-to-day basis work of actually opening up charts and changing charts and that kind of stuff, that really hasn't changed. It just has been made a little bit easier because you can click on the little scan button You can kind of go to the scan that you're looking for, and then all of that kind of stuff stays the same. The idea here is just to kind of make it a little bit easier for you to get where you're going. What we have changed dramatically, though, is both the quote center application and the option scope application. And the quote center and both have been kind of reworked. And I want to go back into the PowerPoint before we really kind of talk about that, because again, this is brand new for me, and I don't want to miss anything. So we were talking about the Power Console. We removed the legacy Power Console and replaced it with the new Power Console. It's now integrated in the chart. It's easier, it's quicker. You can pin them open as well. So if you were open up, if you want to leave, let's talk a little bit about a use case for that. If you want to leave this chart dialog open, you can click on this pin box. And then that way, if you wanted to open up some charts, take a look, have this open so you could open up another chart, you can pin this and it'll stay open. And also, like we could kind of show earlier, you can kind of make it bigger and smaller, depending on kind of like what you want it to look at as well. Okay, can we get back in here? I talked about that. Navigation is quicker and easier. Power Console tabs can be pinned or docked for easier access. The Power Console tab icons are displayed with or without text. I'll show you what that is. I kind of like them with text, where it says Chart, Quote Center, Explorer, System Tester. Helps you get where you're going. If you don't like the text, internally, some people don't like the text. If you don't like the text, you can turn them off. So if you come in here and just turn them off, they will kind of just be icons here. Okay, I'm gonna turn it back on though, because I like them. All right. And then you can resize. I showed that. Okay. In terms of charting functionality, they did add some enhancements for the fractions. If you're using commodities, you can now do simplified fractions. That's something that people have been asking for a while. And it's easier to identify if you've got what expert you've got attached to your chart. Not huge changes there, but pretty cool ones as well. With the quote center, what we wanted to do is kind of make it so that you could kind of maintain less better and switch between less easier and kind of have it more of an integrated part of MetaStock so that you could, it wasn't just this floating window that you could set somewhere. It was part of the platform. It could be saved as layouts. You could change between them. And I think this is where my usage of MetaStock is really going to change as we kind of get ready for this. So let me kind of go in here to MetaStock. We'll kind of play a little bit with the quote center. I'm going to go ahead and open this up. We'll go ahead and open up a sample portfolio list. I'm going to go ahead. I just created this list on the fly just to show this to you. And I actually do have a little bit of a bad symbol in here where I got Johnson & Johnson and Fro all at the same time. But we'll go ahead and open up the quote center list. I want to kind of just talk a little bit about how this is different, okay? Because it is quite dramatically different. And let's, it's taken a second to open right now. Huh, okay. We'll give it a second. This will load in. It was working much better just a second ago. This is a window now that is dockable, just like you can dock while it's loading. I'm just going to make sure I have data real quick. I'm going to refresh this chart. That might be the issue. Because you normally doesn't. This only takes this long when you do a demo. And it does look like I might have a data issue because I am waiting for data on my chart too. So let's see. Maybe a quick reboot might be in order. I put it on offline mode. I'm going to go ahead and put it back online. Okay. And if I need to, I'll just restart. So that's always a way to fix things. All right, let's just restart. Okay. Bear with me for a second here. We're just gonna go ahead and restart this thing. I promise it only crashes when I'm demoing it. MetaStock. All right, let's go ahead and start this up again. Shouldn't take too long. All right. Trying to think of a good joke I can tell you while this happens or while this goes on. While we get this restarted. Okay, we are in the process of rebooting. So All right. Okay. All right. Dude. Control Shift Escape.
Hey, Jeff.
Yes, sir.
Beg your pardon. I was offline for just a moment. Is everything, can I be of any assistance?
We had a little bit of a crash, and I'm recovering from it. But since you're here, do you want me
Yes,
to
sir.
tell you a joke?
Well, sure. Let's see. What do you got?
Let's see. Do you
Is
know
it about
any-
the? Is it about the time that the director of sales at MetaStock had to reboot our brand new software in front of hundreds of viewers? Oh, okay.
It's funny because I've been
That's
playing
not
with it
bad.
all morning and it's been fine. And you know, when it crashes, it crashes.
Well, this is a good time to point out that our studio computer struggles with being streaming live and working with software. That's always
that's necessarily the case. But you know. Anyway, let's see. We've got Zenith running again, so MetaStock should be starting. I think we just we got a little bit of a clog up in the pipe, and that happens sometimes. Yeah. In that case, you just restart it. So we were talking about.
Go ahead.
How Quote Center has changed though, and we do have MetaStock open again. So there you go.
Great.
Perfect. I guess.
All right. So
but
I'll just. I'll wait. I'll wait on that joke. We'll put a pin on that joke.
We're not going to need it.
We're not going to need it.
We go ahead and open up a chart.
Get out of your way.
SPY. All right. I was talking about. Okay, and we'll make sure we get data again. All right, we're back in there. My apologies for a bit of a delay. I don't think this is going to be indicative of the program, but it only does crash. It does generally sometimes crash when we're showing it, and that's always fun. Let me open up the Quote Center because we were talking about that. The Quote Center, we've totally redesigned. I'm going to go ahead and open up that sample portfolio again. And there you go. That's more what I expected in terms of that. I think generally I've had it running for a little bit and the pipe got a little bit kind of clogged. Let me go ahead and delete this bad symbol. If you're not familiar with the option scope or the Quote Center, basically it's a quote list and allows you to kind of switch between instrument and that kind of stuff. With the quote list, what we wanted to do is make it a lot more useful, right? We wanted to, before in MetaStock 19, it was fine in MetaStock 19, but it's a floating window. It's really, you couldn't dock it, you couldn't embed it, you couldn't kind of make, it had to float in a different window, you couldn't save it as part of a layout. And all of that has been addressed in the MetaStock 20. So right here, I loaded up a little bit of a sample portfolio. I can see based on kind of what I'm looking at today, my 73% of my stocks are up and about 4% of them are down, okay? Or I'm sorry, 26% of them are down. That's 11 that are winners and 4 that are down today, okay? In addition to that, I can kind of just see what the list is here. I can maintain different lists, and you could maintain different lists before, but if I wanted to go to a different instrument list, I could come in here, click, and go into a different one. I only have the sample portfolio with which to play. Okay, so we'll go ahead and leave this. I'm going to go ahead and kind of pop it back down. And with this, with the Quote Center, it's now dockable. So I can leave it up over here. I'm going to go ahead and kind of move it right here. I can kind of move it around. I can put it anywhere that I want to. I can dock it to any side of the screen. I can dock it to the bottom. I can have it in a flyaway mode if you're familiar with that, what that looks like. But I'm going to go ahead and dock it on this side just to kind of give you an idea. And then I do have the ability as well to kind of click on securities. And just that way I can very quickly go through my portfolios, see the ones that are up or down, et cetera, et cetera. It just makes it quite a bit easier to kind of look at, manipulate, move. For me, the reason I think this will change my work list is I can keep this as part of my, it'll save as part of my layout. It'll save as part of my template. It'll always be there. I can have my list of stocks that I'm interested in. I have my my list of stocks that are on my watch list, and I can have my stocks that are listed from the last exploration I did. And so that way I can kind of keep these lists all up to date, very, very quickly kind of go through, look at all the stocks that are in my portfolio, switch to the ones that I want to look at on a daily basis to see if I'm ready to buy them or if they're ready for me to buy them, and then switch to the ones that I've run a scan for. So very, very cool in terms of the way that this has changed, the way that this kind of will affect kind of the workflows. The usefulness of this for me has kind of gone through the roof with the way that it is. In addition to that, you know, the list here is going to have all of your open, high, low, close, volume. It's in a very nice tabular format. For me, I like to look at charts. I like to look at a lot of charts, and I like to kind of be able to just kind of maybe see the list in a bit of a smaller view. And you can make this exactly the size that you want just by dragging it here. But what we also did is there's kind of this minimum view right here. If you click on it, it's called the compact view. And what it's going to do is it's going to make it a lot smaller so that I can kind of take up just as little real estate as possible. I have my symbol, whether it's up or down, and the last price. And so that's the consolidated view as well. So big changes to that just in terms of workflow, usability, and making it a lot more useful. And I think they did that in spades. Okay, so let's kind of go back in here. I think that covers mostly what I wanted to talk about with the quote center. The crash was a little bit optional, but it's okay. So acts like a chart window. It can be docked. You can save it as part of a layout. You can save it as part of a template. You can pin it open. You can treat it like an embedded window in MetaStock. I showed you how to do that, and just kind of makes it more upfront. I want to be able to have a quote list. Now I can have a quote list that actually is embedded right there in the chart, ready for me to kind of click through. Very, very cool. And then I showed you the compact view as well. They made some changes to the option scope. The option scope is very, very similar in terms of the changes that were made. Again, what we wanted to do was make these more instead of like these independent windows that were great, but we wanted to make them in such a way that you could use them as an independent or as a kind of like a more consistent workflow as embeddable objects. So let's just play a little bit with AMD. We'll go ahead and click on the option scope here. And I can come in here. Actually, what I'm going to do is I'm actually going to, I pinned that, I didn't mean to. What I'm going to do is actually going to open up option scope from this chart. So it'll load the AMD options for me. You'll see right away, it's going to load all the puts and calls that are kind of in there. It opens it up in a new tab. But again, I can come in here and I can embed this as part of a workflow window. So like I can come in here, we'll go ahead and put it right here just for now. I can see all the puts and the calls. Although I'm going to make it a little bit bigger so I can kind of see what some of the numbers are. And I can also put in the bear put spreads and the bear call spreads and all that kind of stuff. And so again, just made it quite a bit more useful. I'm going to pop this out. I actually kind of tend to like it that way. This will save as part of a layout. So if you have your options that you like, you've got them loaded, you want to be able to see them, you'll be able to kind of see them right there on the fly. So lots of changes to that as well. Okay, I'm going to go ahead and close option scope for now. We'll just talk a little bit more about the option scope updates. Acts like a chart window. You can dock it in the container, you can float it, whatever you want, you can pin it. And again, you can save it. If you're using option scope all the time, you want to save it as part of your layout, you can. So another thing that they've kind of added, a lot of times I'll run a scan and I'll see a stock shooting to the moon or has a big gap up or a big gap down, and I don't know why. As we had talked about earlier, some of the best things about MetaStock are the data that comes with MetaStock. And I'm particularly talking about real-time now. This particular part of the integration is part of the MetaStock real-time integration. So a lot of times might find a stock and it's gapped really hard, shows up on my exploration, and I kind of want to be able to understand why that happened. Why did it gap up? Why did it gap down? What kind of news is kind of driving this on the chart? And now we've kind of put in some integrations and some hooks with the MetaStock Zenith application to kind of be able to kind of jump to the news right away. So I'm going to show you how that works. Let me go ahead and kind of jump back into MetaStock real quick here. What I'm going to do right here, you'll see the new Zenith icon. Right now we're looking at SPY. I think I actually want to look at maybe AMD, okay, instead. Just because there's probably going to be more news when I go to show this to you. There'll be a little bit more news on AMD. What I'm going to do right here is I can actually, there's a couple of different ways you can get to this. I can right click on the chart and go to Zenith. And from here, I can get news, a quote history, a monitor, a company overview, or an economic monitor. So I'll just show a couple of these. Let's go ahead and open up the news application. That's going to go ahead. It opened it up back here, but it'll open up a little bit of a news search. So this is, if you're familiar at all with the news that's available in Zenith, some of the best news on the planet. I can see all of the important news that's happened on AMD right here. Okay, so if this has had a big move and I want to understand why, it's going to have basically a pre-filled in news monitor here. I can come in here and say, okay, well, let's see, is there anything interesting that we want to click in here? We've got unusual wells. We've got, that looks like a twit. We've got investor news, okay. Seagate Technology falls. Any of these things though, if I see something like AMD shares rises, I'm looking for something news-ish. This one's actually a video. Let me go ahead and just click on stocks on the move right here. But any of these, will, if I want to see what the full article is, I can click into it. It's going to load the article. In this case, it's going to load the video as well to kind of give that. So a much more tighter integration. You don't have to go in. I only look at the news, to be frank about it, when something has moved dramatically. I want to explain that move. But now you can just right click on the chart and kind of see it. If you do want to get a little bit more fundamentals, let's say that you've looked at a chart, you found a chart in the exploration that you're running, and you kind of want to get a little bit more knowledge about what the company is, you can always go to the overview page from here as well. So I'm going to go ahead and click on the X right here. We'll go to the company overview. And this will just load your Zenith overview page. And if you've never seen that, the information that's available on this overview page is incredible. I can see a business summary right here. I can see any news that's coming in. I can see a little bit of a chart. I can see what the StarMine models look like. I can see what the peers are doing. I can see what the recommendations are doing. I can look at the valuations. Anything that I kind of want to see about the stock is going to be on this overview page. This is just the overview page. I can come over here and I can look at news. I can go to price and charts. I can go and look at their estimates, what their statements look like, what their financials look like, what their ESG looks like, what their officers are doing, the events, corporate events, earnings, that kind of stuff right here. Ownership, I can go in and see who owns, what funds own. I can see what the fund ownership summaries are. I can see what their debt structures look like. Anything that you kind of want to know about this company, you can kind of find in this overview page. Derivatives, you can see what options and what markets, what ETFs, whatever symbols they are. So this is all stuff that's been available as part of a MetaStock real-time subscription. This whole news package is part of that real-time news subscription. We've just made it easier and more accessible for you. So there you go. Looking at the time real quick, we're doing okay on time. Let me go ahead and close this out. Let's go back into the software. Let's go back into the PowerPoint and talk a little bit of that. So with the Zenith integration, you can open up a quote. You can go look at the quote history, the company overview. You can look at the monitor, the economic monitor, and then the news as well. So all those are kind of just available right there from that, either that right-click menu or from the little Zenith menu that's at the bottom. So that's really cool. Another thing that we added, and this is something that I'm going to spend a few minutes talking about, is the Japanese Greg Morris's JCPR product. Okay, JCPR was written by a friend of MetaStock, Greg Morris. Greg Morris, I've got his book right here. How coincidental is this right here? So Greg Morris back a little bit ago put together with us a book. This was, oh my gosh, probably 15 years ago. He put together an add-on for MetaStock called the Japanese Candle Pattern Recognition. And Greg's a great friend of MetaStock. If you don't know who he is, I'll give you a little bit of background on him. He actually was a Top Gun. He was a fighter jet pilot in World War II. And when he came back, he did a lot of market analysis, a lot of market research. For quite a bit of time, he worked with John Murphy, and they did a lot of training on technical analysis and how to train the markets. In kind of the second phase of that, he went to work at a company called Stadium Money Management. I think towards the end of his career, he had about $19 billion under management. A very, very successful trader. Also, cool guy. He's retired now. Every year he'll pop into the office for lunch, and we'll just kind of, since he's retired, we really just kind of go and hang out with him and his wife Laura. And he's just a fantastic guy. Very, very interesting guy. This book, though, what he did with this book, it's called The Candlestick Charting Explained. And in it, I'll just kind of show you a few things. In it, the research that he did with this, do I have it on the slide? This is, okay, yeah, I do have it on the slide. Kelly put together this slideshow, and I didn't need to, I'm pretty versed in this particular add-on. But in this book, what they did was he looked at and graded a bunch of different Japanese candle patterns. In fact, the research that he did, they looked at every single pattern that happened on 7,275 common stocks, and they looked at about 14.6 million days of data. And every time a candle pattern happened, they'd go in and say, okay, well, how did this pattern perform? How did it perform if I held it for 1 day and got rid of it, or 2 days and got rid of it, and 3 days and got rid of it, 4 days, 5 days, you get the idea, all the way to 7. How well did that work? Okay. Did it work better if it was in a trend? Is a trend requirement required as part of this? Did it work better in that case? Did it work better if it was also confirmed by technical indicators like stochastics? So they did basically tons of research. They looked at all of these different candle patterns. We do have a list of the included patterns right here. But for all of those patterns, there's about 36 of them that went in, and every time that happened, they basically graded them on a scale. Okay, and that's what this book is about. It talks about the patterns. When you open it up, here's a morning star and an evening star, right? Here's that exact same, you probably can't see it, but here's that exact same table where it talks about how well that morning star or evening star pattern worked after 1 day, 2 days. I'm kind of curious because morning star and evening star patterns are good patterns. 3 days, 4 days, 5 days, and 6 days, etc. And then they graded them. The grade that he gave the evening star was an R minus, and the morning star was an R plus. So then it also talks about what the patterns are and stuff like that. So the research that he did to put together this book, they incorporated into this add-on. So all of these different patterns with all of the different research that they did around them, he incorporated into the add-on. Okay, so I talked about the book. I want to talk a little bit about the scoring stuff. Okay, the statistics were included as part of the scoring that he does. That ADA rating is included. Okay. He also basically, as part of it, he'll look at where support and resistance are. Okay. Candles that appear near support and resistance he likes better, and they generally work better. JCPR includes support and resistance in its calculations. And I'll show you kind of how that works. And he's got a whole scoring system that's put together. I've run an exploration already to kind of show you how this works. Okay. He also does what he calls candle pattern filtering. This just basically looks at the candle pattern and looks at stochastics, looks for bullish reversals to also match the percent D is above 80 or below 20 when they're looking for reversal. And they include, we're moving. They include this filtering that he does as part of the scoring system. So I'm talking a lot about a scoring system. I'll show you what I mean in just a second. He also does that advanced candle pattern recognition that incorporates that 14.6 million days of data that they looked at over 7,275 stocks. Incorporates pattern analysis with it, and the trend of the security and technical signals as part of the score. So basically, like when we run an exploration, I think it might be better to kind of show this to you. Okay, actually, I'm going to have to show it to you anyway because we're running out of PowerPoints, but I actually ran an exploration on this. So what I want to do is kind of just show you the scan. It wasn't a big exploration. I ran it on about, I think it was the NASDAQ 100. I ran it when Zaheer started speaking this morning. So let me kind of come into the Explorer here. And I'll just find that JCPR scan. Again, I love how easy it is to kind of get around with MetaStock. You see right here, I've got a report, okay? So I want to show you that report. And then I want to kind of just talk a little bit about the score and score breakdown, because it does a really good job of kind of identifying exactly what it's looking at. So out of the NASDAQ 100 this morning, think back to when Zaheer started a few hours ago, out of the NASDAQ 100, out of those candle patterns that are a part of this, 6 of them came up as having a pattern. All right. So out of those, I'm going to sort them by the buy column. 1, 2, 3, 4 of them were buy signals, and then the other 2 were sell signals. Okay, if they have a 1 in that column. Here you see a score. Okay, here you see a filtered, a close, and a volume. Close and volume you can probably figure out as the price that the stock was at when I ran the scan and the volume that it had so far today. Straightforward. Okay, the score kind of takes into account all of those different metrics we were talking about. What are the score in terms of the candle pattern? How well did that work over this data that he looked at? Is this pattern occurring near support or resistance, and how does that factor in? Is it confirmed by the stochastics, et cetera, et cetera? And what he came up with, and he was the first person to do it, I thought it was brilliant, because when you run a scan, you want to be able to look at them in sort of a way that I want to look at the best signals first and see if I like them and kind of work down from there. So the score is going to give you a number between 0 and 99. He did 99 on purpose because he always would say, nothing is 100% guaranteed and my score isn't going to go to 100. Okay, so in this particular case, the score is 73. The filtered number, that's how many of those variables actually kind of weigh into it, is a 40. Okay, now let me open up the chart and I'll apply the indicators and we'll kind of talk about the chart and how the scoring components kind of give us a number of 73. But the 73 is basically his confidence number in that score. Okay, so I've got I should have it open. Did I open it? Was it Axon that we were looking at? Yes, okay, just want to make sure. Okay, I'm going to apply the template, which will add the indicators and make it easier for me to kind of talk it through. We're going to go JCPR. Oh yeah, it's candlesticks first and then JCPR. I'm used to it. They renamed it a little bit when they included it with MetaStock 20. So let me do the full template with the indicators. I just want to talk a little bit about what he's looking at and kind of what the different things are. So gives you directional movement. He also looks at positive DI and negative DI, and those are on here as well. What you're also going to see is you're going to see kind of support and resistance. So right here, you've got resistance levels, support levels, and those are automatically drawn. They're drawn basically for you, okay? It looks like the signal may not be still on the chart. Maybe let me take a look here. Let me go to the view commentary. Okay. And then I'm just going to close this quote center window for now, just to kind of give us a little bit more real estate to work with. I'm going to dock this commentary where we were. And it does look like, actually, that pattern went away. So since right now the trend on this is actually bearish, it's going to give us the support and resistance levels. I'm just trying to kind of match it up a little bit. But there isn't a pattern anymore because I scanned it a little bit earlier. The market's been kind of a little bit volatile today. I should have actually scanned for patterns yesterday. We do have a pattern on here, the 30D though. And what I'm going to do is I'm going to actually kind of scroll back here to this 30D pattern. Okay, this was a 3 outside down pattern that was completed on 10/31. Okay, 2025. I want to show the score breakdown though, but in order to do that, I need to manipulate the chart a little bit, because the score breakdown will show up on the current day because it looks at where the support and resistance are currently. Okay, so what I'm going to do, just so that I'm going to make MetaStock think this is the current day, so that it has exactly what the support and resistance would have been for that day. So I'm going to change that a little bit. This pattern did work out really, really well. What I'm going to do is I'm just going to make it so that the last day loaded on this chart is 10/31. So let's say that we found this particular, and it did work out really well. I don't know what the score was yet, but we're just going to have it load to the 31st so that we can see what this chart would have exactly looked like on the 31st. We'll go ahead and click on apply. And we still have that 3D pattern. But the reason I did that is I wanted to kind of be able to show you how the score breaks down. And we're actually doing really good on time. Dave, it's good to see you. Greg's apologizing for not being available to tell you jokes when we had that little bit of a crash in the scenario. No problem. So right here, what we've got, this is kind of the way that the score has come up with. Remember, when we ran the scan earlier, it said 73. So, but this is how it kind of takes a look at it. So we have the 3 outside down. This pattern is completed on 10/31, which we're pretending is today. It's the most recent day. The support and resistance, you can see this is lining up right at our resistance, right? So we've got 25 out of a maximum possible of 25. And the reason for that is we've got resistance through the pattern body, okay? Filtered, this basically is a maximum score of about 40. You see the maximum score here, 20. And the reason is we've got our a positive 14%, and we've got a D directional index. So it kind of gives you a little thing here. It does some volume confirmation. So out of volume, there's 15 points possible there. It gives you 10. That's because volume is increasing. I can't remember exactly what volume C is. It looks to see if volume is increasing significantly each day. It also looks at if volume is above average, and one other volume criteria for the total score of 15 points, okay? In terms of the statistics, that's all the research that went into this book. It's going to give a maximum score of about 15. In this particular case, it's getting 0 because this is a G-rated pattern, okay? The breakdown though, the pattern breakdown goes into, if it's a multiple day pattern, he combines it down to a single bar. And if that single bar is also conducive, like bearish, that's what he calls pattern breakdown. That's 5 points. And yes, it is true. So in the terms of that, basically out of the scoring mechanism that he put together, he's kind of giving it a 60% chance of success. Okay, so not a great chance of success. I'd say 50 is like flipping a coin. 60 is pretty good, but that's kind of how he looks at kind of not only the statistics of the pattern, where it happens to be with regard to support and resistance, how the technical indicators, whether they're confirming them or not, all that kind of stuff bleeds into that score. And the thing I love about it is just what I showed you. When you run that exploration, let me see if I have the results right here again. When you run the exploration, let me just pull up the report. We can look at the ones that score highest, that have more of those things that Greg Morris felt were more appropriate. So this is an add-on. This was an add-on for MetaStock. We do include it with all of the versions of MetaStock, and I love it. I like just the things that are included with it. So the detailed score breakdown, the looking at, all of the statistics that he put together over the years, the looking at the support and resistance, the trend, all of that kind of stuff bleeds into that. And it's included with the upgrade for MetaStock 20, just included. I'm trying not to say free because it is part of the upgrade, but there you go. And if you ever need a detailed explanation of any of the patterns, the help file contains all of the patterns and a lot of information that Greg actually put together as part of it. I'd also recommend this book. It has a lot of good info in it as well, but that's not included. So In terms of 20, a big solid upgrade, improved power console. You've got the chart functions, the option scope, the quote center. You've got the Zenith integration with all of the news and the data. You've got that JCPR system. All that stuff's included. So for the upgrade, obviously there's a lot of stuff that's in it. We're not ready to start shipping it yet. We're kind of just finishing it up. We're confident that we're going to be ready on, like, we think Monday or Tuesday of next week. If you're interested in kind of picking it up, I'll tell you that pricing starts at $149 for the DC and $249 for the real time. That gets you basically the brand new version of MetaStock. You can get an order placed. You can get an order in, but we won't process it until we're ready to download it for you, until it's available and ready. So to do that, you can call us at 800-882-3040. You can go to metastock.com/saleschat, but you can't go to metastock.com promo. So this is brand new. We're not even selling it yet. But here's the phone number: 800-882-3040, metastock.com/sales. All right. Cool. We did okay on time. I figured, like, if we went a little bit short, we could show you. I could talk about MetaStock for days. We could run a little gap scan and show you how to identify gaps in MetaStock. Probably wouldn't have time to, after that, to talk about a Ichimoku, though. Ichimoku usually takes about 40 or 45 minutes to do it properly. Get the upgrade. Give us a call, 800-882-3040, metastock.com/saleschat. If you have any questions, let us know. We'd love to get this ready for you. We should have it available next week. If you do start a subscription to MetaStock, here, I'm just going to skip a little bit here. I meant to actually delete the Ichimoku stuff out of my presentation. That upgrade will be available for you. Once it's available and ready for us to download, we'll put it on your website, or on your downloads page. So just to kind of talk a little bit more. Hopefully that was interesting to you. I think it's going to be a fantastic upgrade. 32 years in a row, MetaStock's been rated the best software in its price category by the readers of Stocks and Commodities. We're really proud of that. The other thing I love is, like, we keep more people in sales and support than we keep in support than we keep in sales and marketing. And if you have any questions, if you need to talk to us, you can give us a call. You can chat online with us. It's not uncommon for those support reps that work right here in the office, they're right over here, to get 100% satisfaction surveys. I think one of the best things that we do in terms of what we do is scanning, but I also think that people make a huge difference. If you ever need any help, if you want to get something programmed, we have a programming service, which is $30. Like, it's all of the stuff that we kind of do, I think really, really is helpful. I love the fact that it's a very customer-centric company, and I think that bleeds through, and that's why we get the ratings that we do. So we do have real-time. We do have two different versions of MetaStock. We've got the real-time version. The real-time version is $265 a month. Not only is that going to include MetaStock real-time, it's also going to include that fantastic Bloomberg competitive news feed that is used by hedge funds, institutions. It's powered by the data that's available from Reuters. Very, very cool. I mean, just if you were to get that as an institution or a hedge fund from LSEG, you're going to be paying about $350 to several $1,000s a year, depending kind of like what your needs are. For us, we include MetaStock, real time, and the news and the data, $265 per month. If you don't really care as much about the news, you can get the delayed chart version. The delayed chart version updates. It'll look at daily, weekly, monthly. It updates during the day on a streaming delay. The big difference is it doesn't have any access to that news because it's a lot more. So with this version, you do get everything I showed you except for the news, but you only pay $75 a month. And what we're, as a reminder, we're going to skip through some of the bonuses just because I've been kind of running a little bit. So with that, you'll get an onboarding phone call. Somebody will kind of give you a hand, help you get everything installed and running. That's part of it. You get unlimited access to our support as part of it. And if you pay for a month, we'll give you the second and third month for free. Okay, that's with either version. If you want to do the real-time version with real-time and with all the news, all that stuff, that's less than $100 a month to try it. $75 divided by 3 is 25. So for 3 months, you can try MetaStock DC, run all the scans, play with all the stuff that's included. It's been rated #1 in its price category for 32 years in a row. I've been using it. I would not be able to trade without it. Everybody that hangs out with me in the forum knows I run my scans every day, sometimes twice. But that's how I kind of keep track of what's going on in the market and what I'm doing. And I just love the fact that I wouldn't have the time to go through the on a daily basis. I'll scan about 1,100 stocks to identify kind of the ones that have an actual opportunity. I wouldn't be able to do that. I just wouldn't have the time, right? I love MetaStock's ability to go in and kind of just, these are the stocks that you can look at. These are the ones that have an actionable item for you. Love the fact that you can test ideas and see what works. The amount of education that's available just in the expert advisor and in the included systems. I think MetaStock's a tool that's going to help you. I think it's a tool that's going to grow with you. And I think as you get to be a better trader, it's going to keep growing with you. You're not going to outgrow it with like a lot of these trading programs that really just don't have the depth of coverage MetaStock has. So give it a go. Right now, if you sign up, you get 19, but you can upgrade that to 20 as soon as it's available. You can give us a call, 800-882-3040. And give us you can chat online with us at metastock.com/saleschat. You can also go to metastock.com/conf promo as well. So there you go. I was getting a little bit winded after we talked for Greg is putting all of that links and stuff in there as we move on to the next presenter. Just a couple minutes over, no big deal. I want to say thank you to AAII, AAII.com. Great nonprofit. They've been supporting us for a number of years. They do such a great job. We had Ray Rondo come in and talk a little bit. He heads up their active investor division. They also have the AAII investor sentiment survey that they do. They have tons of research, both on the fundamental and on the technical sides. You can find out more about them at AAII.com, in fact. They've been a nonprofit since the 1970s. They're a very well-respected company, and we're happy, proud of our sponsorship from the AAII. Thanks for supporting us, guys. Okay. All right. Greg, let's do another real quick giveaway. If you're around.
Sounds good to me. I'm around. I'm a square. I'm around.
I'm not triangle. Well, we were down for a little bit there. I mean, you can't do a brand new product demo without a crash. That's just the luck, right? I think I cursed it.
Nothing else will go wrong for anyone for the rest of the.
Right. I took the bullet. Yeah. All right. Let's do the prize then. All right. Do you remember by any chance Larry McMillan?
Yes, of course I remember Larry McMillan. I wasn't able to catch his presentation yesterday, but he's a legend.
I think he was on
options legend.
Yeah.
But I wasn't there Tuesday either.
Yeah. Either way, you can't get there. Either way, we're going to give away all three of subscription to all three of his newsletters. It's a 1-month subscription, but it's a $700 value. Larry McMillan, if you're not familiar with him, has written. Well, hello, Dave Landry. We can see you, but that's okay.
Hey, good to see you too.
Okay. He wrote Options as a Strategic Investment, which is widely considered to be a must-read for those of people that are interested in options trading. We're going to give away all three of his subscriptions. So
sounds great.
Greg, what I need from you, let's pick a random number, anywhere between 1 and 63.99.
Well, according to Google Random Number Generator, that would be 922. 922. And with that, I will get out of your way. And Dave Landry, I can't wait to hear your presentation. Break a leg, both of you.
Thank you, Greg. Thank you.
That's Keem Z in the UK. Very interesting last name too, but I'm not supposed to say it. Theodore says, why should I spend money on tools? Well, I mean, you should only spend money on tools, Theodore, if they're helpful for you. If they help you identify better trades, if they pay for themselves, give it a go. It's $25 a month. Give it a go. There's a reason it's been rated #1 for 32 years in a row. Appreciate the question too. Dave, let's get you started.
Thank you.
Let me go ahead and make you the presenter right now.
Okay. And Larry's also a nice all-around guy too.
Yeah, Larry's great.
He's awesome.
Speaking of nice all-around guys, I didn't even introduce you. Dave, it's good to have you on here. Appreciate it. Dave and I worked very closely on a bunch of stuff that's built, talking about the depth of stuff that's built into MetaStock. We programmed a bunch of his setups that he just gave to the MetaStock community.
Yep.
They include like his bow tie setups. He's very, I love his setups. They're very simple. They're very straightforward. His way of identifying trends, I think, is second to none. So without further ado, Dave, it's all your turn. Thanks for coming. Thanks for being part
All
of
right. Hey, it's great to be back again, Jeffrey. I love doing these things. Whenever I get asked to do a presentation, I'm always like, what gee whiz stuff can I show you? And then I always come back to what I actually use and what I have been using for 20-something years and what actually works. And I do like to keep it simple. And there's some very simple things that Jeffrey's crew has programmed in the MetaStock, and I'm going to show you a few of those things today, along with some open trades. And everybody's a setup junkie, and that's a big part of trading, but it's not the whole part of trading. So if time allows, I want to get into a little bit of money management and a little bit of trading psychology, but I do normally spend a lot of time on trading psychology and a lot of time on money management. Anyway, obviously I want to thank everybody for being here today. I appreciate you taking time out of your busy schedules. Thank you, Jeffrey, for having me back once again. Thank you, MetaStock. Long-term relationship with MetaStock. I think I published some charts from MetaStock in 1995 or 1996 in stocks and commodities. So it's been a while. Anyway, there's a disclaimer screen. As you know, you can lose money trading, or as I often sum it up. And this is borrowing a line from my friend Greg Morris, who Jeffrey was just talking about. All predictions about the future and a lot of stuff can happen between now and then. Now, I have a lot of material. I'll probably have 3 hours of material here, and we're going to go through stuff kind of quickly. Number one, my stuff is really simple. Number two, I'm here for follow-up. And if you put your information in this link, you'll get the slides of this presentation. And it might be an older presentation there now. So if you want to hold off until maybe an hour after the presentation for me to update that, you'll get the newest slides. But the other slides are going to be very similar with the same setups and same material. Anyway, there's all my contact information. You can also reach me at dave@davelandry.com. All right, let's talk about trends. And years ago, I was with a website. It was first called Trade Hard, then it was called Trading Markets. And we were one of the first financial websites out there, especially as it relates to technical analysis. And my paint program defaulted to blue. And so I would draw these big blue arrows in the chart, and I've been known for those big blue arrows. And sometimes when people are fighting the trend, they tell me where to stick them. But but the bottom line is, and Linda Rasky once said, if you don't know where a market is headed, ask a 6-year-old kid. And I'm going to show you some really simple indicators you could use to help you identify a trend. But the bottom line is you need to draw your arrows, and I'm going to focus a lot on that too. The great thing about an indicator, or as I call them, an illustrator, if you had an indicator that would indicate where the market is going to go, okay, you would own the world. So indicators are a second derivative of price. You're better off just looking at price. However, with that said, something like a moving average or a combination of moving averages, as I'll show you, can really help you to determine whether or not a market is in a trend or in a possible transition of trends. Anyway, daylight, or now we call it Landry lights, is when the lows are greater than the moving average. And I like the 30 EMA, as I'll show you, but you could use whatever average you want. I have a longer term system for the S&P 500, the TFM 10% system, which I think is included if you go to that other link. If not, let me know. I'll give you the information on that. And that I use a 50-week simple moving average. I actually wanted some lag built into that system. Anyway, for downside Landry light, it's you count the number of bars below the moving average. So here's the algorithm here, and then that's the MetaStock code. It's very simple stuff. The people at MetaStock figured out a very simple way to do this. And what was cool about it, when MetaStock first programmed it, I plotted it as a histogram, and it was really, really cool to actually see the Landry light grow and shrink and disappear on the charts. And I know I'm a nerd. You probably think I want to party with you. Anyway, the counts is basically just the number of bars above or below the moving average. So for upside Landry lights, if you have 2 bars above it, then obviously the Landry light count is 2. Downside, the same thing, but it would be the highs. And when price intersects the moving average, the Landry light drops back down to 0. Now, if you use it in histogram, as I just talked about, it can really give you an idea of where a market is headed. And it's kind of like in Tarzan speak, good, bad. We'll break out Tarzan for this presentation one more time. So if it's green and red, flipping back and forth, that means the market is choppy. And I just have these little reference lines set, I think at about 10 on here. And once they get out of 10 or 10 and beyond, it's possible that a trend is developing. But anyway, green and red is choppy, and then you could just see that the market's going sideways during that period. And then we had that sell-off that we had earlier in the year, and I'll show you some shorts we did on that in a little while. So that's bad, Tarzan speak. And then notice that the trend since, for the most part, has been green all the way up. We had one little red bar, if you squint your eyes, right here, meaning the high was less than moving average. But for the most part, most of the year, obviously, since May, has been in the green vis-a-vis the 30 EMA. Now, we did have a few kisses along the way. That's okay. That's a little orderly correction as long as you mostly stay above the 30 EMA. That's actually a positive thing. It shakes out the nervous Nellies. It shakes out the weak hands. It attracts some shorts, which have to buy back in later and can push the market even higher. So that's actually a good thing. Now, don't forget to draw your arrows. One of the most powerful indicators there is, so to speak, is the net price change. Where's the price today? Where was it yesterday? Where was it a week ago, a month ago, a year ago? And that could be quite telling. And you can see over here, the market just chopped back and forth again. But notice if you draw your big blue arrows, it's been sideways, down, and then now up. Now, one thing to remember is it counts the number of bars. It doesn't increase as the magnitude increases or decreases. I guess that would be like an MACD or something like that. I don't actually use that indicator, so I wouldn't know. Again, I just basically use moving averages, and that's pretty much it. Little historical volatility to gauge the volatility of the market, but that's about it. But notice that in Bitcoin, you could see that it was losing momentum, even though the Landry light was increasing, because it continues to count the bars as long as they're above the moving average. So the point I'm trying to make here is always look at the charts. You can see this market here began to lose some momentum, even though the Landry light continued higher. By the way, you could also scan for those Landry light pullbacks, and I think there's an expert advisor. In fact, I know there's an expert advisor on that built into MetaStock. So we have a downtrend here. If we're looking at the current Bitcoin market, and you can see that we've had a lot of lows below the moving average. We had a lot of highs below the moving average. We had one little green bar in here in that little pullback, but for the most part, it's been in downtrend mode for quite some time. So that's something to keep an eye on. A friend in the gym, he's all excited about Bitcoin, and he says, "Oh, it's on sale. I'm going to buy more." I'm like, no. Think in terms of supply and demand. Right now, there's supply. Nobody wants it. So sit on your hands, let things shake out, and then maybe look for a transition. I'll talk about those now. Transitions are when a market goes from one phase to another. And it was interesting when Jeffrey asked me to return and do another presentation here, I was thinking, well, I'm gonna leave this bow tie stuff out because the market's generally going up. Let's focus on the trend resumption, the Landry light pullbacks and pullbacks in general. And then, of course, the market started getting a little iffy here. So I think it's important to understand how the bow ties work. And it's just a very simple pattern. It's a 10 simple, a 20 exponential, and a 30 exponential. And when they come together and spread out fairly quickly, giving the appearance of a bow tie, it's possibly a top or possibly a bottom in the market. Now, by the way, you don't, in case I forget to say this, you don't want to try to trade bow ties when the market is range bound. You want to watch for bow ties when the market's coming off all-time highs like now, or let's say 10-year or 20-year lows in something like gold, or major lows in individual stocks. So a lot of people get caught up in the trading range and looking at, well, is this a bow tie? Is that a bow tie? It's like technically yes, but you want to focus on the ones from high levels and low levels only. Anyway, I like the simple moving average because it gives you 2 weeks of a true average, okay? Whereas once you get a little further out, 1 month and 6 weeks would be the 20 and 30 respectively. I like to use an EMA for that. And the relationship between the 10 simple and the 20 and the 30 is really kind of a cool thing. I know, you want to party with me. So downtrend proper order just means that 10 is less than 20 and 20 is less than 30. And then uptrend proper order, just the opposite. 10 is greater than 20 and the 20 is greater than 30. And if there's no order, you can see that the moving averages are kind of flipping back and forth. And once again, that usually indicates or illustrates a choppy situation. So you can see that these averages are not 10 above 20 and 20 above 30 and vice versa. So this is what it looks like in a chart. You can see, I always draw you big blue arrows, of course, but this is the proper order. So when you have 10 greater than 20 and 20 greater than 30, you would get 1 bar, okay, above where you have uptrend proper order, and then just the opposite for the downtrends. Now, the actual setup, which we'll get to in 1 second, is you would look for the bow ties to flip one way or the other to make that actual bow tie, and then you look for a higher high and a higher low for shorting, and a lower low and a lower high to get long. And you can see that the expert is in here and it shows some buys and sells. This buy right here, I would completely ignore. That's a range bound one. This one here, we did get some shorts setting up right around here, so that would be a legitimate signal. And then on the upside, it took a little while to catch up, but technically the buy would be way up here. But there are other things that you might want to use in that particular case because you had the V-shaped recovery. As you'll see in a minute, bow ties don't work as well with a V-shaped recovery. They work really great with a gradual rollover like we had way back in February and March. Anyway, uptrend proper order, just another simple way to keep you on the right side of the trend. Of course, and as usual, always draw your big blue arrows. And if you look at like a weekly, you can see major bull and bear cycles can be caught with this. Obviously, for now, at least, we're still in an upside cycle with moving averages. And again, they don't work as well with a V-shaped recovery. They work a lot better, like in a case like this, where you have a gradual rollover. This is 2008. And it was kind of interesting back in 2007. I always call it the 2007 bear market because we started getting all these signals in 2007, and the market didn't really roll over in earnest until 2008, obviously. But anyway, they work better with gradual rollovers. And one thing that's kind of interesting, I learned from Greg Morris, I was talking about this yesterday in my weekly webinar, is that market tops tend to be more of a process and bottoms tend to be more of an event. You always think like, oh, the market just got hit, it's crashing. But the reality is usually, and usually be the keyword in that sense, it's not that it can't crash, but usually it's kind of a gradual rollover. So that's one of the concerns that I have now. If you look at the spiders here, you can see that the moving averages are beginning to come together. So we're going to have to be careful and we're going to have to be on our toes here. And I hate to use the word hope, but hopefully that doesn't happen. But again, I think we need to pay attention. This is something I was going to take out of the presentation, but I made sure I left it in, given the condition of the overall market. Anyway, here's a 30-minute chart of the S&P 500. And you can see the bow ties went from green, which is uptrend proper order, to red, which is downtrend proper order. And then yellow is just when it's making that transition. Now, the tighter the transition, the better. 3 to 4 days is fantastic as far as the pattern itself. If it happens over like one period, that's a pretty big move. That's pretty significant. So the more tighter it looks like a bow tie, where it's kind of, I call it sloppy when it moves around quite a bit. Anyway, you can see on the 30-minute chart, we're in a downtrend and we're in downtrend proper order. We're now pulling back. So that would actually be a setup to short, should, and hopefully we won't, but you gotta be careful to use the word hope in this business. Turn right back down. Now, ledger like pullbacks, I'm kind of shocked at how this simple pattern works so darn well. And the rules are super simple. You just eyeball a chart. I actually use mostly blank charts before I put any moving averages in. And I look at a lot of charts every day. I look at roughly about 1,000 charts, maybe 1,200 or so, depending on the market conditions. And that gives me a pretty good feel for what's going on. And that's how I find setups, as opposed to writing some very specific scans, which you can do. And it's probably good to do that, even if you are looking at a lot of charts with something like the Landry light pullbacks. But anyway, you need 10 to 20 bars of upside Landry light. Also look at the chart, of course, and then you want the market to pull back to the moving average. Now you want to go long above the recent highs, and then you want to follow, I think you should follow my hybrid system to money and position management. And that's where you're taking partial profits and you're trailing stop higher. So lots of Landry light there. This is KTOS. This is what I recommended back in, I think it was April or June last year. I'm sorry, earlier this year. And by the way, I go through, sorry about that. I go through all of the setups I recommend each week in my week in charts presentation, my webinar that I talked about earlier. And in doing that, you see the methodology, warts and all. And we do occasionally, obviously, have losers. Anyway, nice Landry light, and it pulls back to zero. The count pulls back to zero. So it's very simple to scan for something like this. And if we take a look at what happened longer term, that was a recommendation in my trading service. You can get those at davelandry.com/archives. And you can also get them on YouTube, youtube.com/DaveLandry. The ones on YouTube, you can get them within a few days. So they're only a few days delayed. And then the ones on my website, they go back a lot longer. So if you're looking for something more current, see what I've been thinking about, and without any hindsight, you can go and take a look at those archives. It's a great exercise, if I say so myself. I don't know anybody else that does these type of walkthroughs. Of course, I haven't looked that hard, busy enough for my own stuff. But anyway, we're taking half of the profits off at a 1-to-1 risk to reward. Now, you might think, well, Dave, that has a negative expectancy, and it does. Okay, if all you're making is 1-to-1, you would never make money longer term. But the secret sauce is in the trailing stop, and we let that stop loosen up gradually over time to hopefully ride out a trend for a long time. And we did get stopped out at this one, and that was for over 100% gain on the second low. So that worked out really nice. So we're only looking for a 1% move, and this is on a hypothetical 100K account. Although I do have a model account that I do take these exact trades in, I would never recommend anything for you unless I personally will take it myself. And that's why sometimes, like over the last few days, for instance, I'm not recommending anything because I'm not going to take on any new positions when the market starts getting questionable like this. Now, if we start rolling over, I'll start putting on shorts. Anyway, this was from the last presentations. This was the original setup, and it had triggered and rallied a little bit in our favor. And again, I'm going to go through this pretty quick, but you can go through the archives if you wanted to walk through these on your own. So following up on this, and this is one thing I love doing with these webinars, and hopefully Jeffrey will have me back next year or year after, and some of these trades will still be on. This was actually still on. This is a gold stock, and entry, stop, initial profit target once again. And you can see it kind of backs and fills and became what I call a dead money for a while. But by following the plan, which doesn't always work, obviously, but longer term, you want to follow the plan. But we hit the IPT, and then it kind of meandered sideways for a while. But it didn't really do anything wrong. Notice it never really got below the 30 EMA. And at this point, I hate to use the term, but we're playing with the market's money, so to speak. So unless we get stopped out, we just stick with the position. And knock on wood, we were up 73% a few days ago on the remaining shares. Now, this one was from last presentation. This is what I call the better than the poke in the eye trade. You get to stop to break even, and then you make zero on the second loaf, and you bank $1,000 on the first loaf of the trade. So whatever, you notice the spreadsheet here, I've got the trades divided in two. So this was actually a 400 share purchase, but I divide them in two for tracking purposes. And one is a trading loaf, and one is a trending loaf. So much better than a poke in the eyes, what I say on those type of trades. As I say ad nauseum, if that's the worst you ever did on a trade, you would own the world and do really well. Now here's one. I just want to follow up Again, I try to leave as many live charts in as possible, or all live charts, I should say, from prior presentations. So we moved the stop to break even here. And we didn't bank quite 1,000 because the entry was a little higher than the one I intended. And then once again, you end up with a better than the poke in the eye trade. And this time you made 300 a second low. So you're not going to get rich like that, but annualized, that's a pretty good trade. And that's keeps you in the game, keeps the lights on until you catch these occasional big winners like this. And this was another one from the last presentation, or maybe even presentation before that. But you can see it triggers an entry, does nothing, finally hits that IPT. And again, and I'm just noticing a lot of this in real time, but notice that it never had any downside to Landry light that whole time, okay? And then you can see you just let that stop gradually open up over time. It came very close to it a few days ago, but it did not stop us out, fortunately. All right, let's take a look at bow ties real quick. So trend transitions is when a market begins to roll over. And again, I was going to take this out of this presentation a week or two ago when I was working on it because the market's doing so great. But now's the time to pay attention. Anyway, so kind of a gradual rollover. I purposely drew it as an inverted cup and handle because a lot of times the market will look like that, kind of like it's looking now. And then on the upside, you wait for the market to bottom out. You don't try to catch that falling knife. And then you're looking to play that first correction. Now, as I often say, it can be more of a process than an event, and sometimes it could be an event, okay? Sometimes the market crashes, pulls back a little bit, and you jump on board. And then, again, process versus event on the long side. So I have a pattern I call a first thrust, which looks a lot like these charts on the right here. And the one on the left, when it's more of a process, would be something like a bow tie. Now, the rules are pretty simple. You're just looking, again, for those bow ties to flip from downtrend to uptrend profit water. Again, you can go into the daylearner.com/archives and look at years and years and years of these setups if you need more information. And on every one, I walk through the setup. So this is not one and done. I realize I'm throwing a lot out there quickly. Anyway, you look at just for a 1-bar pullback, okay? Nothing else. So this is what it looks like in a chart. You can see the bow ties, again, they make that fulcrum where they spread out, looks like a bow tie. And you're looking for a lower low and a lower high, and that's it. Now, when I'm trading a generic pullback or Landry-like pullback, that pullback is usually pretty deep because I'm in an established trend and I want people knocked out. When you're trading a transition, you're looking for a very minor pullback, okay? At least a minor pullback, okay? It could be deeper, but you take the first pullback because the most people are caught off guard at that particular point in time. Let's say a market's rolling over, has a one-day rally, everybody thinks, okay, that rollover's done, I'm okay, I'm going to hang on. And then when the market continues lower out of a pattern like this, they're trapped on the wrong side of the market. Anyway, so you can see the expert advisor shows the bow tie. This dot here shows the bow tie has happened. And then the sell here is because you have a higher high and a higher low. Sometimes you just get a higher low. That's a little bit more aggressive signal, which would be on this data says bow tie. And those can work out nicely too, especially when you have a wide range bar on the day before it. But anyway, so this was CCL. This was a stock we shorted earlier in the year. I'm not a huge fan of the short side, but it does two things. It allows you to make a little bit of money on when the market's selling off. You're not going to get rich on the short side. At least I've failed to get rich on the short side. But what it does is it keeps you in the game. You can make a little money. And the more important thing that it does is it helps you to see both sides of the market, okay? And I would never throw anybody under the bus, but I have some friends that run lots of money. And those who are long only oriented, they tend to always see the glass as half full as opposed to half empty. They always tend to be a little bullish, and rightfully so because they're long the market usually. Anyway, this one stopped out for kind of a better than a poke in the eye trade. And again, you're not going to get rich on the short side, but it gives you something to do when the market's going down, possibly make a little money. And then also, again, it really helps you to see both sides of the market. So there's another example. Bow tie, you got a nice little pullback here. And that was the setup. And again, you can go into service, and these won't be blocked out. You can go to daylearner.com/archives or youtube.com/Dave Landry for those. Anyway, entry stop is here, initial profit target is here, 1-to-1 on the initial loaf. You get to break even once you hit that initial profit target, and then you trail that stop lower, and you can see this one stopped out for yet again better than a poke in the eye trade. Now you want to do your due diligence. What I would encourage you to do is find some setups that worked, find some setups that failed miserably. Okay, try to find at least 100. Okay, good, bad, and indifferent. A friend of mine years ago was telling me about this pattern he traded, and I'm like, well, that's kind of interesting. I don't know if it's conceptually correct or whatever, but it's interesting. How long have you been doing this? He goes, well, I just read about it this morning, and he was already putting real dollars in the line, and that's a big mistake. So you need to do your due diligence and figure out the nuances of this. And if you're trading bow ties to the downside and the market's going straight up, you're going to lose money. Okay, so make sure you wrap your head around that. Go through a bull cycle, a bear cycle, and possibly a sideways cycle. And of course, find some setups that fail miserably. The other thing too is make sure you're picking the best and leaving the rest. Make sure the stock is persistent, meaning it tends to go up day after day after day. Make sure that it trades cleanly as opposed to looking like an electrocardiogram. If you want to quantify it a little bit, or qualify it, as I should say, I have trend qualifiers I talk about, which is like wide range bars in direction of the trend, strong closes, and those aforementioned trend indicators, such as bow ties and the Landry light. And of course, you always want to eyeball the trend. Again, like Linda Rasky said, if you don't know where a market is headed, ask a 6-year-old kid. And make sure the trend again is significant, ideally persisting and accelerating too. Okay, and I'll show you a few examples of that. Now, the archives are a good place to start. Actually, if you go back in this presentation and look at those setups, and if you're really bored, go to my YouTube channel and look at the methodology and action playlist. And in those, I do a lot of walkthroughs where I show the persistency, the acceleration, and all the things I'm looking for in great setups. And that's kind of the missing piece that a lot of people don't show you. They'll show you their setup, but they don't show you the best ones to pick. And again, the archives are at daily.com/archives. And then if you want to see them live, you can go to daily.com/trading service. You can see my live recommendations. All right, so now for something a guru has never showed you. And this was a pretty good looking chart. All those things I just talked about. You had persistency. Notice that the stock tends to go up day after day. Notice that it stair steps higher. It goes up, consolidates, goes up, consolidates. Nice little stair step higher. So we get on thinking we could get that we'll have one more stair step higher in the trend. But unfortunately, it's fizzled out. Okay. Entry was there. Stop was here. IPT was here. We bought it. And then it failed miserably. Okay. So we're risking 2% per trade. So in this particular case, a little bit less than 2% risk on 100K. It happens, about with a silent SH. But it did move a little bit in our favor, so that stop was bumped up a little higher. Again, in an ideal world, just in case we don't have enough time to get through the money management, you want it to hit that IPT. This stop comes up to break even. Okay, even if that happens intraday, you want to get that stop up to break even when you take your profits. And then you allow that stop to gradually open up over time. Now, we did get a little bit of a dividend in this one, so that mitigated the damage, but of course, not enough. So it happens. All right, money management. This is where everybody's eyes glaze over, but I'll tell you this. I got a very detailed question about money management yesterday from one of my Substack subscribers. And it was very well thought. And I told him, I was like, look, when somebody asks me a money management question, I mean, everybody's a setup junkie, right? But if somebody asks me a money management question, that's a trader who's either made it or is very close to making it, because everybody's interested in the setups and we're all setup junkies. But money management psychology are two huge parts of trading, and money management will cure a multitude of sins. And where I got that line from is years ago, I was restoring this car. I worked on it for 12 years, never did get restored. We moved and downsized. My wife said, the car's got to go. So I put it in storage for a while, and I got tired of trying to work in a hot storage shed. So anyway, finally got rid of it. Anyway, long story endless, I broke a little piece off a little pipe that was on the engine. It was an old engine. And I went into the auto parts store and they laughed at me like, that's a 40-year-old part. And I actually went to the dealer to see if they had any old stock, and they laughed at me too. So I went home and I glued it together with something called JB Weld. And when I went back to the auto parts store, the guy I was friendly with over there, because I was in there every day, he's like, "How'd you fix that?" And I said, "Well, I'm embarrassed to admit." He says, "Come on." And he's an ex-mechanic. And I said, "Well, I used to JB Weld." He says, "Well, JB Weld will cure a multitude of sins." And money management, I know it's a long run for a short slide, but money management will cure a multitude of sins. If you're trading at a size that's small enough, then each particular trade doesn't have a material impact on your life, okay? And as I often say when I do more of the money management psychology speeches, I talk about money management and your methodology and your mind being a three-stranded cord. And if you get stronger at one, you get stronger at others. If you get better at stock selection, then you're going to be having fewer losses, okay? If you're managing your losses, then you'll have money for the next trade, and mentally you'll be more prepared for the next trade. And so if you're approaching the market in a way like, okay, this is a high probability setup, but I still could be wrong, okay? And then you're able to take the setup, and then the money management again is going to keep you from losing too much. So as you talk about one, they all kind of wrap together. Now the stop is based on the volatility of the stock. If you go in and look at my trading service, if you look at the archives, you'll see that there's a percent next to each position. And in some cases, you might have a stock that has a crazy high HV, historical volatility, and that stock is sort of all over the place. It's had some structure when we go in it, but it's super volatile. So it might require a 30% stop. And I've had clients who are like, I can't buy a stock with a 30% stop. It's like, well, it moved 20% just a few days ago, so that's what it requires. And I find if you take the scaling off the chart and just look at where your stop should be, it's a little easier to wrap your head around it. And believe it or not, trading a more volatile stock and trading fewer shares is or can be less risky than trading more shares in a less volatile stock. I did an article called Better the Devil You Know, Understanding Volatility, where I go into that in a lot of depth. You can find it on my website, daveleonard.com. But anyway, on a one-to-one gain, we're taking off half of our position. If the trend materializes, you're still in. And I even do this. I try not to do too many day trades, but I do some day trades. I got a few on right now. And what I'll do is I'll have that profit target and that trailing stop. And if that profit target is hit, there's nothing to do. I just let that trailing stop trail up the remainder of the day. And if I'm not stopped out, I get out on the close. Anyway, the great thing about dividing that position into two loaves, so to speak, is you can get the little swing trade profit out. And sometimes that's all you get. Like I showed you a few minutes ago, is better than the poke in the eye trades. And then later on, you still have that second loaf. And if you allow that to gradually open up to the volatility, the longer term volatility of the stock, that is, you could possibly stay with that position a long, long time. Now, in the end, it sucks, okay? All trades eventually and badly, you're going to give up some open profits. But hopefully, a word you should never use, but hopefully you'll ride out some of those corrections along the way. And if you go back and look at the TFPM and the KTOS and the KGC, two were along and one that we stopped out of, you'll see that we rolled out many corrections along the way. In the case of like the KTOS, where defense recently cratered, defense issues, we got stopped out, but in the end, we gave up quite a bit of profits. But if you look at the net movement, I think it was like 100%, 106%, whatever it was, that's a decent trade, okay? So you can't focus on what you lose in the end. But anyway, you're positioning yourself for Charlie Kirk, the trader, who's still with us, fortunately, that as opposed to the other Charlie Kirk. But he often says when he looks at money management, he wants that, I should say, he calls it free rolling, because you're able to kind of play with the market's money, so to speak, and let that position just work over time. If you go straight into a longer term position, there's some really bad problems there. And I always talk about the turtles, and I forget that the turtles were 20 years ago, whenever. But the turtles were a group of traders that were hired to see if trading could be taught. And they did amazingly well following a very simple trend following system, a longer term trend following system. However, after the program ended, the market stopped trending as great as they were, and a lot of the turtles didn't make it, okay? And I'm not being schadenfreude, because believe me, I get my buttocks handed to me quite often. I was feeling pretty good coming into this presentation, and now I see I'm getting whacked a little bit. So it happens, right? But the point I'm making is that longer term trading, you're going to be about 20, I think when I did the mechanical testing many years ago, you're going to be about 26% correct. Okay, so that means you're going to be wrong the vast majority of the time, at least maybe 75% of the time, 74%, whatever that comes out to. And your drawdown is going to be absolutely abysmal. But if you're my way to solve for that, because that's where the money is in those longer term trends, and that's why the turtles made so much money. But even the turtles found out like halfway through their program, they were risking too much, and they backed off the risk quite a bit. Kurt, if you read any books about the turtles, read the ones that were actually written by people in the program. That's just the way I feel about that. There's a lot of people trying to piggyback off the turtles, but Curtis Faith has two good books. I forget the name of the first one. It might be The Way of the Turtle, but the other one was Trading from the Gut. Both were really good, and they give you a little insight to the mindset of all that. I'd strongly urge you to read them. I think on my website, the link is davelandry.com/books-read for a list of books I'd recommend you read. Anyway, we're making the transition from the swing trader to the longer term trader. So 1-to-1 on the first loaf, and then we let that stop open out, up and up, and that's where the real money is made. We let that gradually open up over time. And then again, we let that stop slowly open up. Now, we're not moving the stop away from the market. What we're doing is, let's say the market goes up 3 points, and I say market because technical analysis. I trade crypto. I trade some futures, S&P futures. I think it's pretty much all the future trading we're doing now. And so crypto stocks and S&P futures and any other ETFs that might be related to other markets. Technical analysis. But anyway, we're going to let that stop slowly loosen over time. Let's say it moves 3 points in our favor. We might only bump that stop up 2 points, so the stop gradually opens up a point. And again, I have countless examples of all this. So if it doesn't make sense, you can go through those archives and it will. And we're slowly changing hats from the trader, the swing trader, to the longer term trader. I'm slotted as a swing trader. They put that in the title of two of my books, I think. But I will stay with a position as long as it moves in our favor. So you saw some that were put on back in April and May. We're still in those, knock on wood. Let's see how long we can hold on. And that's not by throwing caution to the wind. That's by waiting for the stop to get hit, which eventually will happen. Now we've come to the most difficult part of trading, and that would be you. A few thoughts on trading psychology. Trading psychology, the trading, I should say, is not very much like the real world. Okay, it's a strange place because, and I have a psychiatrist, a client that once helped me wrap my head around some of these things. Like, for instance, I couldn't understand why people who want the best in life, very successful people, doctors, entrepreneurs, engineers, etc., they want the best in life, but they take crappy trades instead of waiting around. And she explained to me that if you're a doctor, a lawyer, or automatic transmission mechanic, you can't take whatever, you can't pick and choose your clients, otherwise you would be out of business, okay? However, in trading, you could sit on your hands. And a lot of my trading service is telling you to sit on your hands. Like right now, I'm telling everybody, sit on your hands. Maybe tonight, I might find a great setup, maybe on Monday. But if I don't find anything that I'm going to do again, I'm going to tell you not to do it. So we're not trained for this environment. It's a completely different environment than we're used to. Now, attitude is way more important than aptitude, okay? A lot of times I meet people and they're engineers and, you know, doctors, lawyers, automatic transmission mechanics, engineers make the absolute worst traders. The only profession that comes to mind that actually makes for good traders is pilots, because they're used to a checklist and filling that checklist out. And I've actually done complete articles on that with a little help from Greg Morris about the pilot stories and stuff. But very important to understand that. It's also some neurology involved in trading, and there's not enough time to get into today, but remember that whenever you make a decision, okay, and that could be any decision. Oh, actually, we'll get into it. Even what you're going to have for lunch, there's some emotions and stress involved. And I tend to get a little sugar load here and there. I like to eat. I work out every morning. and I get really hungry. And if I don't watch myself, I kind of get a little spacey and sugar low and kind of angry. And I need to eat, you know. And so this morning, for instance, it's like, oh, I better eat for this presentation. But I actually started thinking, okay, what can I eat so I won't be belching in the presentation? I know it's kind of stupid or whatever, but it just goes to show you how every decision has an emotion and a consequence to it. And this is neurology, and this is inescapable. So if I start talking about psychology, you can say, well, that's not me, and it is, but it's not. You know, you think, okay, that's not me. I'm better than that, or whatever. But the bottom line is, when it comes to neurology, you cannot separate yourself from this. And I learned this from Denise Shull probably about 15 years ago. I was speaking in San Francisco at the TSAA conference over there, and she was also there. And I just thought this was fascinating. And from that point forward, some of my studies went into trading neurology, which I think is a field that's very important to understand. Now, how to fail at trading, okay? I know things aren't brought about by thinking about the opposites, but you need to kind of think about some of the things that could cause you to fail at trading. It's like you're influenced by the extraneous. Let's say you have a fight with your wife or your significant other or both, okay? Then you feel like, I'm going to go prove my worth. And I've never done this, of course, but I've heard of people who do this. It's like, you know, you get a little tiff with the missus and you're like, okay, I'll show her. And you go to the office and you try to outsmart the market and make some money, and you end up worse for both. You lose money, and your wife is mad at you. But anyway, there's so many extraneous influences. And I just talked about the eating thing earlier, right? I used to, and this happened time after time again, and you have to just kind of get to know yourself. And the great way to get to know yourself is through documentation. Obviously, your trading journal, but wake up every day and write 3 handwritten pages. That's my morning pages. I talk a lot about doing that. Stay analog as long as you can. Get that writing in. It gets a lot of those thoughts out of your head. It's very important to do. I think if there's one thing you could do to change your life for free, it would be that. I've told hundreds of people to do it. I don't know anyone that actually does them. If you actually do them, that would be great. If you got back with me and tell me how it worked for you, good, bad, and different. But anyway, through all that documentation, I realized something. I would go in to the house and eat or whatever, and every time I come back to the office, everything looked much different, and I found myself making these trades. And these trades, a lot of times I'd lose money on. And I'm like, what the heck is going on? Well, what happened was, it's kind of like the hangry judge effect, which I think is a guy by the name of Anwari. I don't know if I'm saying his name right or not, but he talks a lot about that in one of his books, and that was where the judges before lunch gave far harsher sentences, or were less likely to parole the inmates, okay, or the accused, before lunch as opposed to after lunch. And they figured out it was the hangry judge effects. The judge eats lunch, he's feeling better. And so that had a negative effect on my trading. So getting to know yourself, obviously very important. And that's kind of a neurology type of thing. And just document. Now, here's the good news. Early on, when I did some mentoring, like way back in the trading markets days, that was in the 90s. I'm from the 1900s, by the way. Whenever I'd work with somebody, I'm like, how am I could figure out what this guy or girl is doing wrong? And then so I'm like, oh, I was a little nervous about the whole process. So first person I worked with, I just asked them. And to my surprise, they told me, okay, so you know what you're doing wrong? You know what you're doing wrong. I had this doctor friend of mine who's also a client. We were talking a little while ago on the phone. We talk quite often, and a few years back, he said, I can't make any money with your service. And I'm like, okay. I said, well, we did okay over the last 6 months. We didn't print money, but we stayed above the water. He goes, no, I don't think so. So he forced me to go through all his trading records, which is something that I don't want to do. You know, you'll have to do that yourself. But he was very adamant about it, because we're friendly and you know, all disclaimers aside and everything. He just wanted me to go through it. So after I went through them all, I called him up and I said, I got some good news. I said, you followed every trade to a T. In fact, in some cases, you did a little bit better than I did with my own setup, my own recommendation, my own plan. You did a phenomenal job on that, and you made a little money, not a lot. It wasn't a great period of time. We don't always make money, okay? I'm the first to admit that. But it was kind of a choppy 6 months, and he was a little bit above water, you know, not a lot, not enough to brag about. But he had 20-something trades in Continental Airlines, day trades, which I don't think exist anymore. And he had like a $5,000 loss from that. And so I said, you know, without all those day trades, you actually would have been profitable. You did a really good job following my system. And to my surprise, he said, I know. So you know what you're doing wrong. And it's a tough business because the only person to hold yourself accountable to is yourself. And believe me, I'm guilty of bad behavior sometimes. So it's like the old doctor joke. You know, it hurts when I do this. Well, just the solution is simple. Don't do that. All right, so in summary, you want to find something really simple like Landry light pullbacks. You want to study the heck out of it. Find some good, find some bad, find some indifferent, okay? You want to pick the best and leave the rest. Is the stock accelerating? Is it persistent? Okay, how much Landry light do you have? Can you draw a big blue arrow on the chart, okay? And then, of course, you want to use proper money management. And make sure you identify and separate the extraneous. And believe me, there's always a lot of extraneous going on. I've got in-laws coming in later today. We've got a memorial service to try to juggle for, you know, twice in 2 weeks. You know, it's a lot of stuff going on. And there's all these bills that come in no matter what. I don't have a lot of debt to speak of, but it's amazing how expensive life is, okay, especially in this day and age. So you have all these expenses, you have all these extraneous influences, and then you try to do the right thing in the market. And sometimes the right thing, as I said earlier, is just sitting on your butt. And the more motivated you are, the harder that is going to be. The smarter you are, the harder that's going to be. My nickname in the industry is Trend Following Moron. In fact, my Twitter handle, I think, is T Following Moron. And that's because years ago, like I said, somebody told me where to stick my arrows. Somebody I really respected thought that the market had gone up enough, and he was fighting the trend, and I kept drawing the big blue arrows. And he got very angry at me, and it was an anonymous email, but I know it was. Anyway, thank you guys for being here, and may the trend be with you. If you have any questions, I'll be happy to answer them now. There's all my contact information. I do answer all emails. And I do pay attention to these other platforms if you want to hit me up on one of these other ones. I do also have a Facebook group. You have to at least be a gold member of daylearner.com to participate. I've made a lot of money off the group, okay? No guarantees, obviously, in this business, but we've got a few guys in there that are really smart, and they'll often put up some of my particular patterns that I may have overlooked or whatever, and it's just kind of great to have multiple eyes looking at the same thing. The group is free, but you have to at least be a gold member of daylearner.com. So any questions, I'll be happy to answer them. Thank you, Jeffrey.
I don't see a lot of questions coming in. If you have a question for Dave, let us know really quickly. Dave, how long did it take you to design your trend identification method?
Well, I think the trend following moron had something to do with it, because, you know, it was in the late 90s and was printing money, the market was headed higher. And after I got called trend following moron, I was pretty depressed about the whole thing. It's kind of like one of those don't meet your heroes thing. But then I learned that when I tried to outsmart the market or tried to catch every zig and zag, even though I was still a trend trader, I was doing these things. And I think when I finally accepted the fact that I'm nothing but a trend following moron, as this gentleman called me, then my life got a lot easier.
Okay, that is primarily the questions we've got. Great job today, Dave. Appreciate it. Thanks for coming in.
Glad to be here. You know, the only way to profit from a market, and this is some content that I'm always working on, tons of content, but some of the content I'm working on is the only way to profit from a trade is to catch a trend, okay? And this is something I talked about in the course I did years ago, but I'm starting to flesh that out a little bit. So if you think about it, why not just follow the trend and try to catch a trend? Even a contra trend trader, a new trend has to come along in a new direction. But like Leo Melleman once said, Mellow man, be a lover, not a fighter.
Cool. All right, Dave, thank you very much.
Thank you, Jeffrey, and thanks to MetaStock once again. Glad to be here.
Always good to have you. Always good to have you. Thanks, Dave.
You're welcome.
All right. Look, there's Norm. Let me go ahead and make me the organizer real quick. Yes. Oh, actually, let me make me the presenter. Let me try that first.
Hi, Dave.
Hey.
I think you and I are the only ones that mentioned the mental and emotional piece on all of
Yeah,
this.
that's a big piece.
A big piece. It's a gigantic piece.
It's the
Even if
piece.
you're a trend follower, you know. Even if you're a trend follower, you know, because you want to get the beginning of the trend, you know.
Right.
And the very end. All right.
Oh, good.
Thanks again, Dave.
All right, you're welcome.
As we-
Good seeing you guys. Good seeing you, Norm. Take care.
Good to see you, Dave.
Yeah. As you can see, the next guest is a very handsome Norm Hallett. Thanks for being here, Dave. Let me
Thank
go
you.
ahead and as
Try
we
not to
get,
shut you down.
all right, I'm going to push it out. There we go. Bye. Okay. I do want to mention, number one, if you haven't yet, join the community, www.thetradersforum.com. Norm, we should have you on. We do like these little podcast things where we sit around and we just kind of talk
Yeah, I'm a lively guy. I'm probably a good guy to have on.
about strategies. You know, it's fun. It's fun. Thetradersforum.com, you can join for free. Yeah, you can chat with people about the stocks you're interested in. You can learn about technical analysis. Lots of stuff up there. Lots of really cool things. Lots of good traders. There's people that are long-term, short-term, intermediate. There's even a little bit of crypto, not a lot of crypto up there, but you're welcome to come and talk about it. So
How are the girls? How are the girls, incidentally?
to come. They're doing great. They're doing great. Yeah, all of them.
Great.
All of the specials that we talked about, you can get at metastock.com/conf promo. We had a question in the chat about like what the special is. If you buy a month, we'll give you the second and third month for free for MetaStock. No commitment to keep it. Metastock.com/conf promo. Metastock.com/sales chat or 800-882-3040. Norm, would you like to help me give away a prize since you're here a little bit early?
You know, that is a pretty good question. You know what? I'm going to stick with just for this moment, the theme of the mental and emotional. Do you have we have a, in fact, I'm going to show it to you. I use it every day. This is a leather bound journal. It's gold leafed with the gold pages. They're blank pages. And we retail it for $129. And then generally, if you get one of my courses, you can add it on for $70. But let's give one of these away because this
is the first. I was going to give away one of my prizes. I wasn't expecting you to come up.
No, forget your prizes for this. I'm here now. I'm here now. So
yeah, just to confirm that was out of left field. I was not expecting that. That's awesome. So, what is the value on that?
$129.
Okay, $129. You're going to get a very nice looking. Tell me what it is again. I was answering a question in the chat.
Yeah, this is a totally leather bound, gold leaf journal, blank pages. So I always feel I collect journals for this reason. I go around the country. In Egypt, I bought a journal that was with fish scales as the cover. I just want, I want to be able to pick up my trading journal and say, this is important. This is a beautiful thing. So I made up these leather-bound, the Disciplined Trader journals with the gold leaf pages. And when the market is down, you can go ahead and scratch this off. It's almost $4,000 an ounce now, gold.
Yeah.
Scratch this off and probably pick up $200-300. Just get to the next day. But I use this every day. And in fact, when I get started officially, I'm going to, before I give the presentation, Dave just got me going now on the mental, and I just want to tell people how I journal 3 minutes a day so that, there's no more excuses. So, but this is the journal. And if however you pick them, just send me the email and I'll send it to you.
You're going to pick. No, to be clear, but I'll tell you how you can qualify. If you're watching us on GoToWebinar, like a bunch of you are, you're qualified. If you're watching us on YouTube, you may be qualified, but you may not be qualified. There's a pinned comment at the top that has a prize on it. It says to be entered, and you had to click on it to read the rest. If you click on that and fill out a registration form, you can be entered to win the prizes. And in this case, we are giving away Norm Hallett's journal. Are you giving away your journal or a blank one?
No, I can't. You know, that's not 129. That's 139. My journal, but let's go $10 more. Actually, today's worth a lot. I had a good day today.
So I need a number from you. It can be 2, and it can be anywhere between 2 and 6,399.
Let's take 3001.
That is.
That's
Oh my
what
goodness.
I was up for today. 3001.
This is a person in the USA, and I'm going to try and not butcher their name because it's Akid Nachi. And it's done the last name. It looks like it might also be a Japanese name, but Akid Nachi in the USA, you just won a prize. So, and you won that prize. So, Norm, I'll get you that information right now.
You saved me money with domestic shipping. Appreciate that.
Well, you saved yourself because you picked the number.
Yeah, it's only priority. Overseas, it's $30 to mail this to somebody. All good.
All right, here we go. Let me go ahead. Let's make you the presenter here. Make the presenter. Norm and I have known each other for a number of years, and a great presenter today. He's going to be talking. What are you talking about today, Norm?
I'm going to be talking about. Can you see my screen?
I can. Yeah, prop trade success.
That's it. We're going to talk about prop trading success and how that all works.
Okay.
Let's see. I've got my camera on. Is that showing or no? Not
yes.
that
Yeah. We can see you.
Okay, great. I guess I can only see what I'm looking at.
I will get out of the way. Your turn. Go.
Appreciate that. I want to give people, Dave inspired me, even mentioning the mental and emotional piece. So I'm going to give you, and you'll see it. Listen, the disciplined trader is all about the discipline of on the mental and emotional piece. But I want to give you my 3-minute. It's 1 minute in the morning and 3 minutes in the afternoon. Here's how I journal. So there's no more excuses. I don't look at all the data or whatever. Here, and I got this from the 1 Minute Manager, which I used to use when I was managing some large option firm. What you do is when the day is over, you start with what good happened. Okay, there's 3 parts to the entry in the journal in the afternoon session. The first part is you just state what happened today. Today I followed my trading plan perfectly. I took every signal and managed every trade perfectly. Oh, I managed the majority of my trade perfectly. It's got to be something you want to correct. Let's say so you start with even if you did nothing, even if you had a lousy day, you may say I showed up today. I showed up on time and I didn't overtrade. Okay, so that's your first statement. Something I had a good day today as I didn't overtrade and I showed up. Then you pick an area where you need improvement. Today I was impatient and I took 2 B-level trades because I was just too impatient for the day. And then the last piece is the corrective piece. Tomorrow I will have ice in my veins. I will be the disciplined trader. And so you start with a compliment. Then you have your critique. Don't kill yourself with the critique. Just mention the issue. Today, I overtraded, or I didn't wait for my impatience came out in a couple of trades, and I took B trades. Tomorrow, I'm the ice in the veins king. And I always end with, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, so there it is. That's the entire. So what you've done is you affirm the fact that you did your best and there's something good that you did. Then a critique of yourself without killing yourself, without really beating yourself up, and then the statement of correction at the end with I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. So that's what you do in the afternoon. In the morning, the next morning, you take out the same journal and you open and see what that last sentence was that you made in your last evening, and you restate that. Today I'm on the ice in the veins king. I'll have the patience of a saint. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. So you just take that affirmation that you stated from yesterday and you reapply it to the morning before you start trading. That combination, believe me, it can change the outcome of your performance. Okay? Compliment, critique, correction. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And then in the morning, restatement of the new you. Okay. All right. Well, thank you, Dave, for taking up 5 minutes of my presentation. But that is very much worth it. Anyway, this presentation really is all about the evaluation and the path that you can take to consistent income. And I'm going to weave some of the differences between retail trading and prop trading, but this gets a little bit deep, so I really want you to stick with me here. My book just came out last month. It's a soft opening, came out the last week of last month, called Their Money, Your Profit. It's a great introductory book, or something that kind of really, if you've been struggling, it kind of sets you straight on what's going on in prop trading, why it's good, some of the differences that you need to have when you to employ than retail trading. So pick up the book. It's not inexpensive. It's $14.99, and I think the Kindle version is $5. So put this on your bookshelf. It's actually almost a pocket book. It's only about 70 or 80, maybe 70 pages long. And I'm writing a series. This is the first one in the series. I think you're really going to like it. So let's get into the prop trading success path. And first of all, if you don't know anything about me, whoops, did I just, let's see, did I not share? Is that what I did? Let's see what's happening. Yeah, I think I'm just going to do this. Okay, people can see me. Okay, go to webinar. It's very very extensive. Let's see if I can just do that. Yes, okay. I think I just pressed the wrong button. Listen, I've spoken at dozens of domestic and international stages. That's really where I met our host today, and I've been doing it for 4 decades. They usually put me on first because I can be an energetic guy, as you're probably going to see in this presentation. So I've written 4 books. This is actually the 5th book, and dozens of industry papers. I just wrote one recently. I seem to write one every couple of months again. I do them upon request because I really like to continue to be involved. It gets me thinking again. Most of my papers focus on the building and running of responsible trading plans. I'm known for infusing the importance of the mental and emotional piece in my talks and writing. And in this room, this is actually a picture of the 1990s, but the room I ran one of the largest option firms in the country back in the 80s. And this is not a perfect picture. It was very close to the way the room looked. And there were 63 traders, plus I was responsible for 3 other offices, which I had the biggest office. There were small, but whatever. The idea is that I learned from managing these independent traders who were trading money for individuals, and they were responsible for their production as far as profitability was concerned, that simple trading plans work, and every trader is different. Every trader is different. There are no 2 traders alike. You're kind of a combination of you are a product of your background, of where you've come from, not in the trading world, but from the personal world. And that stamps you for certain areas. And that's why I always include one-on-one coaching with my programs, of which I'm going to give you an offer at the end that's very special here. This is really an early bird pre-offer to my Black Friday offer, but this is a sweeter offer. In any event, what I learned here was that simple trading plans work. You don't want to have redundant indicators. I mean, why have an RSI when you have a MACD? That doesn't really make any sense. Because they're both, technically they're just slightly different, but they're both momentum indicators, and really you need to choose one. The more indicators you have, the more hoops you need to jump, the more confusion there'll be when you have, say, 3 or 4 primary hoops being jumped and one that's a minor hoop that you has hesitation, the market moves and you're chasing it. Simple is good. So the first thing I always do when I review trading plans, and I still write them for professional traders when requested. I just did one again last week, and I had my red pencil out, my red pen out, and just, you don't need this indicator, you don't need this indicator. Whether you see my charts in this presentation, you'll see how reduced my indicators are. Okay, let's get to the fast track for trading independence, because this is really where we're going to spend some of our meat of our time here. There are 3 general parts, and I'll give you the first part now. A simple trading plan has to fit you phase, okay? Because again, you are unique. So the first thing that you need to do is find and employ a simple, proven trading plan that's built for prop trading. Now, I say built for prop trading, and I'm addressing all of what I say really applies to most other ways of to retail trading, but I'm zooming in on really the things that you must do as a prop trader to make your life a lot easier. Okay, and it's a result, and the suggestions that I give you really is a result of hearing why people struggle, looking at their trading plans and realizing that if they employed such and such, and I'll show you some of those things, then they would have done much better. But find and employ a simple, proven trading plan that's built for prop trading. I'll give you for instance. In prop trading, most traders look at the wrong thing. Most prop traders are looking at their equity. I'm going to talk in the version of a $50,000 account. I happen to trade with Apex. I'm also with Top Step, and there are others that I'm taking a look at. But most of my accounts are with Apex, and they have a red line. Most have a red line. This is a blowout line. So you start with a $50,000 account. That'll be you can have multiple $50,000 accounts, but let's talk about the one $50,000 account so we can isolate the point. 5% is $2,500. So if you breach 47.5 in a $50,000 account, you're blown out, and you got to pay again to get into the evaluation stage. Now, it's not a lot of money. Generally, it's anywhere between $30 and $50 usually to open your $50,000 evaluation account and start trading it. And even when you get into the stage of funded account, it's a couple of $100 to get you started, and that's the end. But people who struggle continue to pay these small fees. 90% of prop traders, just like 90% of retail traders, they're just paying the prop fees, and so they can give me 90% of the profit. They actually give you 100% of the first 25,000 in many of these prop trading firms, and 90% of after that. So how can they give away all of the profit that you're generating? Isn't that what they want? And the answer is no. What they want are the fees for the strugglers. So you need to get into what we call the top 10%. Okay, so find and employ a proven trading plan that's built for prop trading. Here's an example. In prop trading, people are looking at building that equity so that they qualify. So in the evaluation stage, you have a $50,000 account. You're trying to make it $53,000. You've got to make $3,000 and close out the position. Once your account has a closed equity of $53,000, you're awarded actual account for $50,000. Okay, but to get there, you've got to make that $3,000, and in the meantime, you can't breach the red line. But here's the rub. in many of these, and I think in the better firms, they count the loss of open trade equity against you. Now, what do I mean by that? I mean that if you start in that $50,000 account and you make your first trade, and it goes up to, and you have an open trade equity of $1,000, okay, and you allow it to come, you put a break even stop in because you want more, and it comes all the way down and breaks your and you break even. Well, if it was your own account, you'd say, I'm a jerk, I should have protected the 1,000, but okay, I still have all my money. Well, prop trading firms don't like that. That's really not, if somebody did that in my room, they'd be out the door if they did it too many times, giving away a 2% or over a 2% or almost a 3% gain. You can't do, actually it's a 2% gain, you can't do that, okay? So what you do is, what I suggest that you do is, well, I'm sorry, the most important point is that $1,000 that you gave up in my example, they count that against you. So now instead of a $2,500 floor, you're only looking at a $1,500 floor. So the open trade equity that you give away is now counted against you. It moves that line up to you. So you've got to secure open trade equity. That's my point. That's a plan that's built for prop trading. I myself have never been a scalper. Now I've trained scalpers. I've written trading plans for all people that only scalp, but I never have. Well, now I'm a scalper, as well as somebody who likes to follow the trend and run, like Dave was saying. So what it is what I suggest is that every time that you take a trade, you put on at least 2 positions. Okay, you 2 contracts in a position. Okay, the first contract is a scalp. Why do you want to scalp? Because you want a trigger that allows that market to pop when you put it on, so that you can take your scalp. And I'm not talking about $10. I'm talking about $100, $150, something that you can put in your pocket that keeps you away from the red line. You see, when you take a scalp and you capture open trade equity, that pushes the red line away from you. Now, you'll never get it further than 2,500 away from you, but it'll help you to continue to trade comfortably, because uncomfortable traders are the traders that lose. And therefore, the focus, my first recommendation or statement was that traders focus on the wrong thing in prop trading. They focus on growing their account from 50,000 to 53,000. That's not where you should be concentrating. You should be concentrating on what it takes to stay away from the red line, so you stay comfortable and disciplined when you trade. Okay, it's a lot said, and without much to look at but me pointing. But I hope you understood what I'm saying. The first trade is a scalp, so that you grab it. I like to see you use a limit on a long trade, say, or on a short trade, but I'm pointing up here. You use a limit so that you capture all of the open trade equity, and there's certain measures we give you to figure out exactly where you want to put that limit to capture the open trade equity, depending on the environment. And again, that's another discussion. But once you capture it at the high, you're taking all that open trade equity and putting it behind you, padding your distance from the red line. And then you have one more contract on. You move your stop to break even from where it was before after you take your scalp, and then you manage that runner. Because look, as traders, you know, we want some nice, we want to say, hey, I made 500 in a trade today. I made $1,000 in a trade today. But we're always looking for more, and that's not a bad thing if you control what you're doing. And one of the ways is to do what I'm asking you to do. The other thing is that when that runner starts to increase equity, you want to then defend that equity so that you're not giving away more than 70 or 75% of the equity that you've built. And there are ways of doing that with moving averages. So anyway, that's a lot to say with the first unit here, but I'll move a little bit more quickly because I probably covered a few of these other points here. The second point in the UR unique areas is every trader is different, and you need to define your strengths and weaknesses. And the importance of that is that, you know, and we've done this too, and we still do it to some degree, but rather than looking to take a weakness and make it a strength, That's a very, very hard thing to do. What's much easier is to take that weakness and nullify it. That's it. You don't want it bothering you. You know, if you're an impatient person like I am, you're probably never going to be patient, but you will be patient enough to be a good trader. Okay, so when you identify your strengths and weaknesses, you want to build on your strengths. That's much easier to do, to take what's already part of you and increase that even more and nullify your weaknesses. But the first thing that you do is you need to define that, okay? And then, you know, we have, we're actually still I'm sure we're the country's, if not the world's leading firm in helping traders with the mental and emotional issue. It's not a big thing to say because there's not a lot of firms that do it, but we are the best. Okay, so if you need help in that, you can get a hold of me at thedisciplinedtrader.com. Just look at the place where you can leave a comment. In any event, the third area in this you are unique is you want to match your trading plan to you. In other words, if you're a person, let's continue the example of not being very patient. We have a nuance now, and I invented nuances about 30 years ago. Nuances are small changes that you can make in your trading plan to honor who you are, to fit the trading plan to you without adding any undue risk. Sometimes it adds a few ticks, sometimes it doesn't add anything, most of the time, but it's a technique that I'll give you an idea here of what a nuance is. And even though these are not one of the official deeper nuances here, if I was as a trader that always has to watch his patience, if you trade multiple markets, if you get to the point where you have a simple enough trigger where you can see different, you can take a look at different charts, as opposed to focusing on one market and waiting for that trigger, you can have 2 or 3 markets, and you'll get the trigger 3 times as fast, if you understand what I mean. The more you're exposed to different charts. Now you can't do 7 or 8. I actually look at 5 charts at the same time when I'm looking for my setup. I always want what I call sweet spot setups. But you don't have to do that. We have plenty. Yesterday, I'm going to show you a chart where yesterday in a 2 or 3 hour period, we had 5 triggers on a 5-minute, or in a 2-minute chart. I think it was in the NASDAQ. We'll take a look at when I see it. But the idea is that you want a frequent, reliable trigger. Okay, you want a so if you are a person that has an issue with with patience, you want to have a frequent trigger. You want to use a trigger that comes up all the time. Okay, you don't want to have a system that doesn't. So again, looking at reducing your time frame is another way that you can honor the fact that you understand yourself as a person without patience, because a 2-minute candle chart will expose more triggers than a 5-minute. Now you make it shaken out a little bit more because it's a little less steady, but the difference between the 2 and the 5 in my experience is only about 2%. So if you have a trading plan that was tested in the 5 to 10 minute candle like ours, which hangs around in the 67 to 70% win on the scalp portion of the trade, and then 1 out of 3 trades you'll get a nice runner. So if you can find a 67% shot there, that's the frequency that you really want to look for. Okay, and when you move down to from a 5, it was tested into 5 and 10. When you move down to a 2-minute chart, candle chart, okay, that is going to reduce that 67% to 65%. Every trading plan you've ever seen will ever be built is most effective in the daily, a little less effective in the 60, a little bit less effective in the 10, the 5. The only real gigantic gap is between the 2 and the 1. The 1 minute, I really suggest that most traders stay away from that. Okay, especially anybody who is of retirement age or close to it. All right, positive expectation. I got to move along a little bit here. Positive expectation. This is installing that winning mindset. Okay, you want to understand the why of your trading plan. And what I mean by that is why is this trigger? Why is it asking me to buy? And I'm going to show you one of our triggers. And why are they asking me to buy or sell, to take action when this trigger appears? You know, I need to know exactly what it is. Not that I've tested it, but why? And because when the going gets tough, the doubts in your head start to multiply. And so the most important thing is that if you understand exactly why you're doing what you're doing, that will eliminate these negative ideas from floating into your head. It's very, very important. So you need to understand, and that's why a simple trading plan works, again, much easier to understand, much easier to adopt, much easier to marry, much easier to run, okay, and much easier to profit from. Most important thing, okay? You want to model a winner, okay? We've had the disciplined trader now since 2000. That's when we started. Only in the last 4 years, 3 or 4 years, I've concentrated on well, 5 years of that. The last 5 years, I've gone from what we were exclusively the mental and emotional piece to back to trading plans, because we were getting people disciplined to a lousy trading plan. And since I was a trading plan guy for the first couple of decades of my career, I decided, let me build a trading plan based on what I see as far as, you know, internet traders, which can be a different animal. And so that's where I built the first version of Loaded Gun, and then adjusted it about 2.5 years ago to fit perfectly for prop trading. So you want to model a winner. And when you because when you struggle, or when all you do is lose and keep refunding your account, it becomes a habit. It's a habit. And so when you model a winner, and when you see a winner winning, and we've got one in Danny DiMaria and his son Matt, who run our new trading room. It's only been around for about 4 months now. This is the 5th month, and we've had a beautiful profit every month. Over 3,000 yesterday in a $50,000 account. Over 3,000 last month. He's very conservative when he trades. I've kind of asked him to be in the trading room, and you know, he was a former floor trader, CBOT member and floor trader, and just retired last year. I'm going to show you a picture of him in a second, but watching him in the trading room take his trades without hesitation, without even thinking about it. The setup comes, he takes the trade, and then he manages the trade. He doesn't think, should I not? You have to see for yourself somebody winning day after day. And when the greatest comment I get about Danny is that when he starts off with a couple of losing trades, it does not faze him. He continues to go and recovers and has a winning day. There was a book written called The Best Loser, Best Trader is the Best Loser, something like that. There's a lot of truth in that. So we have set up this trading room, okay, that I'm going to give you a couple of weeks free in it if you take my offer, and you can take a look at it. And even when it's not free, it's $99 a month. It's one of the most inexpensive rooms, and I think the best trading room out there. Okay, for many, many reasons. Can't go into that, but when you model a winner, what you can do is you wind up ingesting that, and all of a sudden, and what you're doing is creating neural pathways, and those neural pathways create a neural net. You say, boy, he's really good. Got to do that. And there's again, I'm going to do that. You know, when you start taking in the positive things and you're saying, this is me, this is what I'm going to do, it creates a neural net. Those are each neural pathways, each thought. The neural net then becomes your dominant response mechanism when you go to take a trade. You're operating now from, I'm scared, I lose, I struggle. But when you start operating from a winner, that's when you become a professional trader, somebody who has trading independence, okay? So you want to join a trading room. You want to join our trading room, and you can only join it as a member of Loaded Gun, which is our trading plan. And I want to give you 2 weeks in this, okay, just to experience it. You're going to want more. We have an 87, over 5 months, I've never heard of this high, 87% stick rate in our trading room. That's a crazy figure, and you're going to see why when you're in the room. Anyway, begin weaning yourself off the trading room. I don't like to see you, once you have it down, and I like to see you spend, say, 4 days in the trading room when you get started. Start to see, it runs a few hours a day, see what winning is like. when you get that feeling, when it starts to, and I'll show you a testimonial that shows you that, people start absorbing these. It starts becoming you when you see a disciplined trader winning. Okay, so when you start feeling it, 4 days, then maybe the second month or the third week, go to 3 days in the room and trade 1 day on your own. Do it on your own. See what happens. See if you're there. Whoops, I did. Go back to the room for those other 3 days. Okay. Then when you're feeling stronger, 2 days in the room. And 2 or 3 days trading, depending on how many days you're getting my point. You want to wean yourself off the room. We have probably 10% of the people who are paying me for the room, okay, and not going. And I ask him about it. He says, no, don't. I want to know it's there if I need it. If I need a jolt, I want to be able to go in there. So use the trading room as a tool for you to be a better independent trader. Okay, so you are unique. You need to install a winning mindset, and you need to head in the right direction in your head. Okay, this is the independence phase. You want to build a stable long-term income. Trading as a business, okay? Trading as a business, and trading, because you got to frame trading as a business. You want to keep in mind of your statistics, what you've traded and how it looked, and your mindset. Both are the main elements of what you, in a business, the same way. Okay, if you take a losing trade if I have a business that I'm selling widgets, and I put an ad in the paper, buy my widget, nobody calls. Okay, that's a loser. But I'm never going to run that ad in that paper again. Okay, same thing. I lost. Did I follow my trading plan? Fine, I'm good. Did I not follow my trading plan? I may be mentioning it in my three-minute journaling later today. So business, trading as a business, and there was a book written, if you ever can get a hold of it, the late Joe Ross, and I know you know who he is, last year, he's a good friend of mine, and one of the guys that really appreciated the mental area, and he wrote a book called Trading as a Business. I think it's an oversized book. That's the problem with it. It doesn't fit on any of my bookshelves. But it really is a good framing of what we need to do. So you need to take this seriously, okay? You want to have the turtle approach. You want to go step by step, okay? You don't want to, rush into. You want to just be a consistent winner and controlled capital growth. And you want to. This is the long game, okay? Long-term income planning, building your personal money machine, okay? And I just want to make one statement, that if you're prop trading and all you're focused on is to get that evaluation state through and get funded, you're focusing on the wrong thing. The main thing you should be focusing on is, I want to build a long-term dependable income. And to do that, I need to take these minor steps, okay, these small steps. One of those steps is opening your account. The next step is passing the evaluation. The next step is funding your funded account and getting past the point where you can start getting checks. The next step is to diversify your $50,000 accounts. You'll have multiples of them likely, so that you can spread the risk on all those, so that if you have a bad month, you can still take money from it in a dependable way, because a bad month wasn't reflected in all of your accounts. So when you're doing this, it's not I want to pay, I want to get funded. Yes, you do want to get funded, but really, when you start, in the beginning of the day, I'm building a strong, long-term dependable income. Okay, I know you probably haven't heard a lot of what I'm talking about here, because again, it's laced with mental, but I've given you a few things. Let's get into some of the more technical things. So the issues getting in the way of receiving consistent payouts. Open trade equity penalty, I've described that to you. You're likely focusing on the wrong thing. Don't be looking at how much did I make today? No, how much did I pad my distance from the red line today? Because by padding your distance, you've had winners. Okay, so you want to focus on staying away from that red line so that your trading is comfortable. Okay, how to utilize the scalp runner combination. I mentioned a little bit about it, that you want to take that open trade equity early so that you pad early, and then you can more relax and let that runner go. Give it a little, but as it put in that break even stop, and as it runs, when you get that 1 out of 3 or 1 out of 4 runners that starts to run, then you want to preserve, tighter as you go up. And my students know what that's about. Again, in a very simple way. Okay, you want to pad, it pads the pressure. You want to pad that distance from the red line, and this takes the pressure off the runner. The other issue that's getting in the way of receiving those consistent profits that I want you to focus on is traders are isolated. Okay, it's easy to veer off your system, as Dave was saying. Things happening all the time around you, but it's easy to veer. You have no accountability, leads to over trading, revenge trading, and lack of patience. Listen, we're isolated as traders, which is why we have the trading room where we all get together and you can actually ask questions live in the trading room. And we also have a new school community. We have a community that we're going to have some contests. We don't have any yet. We're putting that into play, but I have some of my papers, my assets that are additional bonuses, but it's mostly a place where we can answer questions, get feedback, and it's a great community, and people love it. Okay, we only started it a few weeks ago because I wanted more for people, and it's just been great. And the other issue that gets in the way of receiving that consistent profit is struggling and having that losing become a habit. And I've gone into that a little bit with you. So winning is a habit too. Positive expectation is essential. So I want to show you what I've got for you, and while I explain why I think you should grab this, okay? This is what I call the prop trading total package. It addresses the plan, the support, and the community. These are the 3 areas that if you have a solid plan and you have the support, working with me one-on-one, working with Tisha one-on-one, going into the trading room, and you have the community where you don't feel alone, where you see people doing the same thing, having the same goals as you. It's funny because I'm in this community called Focus Blocks, where I pay like $700 a year to be in this group, where all we do is log in at the top of an hour, and it's an hour block where all we do is focus on. We state what we're going to focus on. Everybody has their little, we're all doing different things. The focus block is about keeping attention and keeping focus. So we log in at the top of the hour, we state what we want to do for the hour. We do a little stretching for the first 5 minutes, and then 50 minutes of specifically on what we want to work on. And then at the end, 5 minutes, we share our successes. Focus is lacking horribly to a large degree as an isolated trader. When I focus, it's not when I'm trading. I use the focus block for running my business. But the idea is that plan, support, which includes helping you with the focus, and the community where you share ideas and learn from winners. I mean, we have people collecting checks. You can talk to them. You can buddy up with them. We have other things that you can do. So I want you to be part of this community. So let's focus on this slide on the plan, the loaded gun simple trading plan, tested and proven. Now here is I just want you to witness what I think this is let me put on my glasses here. I think this is the NASDAQ chart from yesterday. Okay. I was putting this presentation together for you yesterday, and you can see that this was actually about a 4-hour period. But when you have a frequent reliable trigger, what this is, I'm not going to give you the exact proprietary averages we use, but this is a longer term average than this one. This is a shorter term, longer term average. Let's call it the 50 and the 20. It's not, but it's shorter than that, but 50 and 20. So I will not take a short trade unless the 20 is below the 50, unless the shorter term moving average is below the longer term moving average. Why? Because it's part of what is an element and the definition of a trend. Okay, and so won't go into, again, I can explain more why when I have more time to deal with you. But the idea is that I will not take a trade that will, I won't take a long trade down in here. Okay, And I won't take a long trade in this entire screen because it was over a little bit, but I'd like to see more. The places of opportunity are when you get the squeezes of these, of the two moving averages, the shorter and the longer term moving average. Here's a squeeze. We got a breakdown here, another, a nice one here. Here's another one. And I'm gonna, this right here, this formation right here, can you, I can't blow it up, but hopefully you can see this. It's a two candle formation, a very short, this is a short spinner or a doji, which would be perfect, and then a breakout candle through the shorter term moving average. You can see it looks like a revolver pointing down. That's why I call it loaded gun. My wife hates it. Maybe I shouldn't have named it that, but looks like a revolver, in this case, pointing down. You got one here. You got a smaller one here. This is another signal that we have. But here's one here. And what I do is I wait till it closes and I make the move. Now, what's important about the loaded gun trigger? Well, how did I figure it out? This is the why that I talked about. The why is, here is a non-committal. When you have a small range in a bar, this is a 5 minute, this is a 2 minute actually. When indecision followed by decision. Okay, I learned this from watching the trading floor. When I used to go down and take a look in the glass and look down at these guys, they're smoking cigarettes. They used to anyway. When they're in on one of these spinners, and then boom, it comes down. And everybody's jumping up on the steps. I know that there's a trend trying to be established. Here's where I take my position. So a little bit more on why, but I want you to understand. You need to know why you do things. Okay. Here's another one. Here's the other one I mentioned. 5 beautiful triggers. This one got you the scalp and a little bit of a run. This one got you the scalp and a really nice run. This one got you a scalp and a really nice run. The scalp, and so you got 3 really nice runs and a trigger and 5 scalps. I'm saying to you that if you have a frequent, reliable trigger and you apply the nuances so that you fit the trading plan so that you can recognize them and run them, you got a trading plan that's going to work for you. So let's take a look at the, again, here's another, this is, actually that was the day before yesterday. This was yesterday, and this is in the gold market, I think. Let's see. Yeah, because I had these, but look at these triggers. Look at these short trades. I just wanted you to know that this is not just a one, and I'm not cherry picking. Look at some charts, you see what I mean. Prop trading, total package, plan, support, community. Let's look at the support. I want to give you 90 days of unlimited one-on-one coaching. Okay, I want to make sure that you understand the program. I want to, even though it's a simple trading plan, I want you to understand why, because I've kind of teased you on how to get in, but please don't do it based on what you see there, because it's got to be in a certain environment. But really getting out is equally, if not more important than getting in. And I've got some very, very effective, simple ways to do that for you. So, but I want to make sure you understand it. So when you purchase today, understand that the 90 days unlimited doesn't start until our first meeting. So look at these quick videos that you spend some time in the trading room, spend some time in the community, whatever you want, and then have your first meeting with me when you think you kind of got it down a bit, okay? And then I want to shore up your understanding of this simple trading plan. I want to make sure that you understand it. You've got the live trading room. You want to learn how to win. We've talked about that, developing a winning habit and having that positive expectation. Run by Danny DiMaria, former independent floor trader and CBOT member, and his son Matt, who does really, really well. Made more money than we did last month. I know I wasn't trading a whole lot. I mean, enough to probably make more money if I should have than Brad, but he's a very good trader. Son, and the son actually has taken over from his father. His father is an excellent trader. Where do you see him? He and his Matt. Matt has these Matt levels that he talks about. And so he kind of throws that into the system. I think people really love that. And you want to eliminate your primary mental and emotional issue. This is the biggest point of support, I think, besides the trading room and the 90 days coaching. It's equally as important. I'm going to give you a private one-on-one Zoom session with my wife, who is one of the world's top subconscious trainers. I'm saying world, not country. Okay, been on the cover of most of the psychological magazines. She will spend the better part of an hour with you, and ask you the kinds of questions that will help you you might not even know what your issue is. Believe me, it happens more than just a couple of times. Once she identifies it, she will record for you a meditation, a subconscious training, let's call it a meditation, that you can take before you start trading to help starting instilling that habit into you, creating those neural pathways, creating that neural net that will supplant the neural net that you've already developed that's not working for you, okay, in an unguided manner. So I want you to have that one meeting with Tisha. The company charges $500 to professional traders. We give it to our loaded gun traders for $250 for an hour with Tisha. It's the best money that you'll ever spend. I'm going to give you a session with her, okay? So this is total support, okay? Let's talk about community, okay? The school community, we put it in school so it's simple to use. I put it in school because it's simple to use. When I say simple, I don't like complications. I'm of retirement age, and I don't want complicated things. I want a bar at the top that tells me, where the assets are. I want where the chatting is. If I want to talk privately with somebody, I want a button to press. I don't want to have to hunt around. School is a great seniors place to be. So I made it in school, but it's very comprehensive, very good. And we're building it out. We've only been in it a couple of weeks, okay? But we already have, I think, 100 members, and it's just great. I can see what's going to happen, and we just want to support you. And people are already buddying up. You can meet somebody in there, and boy, that guy thinks like me, that gal thinks like me. Let's make each other accountable. So there's a lot of stuff going on when you have a community. Okay, we post, we comment, we reply. Me, Dan, Matt, and Tisha, everyone is in the community with you to share tips and ideas. What I've been doing is I've been reviewing my day in a commodity. For instance, that gold chart that I show you that I did really well that day. I mentioned what I did in one of the chats and showed a picture. So we really want to get you going in a winning mindset. You get to ask questions and you get answers. You're going to find a trading buddy for accountability if that's what you want to do. You're going to learn from winners. Julie, who's taking a break from trading, she's made plenty of money. You won't see her, but she's taking all kinds of payouts, and you'll be able to talk to others that are getting payouts. And it's a community that's built for non-isolation. Listen, it's not easy being a trader. If you simplify things and you've got support and a community, your path will be much, much better. Jeff Sasser, I felt burned out for a very long time, multiple systems, etc., etc. Easy, yes, it's easy, and yes, simple to understand. Loaded gun giving me the edge. That's one of the things we talk about, getting edges. Many thanks to Norman and knowledge and friendship. Here's Brian, who was a pretty good trader before, but he was getting stuck. I'm up over 10,000 in 7 days on a $250,000 account. Thank you to Loaded Gun. And here's Ted, one of our long-term clients. Loaded Gun is simple to understand, set up, easy to follow rules. Takes me less than 5 minutes. Okay, after following, you join the percentage of traders that make. I think he's more trying to be nice to me as well as saying how well he is. He's just really a loyal person. He's come a long way with us, so he's really great. Here's Danny, good-looking guy. He was the mayor of Morton Grove for 12 years as a floor member. Then he became mayor, and now he's retired. And he called me. He actually picked up one of our mental and emotional things 15, 20 years ago, and he called me. He remembered us. He was still using it, and said, hey, I want to run a trading room for you. I'm retired now. I'm no longer mayor. I got time. I want to do this. So he's the guy. And he's the moderator with his son, Matthew. Okay, a couple of comments about that. He says, I want to take a moment to let you know how amazed I am with Dan's LG trading room, Loaded Gun. I booked 3,300 across 2 of Al accounts this morning. I didn't expect this, but I can feel myself borrowing discipline and patience from them. This is what I talked about. That's why I picked this particular testimonial. He kept me out of trades I think I would have taken. The learning experience has been incredible. This is a fantastic thing you guys have set up. And David said, Loaded Gun, simple trading plan. I want to send you a quick email, let you know that the Loaded Gun room is really fantastic. Dan and Matthew are teaching me so much every day. I can't I can already see that I'm approaching the trading futures differently. I have several profitable trades already, even in the last 2 days. So, okay, this one just came in last Friday, a week ago today. My friend once told me that, Julie, you are the best trader I know. You're the worst, and you're the worst trader I know. Like 97% of trading world, I've had some bad habit. I've got some bad habits, not getting out of the losers, adding to losers, revenge trading, over trading, combination. For me, I have the knowledge of that. I have knowledge of this. Again, that's self-assessment. However, knowing and execution are two different things. For me, this trading room is priceless. With the encouragement and psychological help from Dan, Norman, Tisha, they help me to become the best trader I can be. I have reached multiple payouts and recently got kicked to the live with top one. That's the greatest payout level with top one futures. They helped me get there, which is us. And thank you from Julie. Now, the sad part is that Julie is the person that's taking this vacation. She just always takes these months, the last 5 or 6 weeks, because she just enjoys the money she's made and gets herself geared up for the next week. But she'll be back in January. So Julie is just one of many traders that are doing this. Again, let me give you the specific loaded gun package, and then I can take any questions if they're ever, because I really want you to, again, there's 10 of these available, or it'll end either today or when 10 come in. It'll be gone by tomorrow, because if you don't take it today, I'm making a presentation somewhere tomorrow, and they'll take the rest of them. But I wanted to present here first with this, because and the reason it's limited is because I've got a limited calendar, and all of these one-on-ones, we've got to, you can't take more than 10 new people, and we're excited to be able to be in that position right now. Everybody else is kind of on their way, so we can take on some new people. So here's what you get. The loaded gun simple trading plan fits on one sheet of paper, only about an hour and a half of videos, including all the chart examples. It's a very simple trading plan. You're going to get the entire plan, okay? And you're going to be able to review 7 current nuances. I want you to see how easy it is to adjust your frailty to kind of neutralize it or numb it by using some of these nuances. And again, this is what I've been popular for. This, I think, is what, in fact, I mentioned last week, I wrote a trading plan for a professional trader. And it was because they knew of these nuances, and they said, if you can solve this guy, I'll pay you double. And so I won't mention a number, but it's a nice thing for both of us. Trading plans are not easy to write. So in any event, but this one was, this loading gun could be my best trading plan ever. Besides the loaded gun trading plan and the nuances, you're going to get 90 days of one-on-one private coaching with me. And what that means is that we're going to have our separate boxes as many times as. Now, the truth is that it's all the truth, but my experience is that most traders have 1 or 2 sessions with me. But there are traders, especially new people, that take a 3rd, 4th, 5th session. Whatever you need, I will give it to you. Okay. I want you to make this happen. If you're going to commit to me, I will commit to you. Okay. I think you've seen probably my reputation, hopefully online. This is where I'm coming from. I didn't mention this. We have a group to get together every last Wednesday of the month. I changed the times a bit. Right now it's 4 o'clock in the afternoon Eastern time, but I try to change it so that different people can get in the group. It's not quite as important as it was because now we have the community, but I like for all of us to have our boxes, and sometimes I'll do a hot seat if they want me to. Sometimes nobody has a question and I'll lecture on some of the things I'm working on that I'm testing because I will not add or subtract the trading plan until I test it. So the group get together once a month, another really great piece of support. And if you don't make it, you actually when you go to the platform, you'll see all our last get-togethers. You can see any recordings of our get-togethers. I'm going to give you 2 weeks in our trading rooms to start. I really want you to experience a trading room. It won't, Danny says it'll only take them a week. I want you to get 2 weeks. I want you to feel you got a nice bulk. And then after that, so when you sign up for the training room, which will be after the 2 weeks, you'll be you'll be investing $99 a month after that to stay in the room. It's a very small amount for what you, but I want you to experience it with no cost up front, because I want you to see why we have an 87% stick rate. Okay, you'll always have the person I just want to see it, it's free. And you know, I think we even converted a number of those people to get to a stick rate from the beginning, like 87%. So I want to give you 2 weeks in the trading room with Dan and Matt. And then one-on-one, that one-on-one issue solving with Tisha, I want you to be able to have that one. This is so important. You need to identify really what your strengths are and what your weaknesses is. She'll help you to strengthen your strengths and nullify your weaknesses. She'll either give you what they call an EFT session, can't go what that is called, a tapping solution, if you've ever heard of that, or she'll do a subconscious training for you. Whatever she believes is the best for you, she'll do, and you'll get the recording of that, and you'll have something to work with on a daily basis. And all loaded gun traders are admitted. It's a free thing. It's just for us, the admission to the loaded gun trading room, where I told you, buddy up, you'll learn from winners and so on, ask questions to people getting checks and so on. So all of that, and my personal guarantee, I'm so confident that you're following the loaded gun simple trading plan is going to result in your getting funded by your prop firm, so that you risk their money, not yours, and still receive 90% of the profit you generate. Just share your trading experience with me. Show me a week of trading, and you follow this system, you follow the rules, and it didn't work for you, and I'll give you your money back plus $500. I've never had to do it, but it's there for you, just to put in your back pocket for those people who said, who are saying, well, what's the guarantee? You won't see many guarantees at all in this business, and rightfully so, because every trader, you know, needs the mental part, and that's usually the part that collapses, even though you may have bought a pretty good trading plan. Okay, currently, this is the current, what I'm pricing you here is currently offered without the trading room, without the Tisha lesson session, and without the school community for $24.97. Okay, that's what you'll see on the site. But when you get there, for today and maybe tomorrow, it's either the first 10 or till tomorrow. I don't know how many people are on this, but we probably will fill with this group right here. $797, one payment for life. That's it. One payment, and you'll get the 2 weeks in the trading room. You'll get the 90 days with me, starting with our first session. You'll have everything for life. Okay, you'll be in the loaded gun hub for life. Okay, so I wanted to give you something special. I've been calling this the this actually is the same offer that I'm going to be making for Black Friday, but it will be more expensive than this. I just wanted to get people into it and get maybe in the first week or two, maybe some early testimonials already. So I want to get, I just made this pricing so that it was hopefully non-resistance for you. Okay, one payment, $797, good till tomorrow or for the first 10. Are there any last minute questions? we've got a couple of few minutes. I know I talk fast.
I'm trying to find the mute button. You're fine. Also, by the way, we're at 1:57. Theodore wants to know, what is to prevent prop firm from filing lawsuits against traders for losing their money?
Because they're making too much money. And no, I mean, well, you'll read the agreement that you'll sign. It's not in there. You know, there's a lengthy agreement that you'll sign. So don't worry about prop trading. What I worry about is maybe they'll, I mean, this is why I pick Apex and Top Step. Everybody's popping up because it's a cash cow for these people, and they're all just collecting checks from starting again, resetting, blowing out. They're just, and the 10% like me brag about them, attracting the next 100 people, of which 90 are just going to pay them. So listen, when you start getting a check from them, okay. Don't worry about it. You're worrying about the wrong thing. Believe me, you're worried about the wrong thing. Listen, and one of the things that I worried about in the beginning is, will these I'll build up all this capital and I'll keep it in the account because I want a padding. What if they close and I don't have it? So I picked the longest running. That's why I chose Apex and Top Step in the beginning. There are others now that could be choosable, but I chose them because they had a growing, they gave out more and more money every month, and to winning traders, and they've been around the longest. So you've got to do your own math, but listen, anything can happen in this business. I've seen it plenty of times. Ask all of Madoff's clients, and that was supposed to be a pretty safe investment. Any other questions? I think there were.
Yeah, I don't see like I want to put something in the chat in terms of how somebody can take advantage of this. I don't see like a web address or.
Oh, I'm sorry. Here it is. Their money, your profit. Their money, your profit. Wow, it's theirmoneyyourprofit.com. Boy, you see, this is how you talk about being a lousy salesman. I've never been a great salesman. I've been a pretty good trader, but so theirmoneyyourprofit.com. Just make sure, do it now, because I really do think. Listen, you put together, and you always have a really dynamic. What I'm saying is that serious traders come to this event, and I think any serious trader, especially one that is struggling or want to be, is going to take advantage of it. So please do. Not everybody, but if you're one of those people that kind of jive with how I look at things. And the support that I'd like to give you, then this is your thing.
All right, cool. I actually, but just because it works in YouTube better, I put in the redirected link. But you can also go to theirmoneyyourprofit.com.
Theirmoneyyourprofit.com, and you know, if somehow you lose track of all of this, you can go to the Disciplined Trader and find the contact thing. But go ahead and do it. Their money, your profit. Hopefully that's easy to remember, and the bottom line to, you know, what we want to do as prop traders. And don't be afraid to get my book if you're new at this, especially because it's a really good introduction. Also, book called Their Money, Your Profit. Cashing in on the prop trading revolution. Thank you so much for having me. I appreciate it.
We have a couple more comments in case you want them.
Sure.
Let's see. Brad wants to know. Brad said, I'd be a little bit concerned about not getting a payout when I passed.
Yeah. Again, I'm just trying to stop the share. Well, I think Their Money, Your Profit. I guess we can keep it up there because you can see me. I just can't see me. Sure, you can worry about that. What's stopping me? Yeah, what's stopping me? I've stopped worrying about it. I've been doing this now for 3 years. You know, and the first time I took $1,000 out of it and covered all my costs, I said, this is, as long as this thing exists, thank you. If it closes tomorrow, okay, I'll get back to my own trading. But you know, it's funny because the bigger accounts, those that are used to trading $100,000 to $300,000 of their own money, these are the ones going into prop trading, and they're taking that and they're putting it in paper for, you know, 8 or 10%. And it's these smaller accounts. It's the ones that are trading 5,000 and 10,000, where if they double their money, they made 5,000 or 10,000. These are the people that should be prop trading, because if you're trading, for instance, I've got 12 $50,000 accounts. Okay, so you know, I've got $600,000 that I'm trading, and you know, if I double my money, I'm making 600,000. And I'm not headed to that, but won't be that, but it'll open your eyes. I don't trade full time. I only trade 3 days a week for 3 hours a day. So you know, you can do a lot of damage, positive damage, getting this done. But again, it seems to be the more experienced traders that realize, that say, hey, if it ends one day, I'm sure it's not going to end. There's too much money in it. Everybody's opening another one. Okay, too much money in it. And I will say that if you're really, really scared about it, you can open accounts with several different prop firms and trade on the same platform. They have workarounds and apps coming around for that all the time. So you can diversify your fear of somebody going out of business by trading with many of them. You know, so again, don't worry about it.
All right, last question, and quickly because we're out of time. Money Video wants to know: are we taking the same trades as you do in our trading room? In the trading room.
I'm sorry. What's the question?
Are we going to take the same trades with you in your trading room?
Yes, yes, yeah. You'll take the same trades as Dan. That's what I want you to do. I want you to observe them the first couple of times. I want you to practice with the mouse. You know, a lot of it is going when that trigger. We on our triggers, we wait until the close of the candle. When that candle closes, you need to move right then and there. And so you need to have your finger on the button, pressed down, ready to go. And as soon as the candle closes, boom, you bring your finger up. You're going to be taking the trades that Dan and Matt give you. And he's going to tell you why he trades, why he's taking each trade. He's very, very good at teaching and showing you, yeah, I want you to do that, but I eventually want you to do that on your own. Listen, some will do that forever, and I'm okay with that. It's just that, you know, Dan is in his mid-50s. He's only got probably 20 years. What are you going to do after that? So, so I want to see you be independent, but yes, you can stay as long in the room and take Danny's trades.
All right. Very cool. Thank you very much, Norm. That's the questions that we have. That's the time that we have. Have a great weekend. Thanks for being here, man.
All right. I appreciate it.
All right. No problem. Let me go ahead and dismiss you. Bye.
Please release me.
Unfortunately, if I would have known we were going to get a song, I would have kept him on a little bit longer. Anyway, very good. Thank you very much for that, Norm. As a reminder, special offer, if you buy a month, we'll give you the second and third month for free with MetaStock. We've talked a lot about the fantastic products and offers that we've done here at the show. You can get any of them at metastock.com/conf promo. Greg, are you available to give me an assistance?
I certainly am here and ready to roll.
Let me grab it. Let me jump into and take a look at my prize bag.
Okie dokie.
Oh, okay. We're going to give away a 6-month subscription. This is a $9.97 value. We're going to give away a 6-month subscription to the Diary of a Mad Hedge Fund Trader's Global Trading Dispatch. That
sounds great. Let's do it.
And then let's go ahead. As long as you registered, you'll have a chance to win. And Greg, why don't you just give me a random number from Google, I guess. It can be anything between 2 and $63.99.
You got it. Round and round she goes. According to Google Random Number Generator, that number is 369. 369.
Ooh, it's not even there's no comma in that number. It's just 369.
Just 369.
All right.
That's the thing about random. It's random.
Ooh, this guy's been.
You want me to say numbers that only had numbers that have commas in them? I could do that. No, just never mind.
No, it's all good. I prefer my numbers to have more commas than less.
I understand. Yes.
Yeah. Boris says, what's the link for Norman's offer? Oh, what's the coupon code? He didn't say there was a coupon code. So I can assume that you can just go to this one, theirmoneyyourprofit.com. If it is asking for a coupon code that you need, drop me a message and I'll help you figure it out. Jeffrey.Gibby@metastock.com. Reach out to Norman. We'll figure it out for you. I've seen this guy in the chat a little bit. I don't know if he's here today. I was kind of looking for him, but the winner of that is Nathan B. in the USA.
Congratulations, Nathan B.
Let's see.
USA. Congratulations.
Your Gmail address is just your first name and your last name at Gmail. So, like, if that describes you, that could be a bunch of different Nathans. I don't know.
That describes me. Did I win?
No, you didn't win.
Oh.
You won the ability to hang out with me all week. Let's see.
Woohoo.
All right. Thank you, Greg. Let's go ahead and I'm going to.
You're welcome.
All right. Our next speaker is AJ, posing here in front of the firehouse. Not just kidding. AJ is somebody that I've known for a number of years. Absolutely love AJ. Very, very good at talking about strategies and strategy development and that kind of stuff. And he's going to do a great job. We love having him on here. We love when he participates or agrees to participate. AJ, how you doing today?
I'm doing awesome.
There you go. They're going to make you the presenter. You look
Okay,
good.
go ahead.
Hey, you put on a tie.
Well, a little secret here, and I'm going to be leaving right at 4 o'clock. I need to drive in. My wife has me going to a wedding of her niece. So I'm going to do this presentation, and I'm all excited. That's why I got this tie on to be part
Well,
of
you
this
look
event.
great. You've never looked better, ever. Not one time.
I know. Usually I've got, the sweatshirt on and the ball cap on, but nope, I've got my best on for you, Jeff.
Yeah. No, I was wondering if you felt okay. It's a wedding.
It's true. All right, let me share my screen here and we'll get to going.
I'll make sure I can see it. Sorry that
yeah.
we're starting you a little bit late. I was going to tell you to go as long as you want, but it sounds like you have a hard cutoff. So
yeah, my wife would.
Yeah, I understand. Well, I look forward to hearing from you for exactly 51 minutes. Go.
Perfect. Hey, everybody. So I'm actually going to switch things up. In the past, when I've been on this site and part of this event, which, by the way, I have been coming in for the first 3 days to hear different speakers. I'm in the meeting room and Jeff's like, it's not your time to speak. And I'm like, I just want to hear this presenter. So I've been actually a good student as well, listening to these different speakers. I'm going to end us up here with a different topic than I usually talk about. I usually talk about selling options premium. That's really what I'm known for. But, what's been happening just in the last month and a half in the markets, I actually put this presentation together just in this morning because there's a trade that my program participants and I take called the dual vertical VIX play. And it's when fear pays that I actually want to share with you. And I'm going to be completely honest with you, just like most of the other presenters. At the end, I'm going to, if you like the way that I talk to you and I'm going to give you some details about my program. And I'm even going to give you a bonus that is, even if you don't take the opportunity to, spend more time with me, I want to give you a bonus at the end. So I do want you to stick on and learn about how to do this vertical VIX play. But I'm switched this up. So again, I apologize if this isn't as polished. It's not my usual presentation about options premium, but I want you to learn this trade and I want to teach you this trade. That's what I'm going to do during my session with you, is teach you how to do this trade, because this trade pays when all the other trades go out. Because on Fridays, I have a very popular podcast. Guess what it's called? It's called the AJ Brown Show. You can find it in YouTube or in Facebook videos. Every Friday for the last 4+ years, I have been on there live talking about, current events and what's going on. And we talk about, and people have been telling me stuff, right? I don't actually have a real strategy. I keep Frankensteining ideas from presenters and hoping they add up to an edge. I'm chasing alerts and guru calls because I don't trust myself to read a chart. I keep breaking my rules, or I never really had rules to begin with. I size too big when I'm desperate to make back losses, and I size too small when I need to commit. I don't know how to pick candidates. I'm basically guessing. These are people who watch my free show. These aren't my program participants. Every time I try something new, it fails, and I don't stick with anything long enough to master it. Other things, right? I don't know how to plan a trade. I'm entering without knowing my exits. These are people who are supposedly, active traders. Those are the people who are attracted to my podcast. I don't understand risk. I think I'm managing it, but I'm probably not. I keep hoping the markets are going to bail me out instead of taking responsibility for the trade. I jump from one program to the next trying to fix my mistakes that I don't even understand at the beginning. I hate that I'm trading emotionally, but I feel powerless to stop. I'm afraid I will always give back my gains because I don't know how to manage winners. I'm terrified I'm going to blow up my portfolio again. Then people start to get really serious with me. They're like, what if I'm the only one here who still doesn't understand the basics? I feel like everyone else gets it and I'm only an imposter. Maybe I'm cursed to always be almost successful, but never actually successful. These are things that I've heard in just the last 3 Friday sessions. I'm afraid of disappointing my family again. I'm scared I'll always be chasing someone else's system because I don't trust myself. Maybe I don't deserve to win at trading. What if I'm the only one here? Okay, that's the same thing. Sorry, I put the slide twice. Here's the facts. A lot of uncertainty, especially right now. I mean, in the beginning of the week, it was all risk on. The end of the week, it's all risk off, right? There's a lot of uncertainty with what's happening, especially in the world right now. But what's happening in the markets, this sideways choppy, you know, trend changes in just the last month and a half. There's been 4 of them. If played right, all of this can actually set you up for months, if not years to come, right? Because remember, as much as the talking heads tell us, you know, over and over, this much money disappeared from the markets today, or this much money flew into the market, it's not created or destroyed. Money isn't. It simply moves from one person's hand to the other. So the key is understanding these transactions and putting yourself on the right side of those transactions. Little disclaimer. Now, I know, because I've been sitting through these presentations at this MetaStock event, that everybody talks about the important disclaimers. And if you actually work with me, I'm going to present to you those important government disclaimers. But I want to give something really clear to you, because I've been doing this since 1997. Number one, you're not going to do as good as me. You could follow my trades and my timing exactly, and even my long-term participants. Because you want to know why? Because I'm the GOAT. I'm the greatest of all time when it comes to disciplined options trading. And why? Because I have eaten, drinking, and breathed this stuff since 1997. Trading Trainer, the company that I founded and I teach at, started in 2003 with webinars. Yeah, the only thing we had was GoToWebinar, which we're on today, and WebEx, right? Those were the only platforms. Now there's so many platforms out there that people are teaching on. But this is, you know, I've been doing this for so long. But you can get close, but I just want to let you know, I just want to be completely honest. You'll never be as good as me at doing this, right? Even if you follow all my steps exactly. I just wanted to put that disclaimer out there. I'm the best, right? All right. Understanding the VIX index. A lot of people don't really get what the VIX is. Let's go right into teaching. Please make sure you take notes. So what is this VIX thing? Some people think they know. It's a measure of implied volatility in the S&P 500 options market. Implied volatility. What the heck is implied volatility? It's a measure of anxiety, right? So basically what happens is especially the big market movers out there, people who have a lot of money at their disposal. I'm talking hedge funds, pension funds, mutual fund traders. These are the big guys, you know, the folks that actually move the market. There's like 5 to 10% of traders out there that can actually move the market. The rest of us just try to get on their coattails. When they are worried about what might happen in the future, these guys buy options as hedges. Everybody thinks that options are very risky. These people use options to hedge risk, right? Protective puts, protective calls, depending on whether they're long or short the market. If you look at this secondary derivatives market, and the VIX is a great place to do it, you can get an idea of when there's a demand for these options as hedges. The VIX rises. It means that market movers are anxious about what's happening. They don't think that it's going to be an easy, straightforward path with their trades. And so the VIX goes up when anxiety goes up, right? And if the VIX goes down, we get very confident. So it represents the market's expectation of volatility over the next 30 days. It's often referred to as the fear index, or fear and confidence index. Fear when it goes up, confidence when it goes down. It goes up when market anxiety grows. When the VIX is low, which it hasn't been since probably the pandemic time, the low VIX levels signals confidence and complacency. High levels signal fear and uncertainty. One of the things you can write down. When the VIX, like I said, I've been doing this since 1997. I can probably count on 2 hands the times that the VIX has actually traded into single digits. Why? Humans, people like you and me, we're not wired for confidence, right? We are actually wired to always be on the lookout for what might get us, right? So we always, even if you're the most cool hand Luke person, inside at the neuron level, you've got a little bit of anxiety, and that's just, it's called a survival mechanism, right? You're ready to jump ship, or you're ready, like if you're working on the electrical in your house, like I was watching the electrician the other day at our house rewiring it. We wanted a new outlet somewhere, and he's just ready. Even though the circuit breakers are turned off, so he's ready to jump away should he need to, and he's doing all the right things using the special tools that are insulated. But I asked him, I'm like, are you? He's like, I'm always ready to jump off. We're always ready to protect ourselves. That's why we do things like buy car insurance and buy health insurance. Some people haven't been in a car accident in decades, and yet it's not just because of a government mandate, right? People are buying insurance just in case, right? All right. What's this fear versus confidence? Markets are driven by human emotions. Fear always moves faster than confidence. It takes a lot to make somebody feel very comfortable, but if you want to make somebody feel very afraid, it's not very hard to do, especially if they're in an uncertain situation. Fearful markets cause investors to seek protection. They buy options, and that drives the option prices up, and that drives the VIX up. Confidence builds slowly. The VIX rarely drops, and like I said, dropping into single digits, we actually call $12 being the level of support in the VIX, and it's rarely. I mean, it's been more than a decade since it's actually been trading in single digits. Confidence builds slowly, so the VIX rarely drops. This asymmetry creates opportunities. We call them volatility that tends to rise faster than it falls, right? And just really quick, options, okay? Everybody that I talk to that isn't an options trader thinks these things are risky, because when you're talking about retail traders, the first thing people do is they try to trade stock moves, or stock, I say stock, but I'm talking about stocks, ETFs, indexes. I guess the bigger overarching term is equities, right? They try to trade them directionally. I bet a lot of the presentations I sat through over the last 4 days was how to figure out what direction they're going. Well, I'm telling you, based on what we've been seeing here at Trading Trainer for the last month and a half, direction, and I actually yesterday I sat in on Daniel's presentation. He's an indicator wizard. You might have seen him at about noon Eastern time yesterday. He's a wizard at indicators, and he's got this indicator that when the indicator gives you the signal, he also tells you the probability of his winning and losing trades. And I have his indicators, and in the last month and a half, the probabilities of this trade being a winner, the numbers have been coming down, right? Even if everything you have tells you, hey, you should be going long or you should be going short, right now, the only thing that we here at Trading Trainer have been able to surmount is that sideways choppy is the name of the game, right? And high implied volatilities, high VIXs. So what's beautiful about options, right? People think they're risky because people will try to first pick a direction and then they'll leverage it with options, which is great if you have a win, right? Because you could take a win that winds up, because you're using options, being 4 times to 10 times the gains you would make on a stock trade or an equity trade. But the problem is if that trade goes against you, and a lot of directional trades are lower in probability of winning right now, a lot of them are going against people. And if you're using options, this is why they're considered risky. You could have 4 to 10 times the loss, right? But that's not the only way to use options, right? You can use options to make money when the market goes up, just like you can use the underlying equity. You could use options to make money when the market goes down. With the underlying equity, you can do that too. It's called shorting the options. You may need to get a margin account, but you could use puts and calls, single leg options to do that. But guess what? You can also use options to make money when the market goes sideways. You can use options as when time, letting the clock work for you. You put the trade on, you let the clock tick down to the expiration date, and you can make money. That's called premium selling. That's like my specialty, right? And you can make money when there is fear, or even make money when there's extra confidence in the world. And that's what we're talking about. In fact, with an equity, a stock, or even, if you're doing commodities or foreign exchange currencies, there's really just 2 strategies. If the underlying goes up, you can make money, and if you know how to short it, you can go down. With options, because you can pick strike price and expiration date, and then you can also take multiple leg strategies, more than one option at the same time, there's 27 different patterns you can profit on using options. So people like me, we have this huge tool chest, not just 2 strategies, but 27 different strategies. So whatever the market's doing, you can pick out the right strategy and profit off of it. The problem is that people who say they're option traders are only just stock traders who are leveraging options, right? So they're not really option traders. They're trading directionally, and that's kind of where options get the bad rap. In this case, I'm talking about this VIX trade. We're going to be doing a confidence versus fear trade, right? So really quick, some of you know me, some of you may not. I founded this company called Trading Trainer in 2003. They call me the world's most disciplined options trader. I actually think behind my back, they call me the world's most laziest options trader. I think of myself as an efficient options trader. That's because I'm not a day trader. I'm an end of day trader, and I like to make consistent income. I actually like to think of my trading not as one-time wins, but as ongoing portfolio income generators, right? That's why our product is called the Instant Income Generator, right? I've been doing this since 1997. In 2002, I started publishing my newsletter every day for my traders. And then in 2003, I made this company. You'll see on a lot of successful option traders, my ebook that I wrote in 2005 called The 7 Strategies of Successful Option Traders. Many option traders, you will see my home study course that I did in 2008 on their shelves. But I want you to know that when I started in 1997, I was just like you. I mean, I've got some engineering degrees. I'll be honest with you, I never, when I went into the workforce, I worked for HP for many years, but I did not do engineering. I was in their business department, and they liked me a lot because I could speak engineer language, right? Because that's what I learned in school. But I've never actually done all the stuff I learned in school. I do it on the side now just for fun, but I don't get paid for it. I also have a very strong background in commercial business and investing. And in the last 15 years, I've really spent a lot of time polishing up how I teach, because that's what really gives me impact on my community, is how I teach and convey my information, because it's really good. I've hired people that are amazing option traders. They let me follow them on their trade rooms. They let me look at their portfolios. I knew that they were successful. I watched them with my own eyes be successful. But the truth of the matter is I could not recreate it, and they could not convey to me what they were doing because they weren't good teachers. They were just good traders. When I first started in 1997, not only did I spend $27,000 on seminars, and back then we didn't have the webinar system. You had to go to a hotel on Saturday. Some of you might remember this. Go to a hotel on Saturdays and spend half a day there for a free seminar. And the next thing you know, you'd pay a fortune to be there on Sunday and Monday. And the next thing you know, you put yourself on an airplane and you're going to a destination. I paid $20. That was more than I paid for my first University of Virginia degree in mechanical engineering. $27,000, and I paid that just in 1997. Good thing I didn't have a wife or a mortgage back then. Even worse, on stupid trades, in that first year, I gave back $85,000. That I don't recommend any of you do that. It's called learning by trial and error. I would rather you learn by guided discovery, meaning go find somebody who's doing what you want to do, who knows how to teach, and you resonate with, and then let them teach you. And that way you won't make the mistakes, and you won't take as long. I didn't actually start cash flowing positive until 2001. So I don't want you to take the 4.5 years that I took, giving back almost $300,000. And again, it's a good thing I had a good job at HP in Silicon Valley, and didn't have a family and mortgage payment back then, because I'd never be able to recreate it. There's better ways to do this than the way I did it. Here's the quote. Ready to take some notes? Stop chasing shiny objects. That's what I was doing, right? Settle on what works best for you, not in your dream future. Like somebody's like, well, I want to be a day trader. Look at your life right now. Like if you have a day job, I don't recommend you quit your day job. I recommend you build your portfolio to a critical level that not only allows you to quit your day job, but also the portfolio will grow more than your annual expenses are, so that it keeps growing. right? This is not a get rich quick thing, but figure out what works. For me, it was option investing, end of day option investing, right? And that's why I pursued it. Get very good at whatever you decide to pursue. Like Forex requires you to be up in the middle of the night. If you can do that and day trade Forex for an hour or two in the middle of the night, do that. Do whatever works, but don't keep going around following shiny object. Pick one. Number two, hire a mentor who is not has done what you want to do, is currently doing what you want to do, and more importantly, like I told you, knows how to teach, right? It's called guided discovery, and it's way easier, cheaper, and faster than trial and error. Number three, join an investment group, right? You want to be able to look over each other's shoulder, and I call it leveraging with pride. That's a term we use at Hewlett Packard. Like for instance, when Canon would release a printer, we would go and buy that printer, take it apart, figure out how to work, figure out one thing we could do better, and then make that printer and release it, right? It's called leveraging with pride. They called it cheating in grade school, but if you look at how the world works, especially in capitalist economies, it's called leveraging with pride. And I want you to do that in your investment group. If somebody is making good option trades, do what they're doing, right? And if somebody's not, figure out what they're doing wrong and fix it and do it for yourself. Leverage with pride. Also, you just want the accountability, right? Surround yourself with like-minded. In my program, that's what I do. I've got everybody working together. They celebrate each other's wins. They pat each other on the back when they have a losing trade, which is rare. They say, listen, that's okay. You're going to come back the next day and do even better, instead of the naysayers who are going to try to convince you, like that my family tried to convince me back in the 90s that I was crazy. Now my family, I can't keep them off visiting me and trying to, I'm like, take my program. I'm like, don't try to just take my money. Anyway, this is exactly what I did. So I hope this is a little bonus of how to crack the code and not just be, because obviously you've been on these calls for 4 days now. You've got the time. The question is what little, and I bet you it's very small what needs to be done with your trading to make you very successful. It's probably a very small change. It might look monumental to you, but to somebody who can audit you, I'm sure it's very small. Okay, last but not least, just know that I'm all about giving impact. And so I started a foundation. I take historically underserved inner city kids off the street and I teach them how to invest. I started again in 2003. In fact, that's why I started Trading Trainer. I teach people who want to pay me to teach them, and then I take the profits from that because I live off of my own portfolio. I don't have to do any sort of teaching, but I want to have an impact. When I pass away, I'm 52, right? And when I pass away, which who knows, it could be tomorrow, the doctors are already saying that I've got some things happening in my 50s. So I want to have this foundation, the A.J. Brown Foundation, that's been going for the last 20-something years, 22 years. We did take 2 years off during the pandemic to keep going on, right? And so that's why I have funded it all of these years. And we started off with 9 kids in a kind of rough suburb of Denver called Aurora back in 2003. Last year, we graduated over 120 kids. So from the south side of Chicago, we've partnered with the Chicago Board of Options Exchange to deliver our foundation. That's why I do this. I'm all about impact. And I hope you have a reason that you're trading above and beyond just yourself, right? It's kind of like when I worked at HP. I was climbing what I thought was the right ladder, and I almost got to the top. I was in upper management at Hewlett Packard, and I was almost, I was having meetings with somebody named Carly Fiorina. She was the CEO when I worked there. I was almost to the top of that ladder when I realized I was leaning that ladder against the wrong wall. Let that settle in for a second. I realized my ladder that I had been climbing all that time was against the wrong wall. And that's why in 2005, I left, and I've never been an employee since. I've just been living off my portfolio. Hey, if you want to learn more about me, you can always go to links.tt4.me. If you follow me on socials, if you check out our Friday podcast, I would love that. Give us a like, give us a follow. We're always looking to kind of get that algorithm so we can get our name and our voice out there better. Back to the VIX hedging trade. So we have this thing that never goes or very rarely goes below 12. In fact, in the last year, it hasn't gone below 14. And when any proverbial poop hits the fan, it spikes, right? It spikes. So how do we profit on that? We're going to pair two bull vertical spreads, a credit spread and a debit spread together, okay? Vertical spreads are, you can look this up on YouTube. I don't really need to teach you about that, or you're going to be part of my program and we're going to do it together. But you can kind of see the profit and loss diagram here on how this works. We're going to take the one and take the other, and you're going to be basically create a thing that looks like this. And this is the price of the VIX along the x-axis, as you can see here. And the idea is you want to have a portion of your portfolio in this trade every time it cycles. I'm not currently putting 15% of my 8-figure portfolio in this trade every time it cycles. You're going to enter these two trades pretty much simultaneously on the same day. If you're going to do one before the other, do the debit first and then do the credit. The credit will offset the debit. The idea is that you actually get the cost of these two things to offset each other so that it's basically break even. If anything, you're going to structure the credit spread so it gives you back a little bit more credit than the debit spread cost you. Why? Because if this trade breaks even, you actually want to cover your commission and maybe get enough money out that you can take your loved ones out to dinner that week, right? The idea is that this is a hedging trade. So most of the time, the VIX is going to stay in that middle section, right? It's going to stay between the $14 and $19. Right now, I've got a VIX hedging trade on now. The strike prices are 13, 14, and 2021. Right? Currently, I think the VIX, I can look it up, but the VIX is trading, I believe, somewhere in the upper 20, in the lower 20s right now. But when I placed it 3 days ago, when everything was calm, right, I was able to get the right prices on these two spreads. And the idea is when they expire, and let's talk about expiration date. Usually it's about anywhere from 2 to the most 4 or 5 weeks. So you're going to use weekly options or you're going to go to the next monthly. I'm using the November monthly options right now. And you just place this trade on. And so long as everything stays normal, the trade expires, the two cancel themselves out, and you get that little bit of extra credit, right? Expiration is typically 2 to 5 weeks out, aligning with short-term volatility cycles. The goal is offset the cost between the spreads, favoring a slight net credit position. But here's what happens. Our president tells you that China sucks and he's going to double tariffs. That happened, and that caused my VIX trade. It caused fear in the markets to spike, and my VIX trade went from barely breaking even, giving me a slight credit, to all of a sudden being 4 times the investment. So take 10 to 15% of your portfolio and multiply it by 4. And typically when that kind of shenanigans happens, a lot of your other trades that you're doing with the other 85 or 80% of your portfolio tend to go against you, and you're going to bed. Well, what if you had all of a sudden one position that was like 20%, 15% of your portfolio, and now it's 4 times its value? That's why it's called the VIX hedging trade. And everybody, I almost require everybody in my program to put this trade on every cycle, because even though premium selling doesn't get affected by these directional spikes, it's just a smart thing to do. And I want you guys to do this as well. When do you time this? So I keep talking about every cycle. I like using the fast MACD. Now I'm no specialist. I do have my own indicator. If you go on that links.tt4.me site, there's a button that you can go download my indicators. By all means, do that. The fast MACD is from the Appel folks. Those are the guys that, the father-son team. The father came up with the MACD 30-something years ago. 6.19.3. They published that was their fast MACD. The traditional MACD is 12.26.9. put 619.3, and I look for a crossover on the VIX on an end of day chart, and that tells me when a bottom is found. That's when you want to then look through your spread prices, find two that are currently bracketing where the VIX price is, two that'll cancel themselves out, go heavier on the credit, place that trade. You're done. You're done. The strategy activates when volatility appears poised for re-expansion after compression. How about this one, right? Government is no longer shut down. Okay, great. The market's going to be risk on for 3 days. Then all of a sudden it sets in. Hey, the government who's been putting all this data out hasn't been operating for the last like 45 days, and the government is a freighter. The government is not a tugboat. It doesn't turn on a dime. We're not going to be able to start getting this data for a while. The Fed's supposed to meet in the next few weeks. Will the Fed have enough data? The Fed already told us that, you know, if it's foggy and dark out, we're actually going to drive slower and make fewer decisions and let things ride. So are we going to get that interest rate drop? What about the AI bubble? Is it overbought? You know, you've got Palantir trading at like 400 times its earnings. People remember the dot-com busted boom and bust. All of a sudden it sets in all these anxiety, and guess what? The VIX is up again. I'm about to profit again, 4x my initial investment. By timing this at the bottoms every time, we avoid premature entries into ongoing sell-offs, okay? Most of the time, this trade is going to result in a near break even or just modest gains. Like I said, you'll take your significant ones out for dinner every 3 to 4 weeks. During market panics, which have been so many in the last few days, when implied volatility spikes, this trade pays off significantly. It acts as a hedge. You gain from the VIX position, can offset losses elsewhere in your portfolio. It provides peace of mind and smoother portfolio performance during high stress events. Why it works. Volatility is inherently mean reverting, but spikes are sharp in crises. The fear reaction creates these short-term mispricing and option premiums that allows us to profit big time. Our structure captures these short-lived surges while minimizing cost exposure. Remember, confidence comes very slow. That people are like, well, what if you go off the other edge? Like I said, in the last 30 years, I've seen that the confidence goes down into single digits like 10 times, and it was a slow process over months. This also makes the trade an efficient portfolio hedge. It is not a speculative bet. Like I said, I require all of my program participants to be in this trade. Almost, I mean, I can't make them do, I can't make anybody do anything, but I'm like, you got to put your VIX trade. So what are the takeaway? First, VIX is a measure of market fear versus confidence. Our proprietary VIX hedge trade uses a dual vertical setup. It exploits volatility behavior. I would use the fast MACD confirmation, which enhances an edge in consistency. And this whole thing that I'm talking about today that I want you to start doing, whether you are program participant of mine or not, no matter what you trade, I want you to do this as well. It provides a built-in safeguard for premium sellers or anybody during anxiety-driven markets. Here's what I want. If you're, when you're working with me, I want you to come to my workshop. I do a weekly workshop with my program. Come to the workshop, and the first thing we're going to start doing at the beginning of every workshop is give out the strike prices and expiration dates of the vertical spreads you should be placing. And we're going to talk about when you do this, what conditional trade, if you're using your MetaStock, what do you program in to tell you to pull the trigger on that double vertical spread. And if you want, in all of my programs, we have this mechanism for doing a trade review. You send us your trade, we review it to make sure it's going to be good. That's optional, but you should take advantage of that when you're working with us. Send us the trade for review through the review process. Let us give you the green light that you should go ahead, and then place the conditional contingent trade and just let it work, right? And I want you to rinse and repeat this at every cycle. So how would you like to never miss a pick, minimize the amount of time you spend away from loved ones? Like me, I'm an end of day trader who uses the flexibility of options, and also have support whenever you need it, because that's what it really is all about. It's about saving lots of time doing this, creating clarity so you're not confused, and getting lots of results, right? And the results are consistent income from trading. So I'm going to take a couple of moments. I'm going to tell you a little bit about my materials, my training, my tools, see if they might be a good fit for you, right? Because this is for, and going back to that whole conversation about all those things people have been telling me after the AJ Brown show, just the general public who are traders but not my traders. This is for someone, first of all, who doesn't want to have all sorts of tools everywhere, right? They want everything they need in just one place. They don't want to miss any of these opportunities. They want to spend more time doing other things than just being glued to their computer. They don't want to do this alone, and they want all the step-by-step instructions. In other words, summed up, if you're working with me, you're someone who wants to get consistent and reliable results, right? I want to tell you really quick about Charlene. Amazing person. She was a school teacher. She'd been a teacher for almost 30 years and she got sick. And I'm not going to sugarcoat this. She got cancer. And she stayed in that position as long as she could, but cancer treatments make you very weak. And finally, her administrators ordered her out of the classroom. She still had 13 years left to qualify for her full pension. She actually thought, because she was pretty sick, that she was just going to pass away. And she made peace with that. She's such a Zen client, right? She recovered. And she's here in the States. And sadly, and it's been the topic of discussion with the way that, healthcare is, she had no livable retirement and she had a frickin' lot of medical bills. Right? And so what do? You actually just skirted death, but maybe you would have been more at peace if. It's just awful to think about. I'm actually. Sorry. She got interested in the stock market. The rest was history. She found me. I was giving one of these presentations, and now she's traveling and she's doing what she always wanted to do. She finds the stock she's interested in, not using our screeners. She follows the strategy. She uses it alongside other strategies like the VIX hedging strategy we talked about today. She made 14%, spending 15 minutes reading about the company, following the chart, and then waiting for expiration. It was so easy. All right, here's what I'm going to say. I want you, if you come, when you come work with me, to get your first winning trade in 7 days. So this is what you're going to do. First, as soon as you're on with us, you're going to get an onboarding call. I want to show you where everything is in our web portal. We've got all sorts of cool little tools and things like that. And I want to know what charting software you're doing and what sort of brokerage you're using. Then I'm going to tell you, go to the screener and pick symbols. These are underlying stock ETF indexes that are in your price range, right? And I'll give you some guidelines. Go to the screener, pick someone. Come to the workshop after you get the VIX trade details that we do in the first 5 minutes. Submit them to us, okay? We're going to go over them and we're going to look at them the way that we look at them. And you're going to do two things. Number one, you're going to find out if that symbol is one that we should do a trade on. But number two, and everybody's going to do that. Number two, you're going to get to hear in real time why we think this is a good symbol to sell premium on, right? And why not? And through iteration, right, you're going to pick up that skill. We call it learn while you earn, or learn by doing. So bring your symbol to the workshop, submit them. We'll give it the green arrow, right? And if somebody else submits a different symbol and we give it a green arrow, leverage with pride. Use that symbol. Plug the symbol into the worksheet we give you and put in your portfolio specific. So you're going to tell it, how much is in your portfolio. If you were to cash out your portfolio, what's it worth, right? And you're also going to use this tool, and you're going to tell it what's your risk appetite. Hey, I don't ever want to lose on a trade more than 0.5% of my portfolio, 1%. That way you'll never get into a trade where, and I've heard people say this, especially with vertical spreads on stocks, not on the VIX, but on stocks. Hey, AJ, I was doing this vertical spread strategy that I learned about on some YouTube show, and I did it for 10 months, and I was making like 8% every month. And then on month 11, I don't know what happened. Well, what happened is the market changed gears on you. I don't know what happened, but not only did I give back all my gains from the prior 10 months, I also gave back half of my portfolio, and now my wife wants to divorce me, and the mortgage company wants to foreclose on our property. If I had, a nickel for every time somebody told me that story, like I'd be speaking at a live event and they'd pull me on afterwards and they tell me this story. Put your symbol into this worksheet we give you so that it gives you the position sizing and target prices, right? Specific to you, not to me, not to anybody else, but to you and your portfolio and your risk appetite, right? All your personal details about how you trade. Send us the trade for review. Again, we have that trade review process is optional, but I suggest you use it as long as you're working with us, and then trade the trade. Paper trade if you're in doubt in what we're talking about until you prove it to yourself. In fact, paper trade is the best thing ever. Paper trade, paper trade, paper trade. And then rinse and repeat this every week, right? Rinse and repeat often. So what is this all worth to you? You got video tutorials, the lecture classes, the screeners, the planning tools, the weekly live workshops and their replays, the trade review. What's that all worth to you, right? Because I can tell you exactly how much we charge for it, but just think about all that whole process. I'm going to get you doing your first trade in 7 days, and then we're going to do it over and over again. What's that worth to you? Well, I also have a double your money back guarantee. I heard Norman earlier talk about his guarantee where he's going to give you $500. I want you to not just do our program for 7 days. I'm going to get you on your first trade in 7 days, but I want you to do what we're doing for 6 months. I want to repeat it over and over. I want you to learn while you earn. So every 7 days, I want you to add another position, right? And have them all be incoming positive. I want to profit on those other mechanisms of options, not just on the leverage stock moves, but on time passing by, on volatility, fear versus confidence, all of the above, right? Do this for 6 months. If at the end of 6 months you're not turning a profit, and do what I do, right? Do what I'm telling you to do. Don't go off and do somebody else's program and then say, I didn't want. Do what we do. Not only will I give you the money you invested in my program back, but I'm going to double it. And I've had this guarantee going since we started this particular premium selling program in 2007. Never have had to execute on it, but it's there. And if you show me that you can't turn a profit doing exactly what I tell you to do, I will give you double your money back guarantee. Also, as a bonus, I want you to have a strategy session with my one-on-one coaches. Usually we have a whole one-on-one coaching department. That's not what I'm talking about today, but I want one of them to cross over and I want them to work with you for about an hour, and I want you to talk to them about where you want to be at the end of 6 months of working with AJ and where you are now. And I want you to let them, help you chart the path of how to do that. And they'll tell you if they think that I was going to say, they'll tell you if your goals are out of this world, but do you know what? They tell me that the majority of people are actually under expecting what their goals are. They're not being aggressive enough. So they'll work with you. I want to give you that. That's just a bonus for you guys at the MetaStock event. It's worth a fortune. Well, this is a brand new bonus, and I've never offered this. This is something that I want to do with you as well. I want to audit, because I know you guys are all traders, but I also know that if you were super successful traders, you probably wouldn't be sitting through this event. So I believe anybody who's a trader, no matter what you're trading, isn't just options. It's probably something very small that would get you to hit your targets. I don't want you to be one of those people who gave me all those reasons why they don't think they can be successful, especially those people who are giving reasons that were so internal to them, right? So I want to do an audit on the trader, not just on a trade, but on the trader. I want you to do a screen sharing session, show us the trades you've been doing, the systems you've been using, and let us identify for you what's not working and tell you how to go fix it. Again, I've never offered this, and I'm making it, I think I can only deliver 10 of these before Christmas, right? Because I'm going to sit down and audit your trades and audit you as a trader. What's that worth to you? This is a bonus I've never given before, and that's why I think I can only commit to doing 10 of these before Christmas or with the winter holidays. So all that stuff, and then the double your money back guarantee, that strategy session with my coach to get from point A to point B, and now this new bonus, the audit. I want to give you an audit. So adding all that, what is this all worth to you? Because if you go to my website, it's $597. It's about $100 a month for the 6 month. This is a 6-month program. That's a flat fee, right? 6 months, no other charges. I mean, of course, at the end, if you want to keep going with us, you can. I ask people, I'm like, didn't you learn after rinse and repeat for 6 months? And people are like, I come to your workshops and I get so many trade ideas and I go and I do more trades. Why wouldn't I? It's $100 a month. I'm making way more in my trades. Cool. Whatever reason, if you want to stick on, you can. Now, I'm going to do another thing besides that bonus with the audit. I want to offer you the ability to get $100 off. So instead of $100 a month, it comes out to whatever $497 divided by 6 is. Here's the commitment. Here's what you have. This means that you're going to give me at the end of 6 months or even during. I'm going to call you and you're going to give me a testimonial. Now, you don't have to take the $100 off, and it's only for you guys at the MetaStock event. But if you want the $100 off, I want you to use that promo code. But again, the commitment is that you're going to give me a testimonial once you're successful, right? So you're going to go to option, not options, not plural, optioninvesting.org/MetaStock. Optioninvesting.org. In fact, I've got that website up. Optioninvesting.org/MetaStock. So again, if you want to be anonymous and you don't want me to use your testimonial when you're successful, then don't go for the $100 off. Just pay the $600 and I won't bother you. But for the MetaStock folks who don't mind me interviewing you when you're successful, then I want you to come to the promo code. I want you to put 100 capital DISC, and it will drop it by $497. Go ahead and do that now. Do not pass go. Do not collect $200. Again, don't use the 100 DISC promo code if you want to remain anonymous. If you want to be on the line for when you have successful trades and you want to, I'm not going to ask for screenshots of your portfolio because I tell everybody you're never going to do as good as me or my students. And it's true. But I am going to interview. I'm going to ask you about what was in your mind. And I like that kind of stuff more because not only am I going to use your testimonial, I'm going to use it to talk to these kids that I work with every year in Chicago or wherever we pick the kids up out of the underserved neighborhoods. So do not pass go, do not collect $200, right? If you're having any problems placing orders today, just call this number. Make sure you say you're at the MetaStock event. Otherwise, you won't get one of those 10 spots to get your traders audit, right? And that's really all I've got, Jeff.
All right, cool. Let's see. We did have a question about, and I did a little bit of a Google search on this. And it doesn't look like there is, but Jose was looking to see if there were ETFs on sectors you could trade.
Oh, absolutely. In fact, that's some of the most successful stuff that we do. So one thing about ETFs, guys, with stocks, I can actually do research on the company, right? And I that gives me, the fundamentals access. That gives me a lot of comfort to do a lot of these premium selling strategies on, because I'm looking for a particular, sideways chop. And if I know about the company and what they're doing, I'm looking for boring ass stocks, right? I'm not looking for any company that's in the news or making incredible earnings per share, because those ones are not going to be range bound. Those are not going to be the ones where I can let the option, expire worthless. So I like to be able to do research on the company, but you can't deny some of the ETFs, the sectors, especially right now. For instance, the banking sectors have been moving sideways for the last 8 months. So a lot of the companies that are in those sectors, or the banking sector ETF itself, and even just being able to do a correlation, taking something like the MetaStock charting package and putting them on top of each other to see if there is some correlation between the stock you're looking at and its sector and the index, right? Seeing if it's a contrary type company, because you want to be able to, make adjustments to your overall option strategy if you think there's going to be a dog leg coming, right? So that's, I think that the ETFs, and there are always optionable ETFs on everything. ETFs are like taking over the world.
But specifically, he was looking to, in your banking example, he was looking to buy volatility on just banking, which
instead of the VIX being on the S&P 500, analyzing the volatility, doing that double spread, doing a debit spread and a credit spread on a particular sector. We haven't done that, but why wouldn't you, right?
There's an ETF for almost everything, right?
Yeah. Oh yeah. I mean, ETFs have become I think there's more trade. In fact, I know there's more trading in ETFs now than there is even in the individual stocks. But yes, I think that's.
I don't want you to get in trouble.
No, I think that there's some analysis you need to do. I'll tell you that VIX trade though, because the VIX has been around since I think it's 85. There's so much history you can look at on the VIX. It's just a no-brainer to do that. But if you wanted to do some research, I think we would support you. Again, use the trade review portion of my program to send that in. And then if the traders that are looking at those tickets can't comment on it, they'll pass it on to me, and I'll do the research, and I'll get back in touch with you directly.
Theodore, I wanted you to repeat the cost, $497, right?
Yeah, $497. But again,
you're going to be shy.
Yeah. If you want to pay $597 and be completely anonymous, that's what you should do. If you don't mind me, and it's going to be up to you to tell me when you're feeling like you're successful, but I'm going to come knocking on your door before the end of the 6 months and say, let's talk.
All right, cool. Well, I am going to let you get on to your wedding. I don't want you to get in trouble with your marriage or anything like that.
Yes, I look really good. I'm looking at myself in the camera.
Yeah, oh yeah. You should take a picture now. We could.
I know. I might not look like this ever again.
All right. Thank you for joining us. I appreciate it.
Thank you. Take care, everyone. I love you all. Bye.
Bye. All right. Let's do that. Yes. Okay. Very good. I'm going to go ahead and make me the presenter real quick. And Greg, I've done something pretty fun this time, but I'm not ready for you yet. Before I get to you, I want to thank all.
Okay.
You can say hi, though. I want to thank all of our great sponsors. American Association of Individual Investors. Great sponsor, great organization, great nonprofit organization, very well respected, well reputed, if you might say. They've been doing their nonprofit since the 1970s. They focus on investment sentiment surveys. You've probably heard of those. They do a lot of fundamental and also technical research. They have an active investing. Oh hell! You can find out more about them at aaii.com. I want to thank Stocks and Commodities magazine. You can find them at traders.com. Great magazine. They've been supporting all of the conferences we've been doing since like the last 16 years we've been doing them. Great magazine. If you have a subscription, they'll send you a physical magazine. I haven't gotten one of those in a while. So far, I do get my Stocks and Commodities magazine every month, and it's really cool to get a magazine still. You also get access to 17,000 articles that they've compiled over the course of their publishing lifetime, which started in 1982. A subscription for a year, it cost about $97. Traders.com is where you can find out about that. If you haven't yet, I want to know why. Why haven't you joined the free community at tradersforum.com? You can come, you can chat with us all day. You can talk about symbols you're interested in. You can learn about the markets, learn about technical analysis, all that kind of good stuff. All of that's for free at the tradersforum.com. Greg, now I'm ready for you. And I just I just want to explain this to you the way I'm going to do the next winner. And as you know, we have a mega prize. But I want to explain it to you, and I want you to make sure that it makes sense. Okay?
Okay.
I'm going to explain it first, and then we're going to talk about what the prize is. So the prize of on the next slide, I've put a number. This number is anywhere between 0 and 1,000. Now, what I want you to do, see, the idea behind here is I want to reward you for being here all the way to the very end. So if you're closest to the number I've got on the next PowerPoint slide, when you type it in the chat, so type it in the chat or type it in the questions box. If you're closest to the number that's between 0 and 1,000 on the next PowerPoint, you're going to win the mega prize. All right, does that make sense?
You're not talking to me, you're talking to everybody. You want everyone to type in a number between 1 and 1,000 right now and chat.
Right. And we'll give them a second.
You realize there's a slight pause, so you're going to want to wait for a second for people to do that.
That's why I actually did that before, and now we can talk about what the prize is. So go ahead and start typing in numbers.
That was a good move on your part, Jeff.
This ain't my first rodeo.
Hey, all right.
All right, let's see. We are starting to get numbers, so get those numbers in. Do you think we should do prices right rules, like closest without going over type of rules?
I think, I would say closest without going over. Prices right rules, right?
Well, yeah, that might feed into people's strategies. One number each, everybody. Dennis, I see your number. Peggy, I see your number. Chatton, I see your number. Michael, get them in here. All right. So the prize that we're going to give away is we're going to give away the new MetaStock program. We have the new 20 coming on next week. So we'll do that version. We're going to give you 3 months of that. That's worth about $300. We've been talking about all week about how it can help you with your testing of trading ideas, how it can help you learn about the markets, one of the best scanning engines in the market, the patented forecaster that you really can't get anywhere else. You're going to get 3 months of MetaStock real time. You're also going to get the Zenith newsfeed. The Zenith newsfeed is great. They developed it to be a competitor to Bloomberg. It's got huge amounts of market research and market reports of market depth that covers about 300 different exchanges. It's supported by 3,000 different reporters and 300 different news bureaus around the world. One of the best news services that you can get, certainly for the price that you pay. I mean, it was designed to be competitive to Bloomberg. We're going to give away 3 months of Learn MetaStock. Greg, do you want to talk a little bit about what that is? Oh, I just
Learn MetaStock?
Yeah.
Some guy named Keith Nelson, I think, or something, does it out of Florida. No, I'm just joking because I know he's probably listening. No, Kevin Nelson does a great job of teaching people how to use MetaStock because it's a very comprehensive program and method, and he helps a lot of people a lot of time. In fact, all of our sales and support reps and new hires go to him for training.
I'm seeing a stall on numbers. Make sure to get your numbers in because we will do that. One thing about Learn MetaStock, we're going to talk a little bit more about Learn MetaStock because Kevin is next. But every time we onboard a new employee here, the first thing we do is we train them on how to use MetaStock. And the way that we do that is we make them go through, or we let them go through a lot of Kevin Nelson videos because it's just such a great way to get up and run with the program. So we're going to include 3 months of that. We're also going to include 3 months of Magic Trader. Peter came in and talked about Magic Trader a little bit yesterday, his Magic Trader Elite, and his advisory service. So big, huge MetaStock package to the person that is closest without going over to the number that's on the next page. And Greg, I will give you bonus points if you know where I got this number from. It's 514.
Is it a biblical reference? James
No.
5:14?
No,
Because I know you're a churchy guy. Okay, no, okay.
yeah, of course.
I'm at a loss. I'm sorry. Am I going
right.
to feel stupid when you tell me the answer?
Well, I'm going to feel less loved because it's my birthday, May 14th.
Oh, well,
All right.
okay. I don't feel stupid.
Now, let me know. The closest number I see right now is Peggy with a 437. Do you see anybody closer?
Oh.
Without going over.
Well,
Michael is pretty.
I'm looking on YouTube, and so far on YouTube, we've only had one person, Michael, submitted. He's 525. So according to Price is Right rules, he's already over.
Okay. Peggy, you won. So I will be reaching out to you. I mean, to make sure we have like a proper address and stuff like that for rules reasons. When we give data to people, we need to know who they are. So reach out to you with what I need from you to get you set up. And Dennis's birthday is May 17th, a fellow Taurus. Great. I think that would still be in the Taurus. All right.
Mm-hmm.
Cool. Our next speaker
All right.
is ready. Thank you very much for the assist.
You got it.
All right. Our next speaker is Kevin Nelson. Kevin Nelson actually used to work here at MetaStock. He hired me as a matter of fact, and then he also hired Kelly and quite a few other people. Kevin started here in MetaStock a number of years ago. I guess it's probably been about 15 or 20 years ago, he kind of branched out, started doing his own thing called the LearnMetaStock.com. LearnMetaStock.com is a place where he does trainings 3 times a week on a live basis and has literally hundreds of videos of formulas and things that are available on demand. Also, he does formulas. He'll talk a little bit about, he'll take stocks and commodities. He'll look at an article, he'll make MetaStock code for it, and then he'll kind of evaluate it and give his take on the system. It's a really, really cool service. Like I said just a few minutes ago, it's a hugely valuable resource for us because we use it as our very own training mechanism to help people get up to speed internally about MetaStock. And so, Kevin, without further ado.
Hi, Jeff. How you doing? Thank you very much. Appreciate that. And your friend's name, is that Gary Lewis? What's his name? But
it's
a little confusing.
Gerg Lewis, G-E-R-G.
Gary Lewis and the Playboys were a famous jazz standards band in the 60s. But other than that, yeah, whatever.
That's really helpful. Thank you, Gary.
You're welcome, Keith.
One time, Gary bought a BMW, and they spelled his name Gerg, and he was really annoyed because he had just bought a pretty nice car, and they couldn't even get his name right. So every time I want to kind of push him a little bit, I call him Gerg Lewis.
That's a good one.
Thanks,
Kevin. Yeah, Kevin, I can see your screen. I think it's been long enough that we've been goofing off. I'm going to let you go. It's your turn.
Perfect. All right. Thanks again, Jeff. I appreciate it. Yeah, as Jeff said, I used to work for MetaStock, worked for him for a number of years. And then in 2008, I left the company there and started this training company here at LearnMetaStock.com, where what we do is we just help people with the MetaStock program in whatever shape, form that we can. We actually provide the training a number of different ways. And so at the end of the presentation, I'll go through some of our training and show you some of our website and some different ways that we can help you out here. But a lot of times what we do is we'll take a trading strategy or an idea from an article, and Stocks and Commodities, first of all, is a fantastic resource. We get a lot of information from there, but also, from books or from the internet and so forth. And we'll take these trading ideas and we'll show you exactly how to duplicate those types of trading ideas inside your MetaStock program. And so that's actually what we're going to be doing today. Is I've got a trading strategy here that I'm sure a lot of people have heard of before, which is called the turtle trading system. It's been around for years and years. In fact, it actually was originally developed back in the early 80s. So I know a lot of people are familiar with it. If you're not familiar with it, I'd highly recommend do a little bit of research, read the backstory on it. It's it's actually a great story to say the least. And it's what it is, excuse me, it's a trend following type of trading strategy. So you're always going to be trading in the direction of these overall trends. So if you are a trend trader and you like trading in the direction of these trends, take a look at this one. I think it'd be well worth it. Again, it's an older strategy, but as I'll show you here in a minute, it can be modified and could be a great addition to something else that you're doing there as well. So the turtle trading system itself was actually created by two futures traders back in the early 80s, Richard Dennis and Bill Eckhart. And these guys were very, very successful as traders. And what they were doing, as the story goes, is one time they were sitting around, they were trying to figure out if traders could actually be taught, if they could take somebody off the street, for example, and teach them how to trade and how to trade, of course, successfully. Could they actually do something like that? Or are traders really, are they more born? Is it like a different personality or something different that makes them successful in the markets? And I think most people that have been trading for a while can understand where they're coming from, because trading is a little bit different. Not everybody's going to be successful. I mean, it takes quite a bit to be successful over a longer period of time. So what they did to help answer this particular argument or discussion is they decided to go ahead and place an ad in a paper, for example, to identify this particular answer. Are traders either born and or could they be made? And what they did is they placed this article, for example, in the Wall Street Journal, and they received well over 1,000 applicants for this ad. And out of those 1,000, they basically got it down to 23 individual people. Now, these 23 people, they nicknamed were what they called the Turtles. And the name comes from another story where Richard Dennis was actually, I think, in Singapore, where he went to a turtle farm and so forth. But long story short is they nicknamed these traders the Turtles. And so this turtle name here, again, like I say, is very, very well known inside the trading world. So these applicants, or these people that were chosen to do this, they're straight off the street. They did not have trading experience. And what they were doing is they were given very, very specific instructions. Now, they did have a couple different options. For example, they were given two different possible systems that they could trade. And they were also given some flexibility on which particular security that they were going to be trading. But hands down, the most important thing that they had to actually live by was that there was absolutely no second guessing. No matter what they did, they had to follow the rules specifically. And anybody who didn't was then, of course, asked to leave. So they started off with 23, and I think this particular experiment went on for approximately about 5 years. And out of those 23, a number of them did not make it all the way through for a number of different reasons, but it was an extremely successful trading thing, to say the least. So the different markets that they were trading, for example, is they traded, for example, coffee, gold, cocoa, silver, the metals, treasuries, a number of different things. And these are the things that the students actually could choose from and what they were, what they could possibly trade. But in order to trade, they had a number of different rules, and they had to be able to answer a number of different questions about what they're going to be trading, how they're going to be trading, what the markets are doing, what type of volatility is included, and so forth. So the two different systems that they were given are actually two really pretty straightforward systems as far as technical analysis goes. And that is, they were given the choice between what's called a 20-day breakout and a 55-day breakout. And the idea here is that with a 20-day breakout, all they're really doing is looking at the prices for the last 20 days. And if the price breaks above that 20-day high, that's a potential long or purchasing type of situation. And then to get out of that 20-day break, they actually had a few different exit rules, but the main one was that they had a low, like if the prices exceeded or dropped down below the low of a 10-period low, the price or the trade would have to be exited at that point. In addition to that, they also had a 55-day breakout that worked the same way, and that is if the prices broke above a 55-day high, they could enter there. And to get out of the 55-day high, they were looking at 20-day lows. So again, almost like a couple bands that were placed on the security, looking to see if the security is going to break above and or below the bands. Pretty straightforward. Now, based on those different trading ideas here, what they had to do is based on whether they were going to actually take the trade or not, is that they had to look at the previous trade. And if the previous trade was unprofitable, that's the only time they could take the next trade. So, which is counterintuitive to a lot of traders, right? I mean, most people want one winning trade after another. Whereas in this one, they were actually looking again for the previous trade to be unprofitable. And if it was, they could then take the current trade again, which I thought was a pretty interesting take on it. Then in addition to that, they also had to change or basically adjust the size of what they're going to be trading based on the volatility. And the idea is that if it's an extremely volatile type of market and security that they're trading at that time, they were instructed to take lower positions or not as much in that position. And vice versa, if it was a lower volatility type of market, then they were instructed to actually place larger trades. And then what they do is they would, of course, monitor that trade. And if the trade proved to be profitable and was moving in the direction that they were expecting, they would then add to that position. And then as far as getting out of those positions, they had a number of different rules, but the main one was a 2% max loss. And I'm sure a lot of you have heard this before. A lot of people have talked about doing this or basically including this with any type of trading strategy. And that is if you lose more than 2% on any individual trade, it's time to get out. And this possibly could be where that came from, but that was a hard and fast rule as far as these trades went. And then the other idea or the other way that they could get out as well is that if the price, for example, violated the highs or lows, depending if they were long or short. So for example, if they were in a 20-day breakout, if the price dropped down below a 10-day low, they would have to get out at that point. And then one additional stop was what's called an ATR. An ATR is just an abbreviation for the average true range, which is another indicator that you have available inside your MetaStock program there as well. Now, there's a lot of information available for you on these systems. And some of the original turtles, one of them, probably the most famous one, is Curtis Faith, because he published a number of different things based off of this. What's kind of interesting is that, you know, these traders were sworn to secrecy, and for whatever reason, I don't know exactly what happened, but of course, some of them drifted away, and then of course, then they published some of the trading ideas and so forth. But if you want to go out and do a little bit of research on there, there is a lot of information available there for you. So let me show you what we've got inside your MetaStock program that can help you do this. So first of all, what I'll do is I'll go ahead and just open up a chart here of the SPY, for example. And what we'll do is we'll first plot our bands that you have available inside your program. So if you go up here to your indicator quick list and you just type in turtle, for example, you'll find an indicator right up here called the Turtle Trader Bands by MetaStock. And this is one you're looking for. What you want to do is you want to drag this directly on top of your price bars. And then you're going to get a dialog box asking whether you want to look at longs or short positions, and then the look back period. So to start with, let's go ahead and take a look at long positions. So I'll put a 1 in this first box, and the look back period is 20 periods, which of course is just the default, and I'll just leave that. We'll click on OK. And then this next box is going to ask how you want to plot this indicator. And this is extremely important that you merge it with a scale. If you don't merge it with a scale, it's not going to plot correctly. So make sure you do that. Click on OK, and that'll plot your bands there on your chart. Now, something else that'll help you here with these bands is that you're looking for these different breakout signals here. And generally, this upper band right here, this upper line right here, this represents the highest that the prices have been over the last 20 bars. And then this lower band, this represents the lowest that the prices have been over the last 10 bars. So again, if the prices break above this upper band, this could be a possible long entry. And if the prices break down below this lower band, that could be a possible exit. So to help you with that, you've also got an expert advisor available inside your program there as well. So to find the one that comes with your program, just scroll down to the very bottom of your expert advisors and look for this expert right here, which is called the Turtle Trader Hybrid Method by MetaStock. Excuse me. So the reason I think why it's called a hybrid method is because the rules might not be exactly how they were with the original Turtle system, because as I was telling you before, they would add 2 positions, they would take away and so forth. So there was a lot of movement in how much they were trading and so forth. But this will give you the actual signals based off these bands. So what I'd recommend that you do is select this, click on the edit button over here on the right-hand side, and then this will allow you to go into the editor of the expert advisor here. So if you go to the symbols tab over here on the right-hand side, you'll see that you can choose to go, that you could choose buy signals, short signals, sell stops, and so forth. So what I'd recommend that you do to start with is select a buy signal and also the sell signal. Choose those 2, and then down at the bottom, click on OK, click on attach, and then click on close. Now, what this is going to do is this is going to plot a number of different arrows here on your chart, along with these little red signals here. So the way that this operates is that, as you can see here, for example, like in this area right here, the prices broke above that upper band. So this is our 20-day high. The price broke above that, and for that reason, you got a buy signal or an upward arrow at that time. Now, you'll see that after in this upward move, for example, there's a number of other buy signals here as well. So the question might be is, how come I'm getting so many other signals here during this move? And the way that this works is that these buy signals reset. If the prices go above this upper band and then come back down and then go back up to that upper band, that's where you'll get another signal. So that's what you'll see over and over again. If the prices drop down, go back up, that's where you'll get another signal. And that's why you've got so many different buy signals here in this upward move. Then at the very top here, you'll see that you've got a little insignia right here that says 10 inside of it. That means that the prices are breaking a 10-period low right here. Okay, so if you would have taken this long position here, you would have possibly have gotten out right here. If you would have taken this position right here, this might be your exit right here. Okay, so pretty straightforward. Now, if you're looking to go short possibly, let's go ahead and change our bands here. I'll double click directly on the bands, and instead of a 1 in this first box, I'll change that to a 2, looking for shorts. We'll click on OK. And now what happens here by doing that, we're going to be looking at this lower band. And let's go back here to where we had a bearish market here. And you can see that in this downward move, this lower band now represents the lowest that the prices have been over the last 20 periods. Remember, the 20 periods was on top before, now it's down here. And the stop for this is now up here, and this is representing a 10-period high. So this is a 20-period low, this is a 10-period high. Now, let's go ahead and change our expert here as well. So I'll go ahead and click on this. And we'll click on the edit button again over here on the right-hand side. And this time I'll go ahead and unselect the buy and sell, and I'll choose short and then cover. So short is going to give us the initial short signal, and then cover is going to allow us to cover or close that short signal. So we'll click on OK, click on close. And now you see we have a number of downward selling signals during this downward move. So it's the same thing. We're looking at the prices, and if they relate, or I'm sorry, if they trade below this lower band, you'll get a sell signal. And then, as you can see, we've got a number of other sell signals. And again, what happens is that if, in this case, if the prices trade above that lower band and then go back down, you'll get another sell signal. So that's why you have a number of sell signals during this upward or this downward move. And then for your exit, then if the prices violate this upper band, that's going to possibly be an exit signal there for you. Okay, so pretty simple, pretty straightforward here to say the least. So let's go ahead and change it back to a long position. I know most people or most traders and so forth trade to the long side, and that's what I'm going to do to try to keep this as simple and straightforward as possible. So we'll just be looking at primarily long trades today. All right, so I'm going to go back to our buy and sell, but I'm going to add one more here as well. And for this one, I'm going to go ahead and add what's called a sell stop here. I'm going to go ahead and click on this. We'll click on OK. click on close, and then I'll go ahead and move this over here just a little bit. All right. Now, as you can see here, we've got a number of other signals here on our chart here, and these actually have a stop sign inside the middle of it. So in this case, for example, you'll see how the prices are moving up, but they didn't violate this lower band here. And you see that this one didn't trade below the lower band there as well. So why did we get stopped out? Well, as I was stating earlier, there was another type of stop that they used as well, which was an ATR, or an average true range. This is another indicator that you have available. Now, I modified it a little bit to actually apply this to the charts here for the turtle bands. And once you become a subscriber to the Learn MetaStock program and training, any of our systems that we create a lot of formulas. You'll be able to download these formulas directly into your program. So all of our formulas, for example, inside our Learn MetaStock website will all begin with LMS. And these will then be added to, for example, like your indicator quick list. So the one we're going to use here today is we're going to scroll down here and we're going to look for an indicator here, which is called the LMS-turtle cell stop. So I'm going to go ahead and drag that directly on top of our price bars. We'll click on OK. And then again, very, very important that you merge it with your price scale. We'll click on OK. And this will plot our average true range. Now, our average true range, this is acting as a stop in this case. And the idea here is that if the prices trade below the average true range, that could be a possible exit for you as well. And as you can see in this situation, the average true range is above the lower band, and that's why you got out at these two different places right here. So again, number of different ways to use it. It's actually very, very simple, very straightforward as far as this goes. But the million-dollar question is, well, how good is this? I mean, it looks like this would have been a, obviously a great trade, going back here, since our, our recent move down here. But this has been a great trade during this section. How profitable is a trading strategy like this? Well, the good news is that inside your system tester, you've also got a system test for this as well. So, for example, if you scroll down to the bottom of your system test, you'll find a system test, which is just called the Turtle Trader Hybrid by MetaStock. So if we select this, over here on the right-hand side, I'll just go test, for example, to the long side. We'll go back or use 1,250 records, which is approximately about 5 years of end-of-day data. We'll test it on daily data. And then for our trade options here, you can see that, for example, if I click on the account button, you'll see that I'm going to test what's called a points only test. So what a points only test is going to do, it's just going to return back a raw number of points that were gained or lost. So for example, like if a security just goes from 50 to 60, a points only test is going to tell us 10 points. That's how much was gained during that trade. So by doing it that way, excuse me, is that it takes out of the account any type of money. We're just looking at raw number of points moving. So then if I go to, for example, like the broker tab here and using a points only, you'll see that interest rates are all grayed out and also margin requirements are grayed out, meaning that those are not going to affect my system test results. And then over here on the right-hand side, for the commissions, I got that set to 0. And then lastly, at the very top, here's our trade execution. And you can see that for all the buy and selling that we're going to be doing in this test, they'll all be placed at the opening price with a 1-period delay. So what that means is that if I get a buy signal on Wednesday, this is going to simulate that I got into the trade on Thursday, for example. We'll click on OK. And then to run it, we'll go ahead and select a security. Again, I'll just go ahead and put in the symbol SPY. We'll click on our system test. And then this, of course, will begin the process. So now once it's finished, oh, I click somewhere else. If you, for example, if you run a system test, you will have a little result box down here in the lower right-hand corner. But if you click somewhere else and that disappears, all you have to do is go back to your system test and look for this R on the right-hand side. This means that there's a report available. So if I right-click on it and click on report, I'll be right back into where I can select that system test result. So I just want to choose, for example, like the most recent one. I'll click on view. And then this, of course, will open up our results here. All right. So in our system test results, we tested 1,250 records, about 5 years of data, and it generated 101 points trading this particular trading strategy. So then the question is, well, is that good? Is that bad? Well, a lot of different things to take a look at, but one of the things that a lot of people immediately look at is the buy and hold. And the buy and hold in this case is 305. That means that if I would have just bought this security and held on to it during the same period that I tested it, I'd be up 300 points. But in this case, for example, if I chose to trade it, I'd only be up 100 points. So a lot of people look at that and say, well, gosh, you know, I didn't even beat the buy and hold. I don't think I want to do that. Well, that's okay, but before you make a decision like that, I mean, you need to take a look at some of these other fields here as well. So for example, so here you can see that the system test actually generated 34 total trades. And out of those 34 trades, 14 of those trades were profitable. 20 of them were unprofitable. So you had more losing trades than winning trades. So then your average profit, in my opinion, this is the most important field you've got here. It's saying that the average profit was 17.2 and the average loss was 7. So what that means is that your average profit was twice as big as your average loss. And in my opinion, again, that's the most important field you can look at, because you can be wrong more than you're right and still make good money if your trading strategy is, if your winning trades are at least twice as big as your losing trades. And normally what I try to shoot for is around 3 to 1. So again, if my average winning trade is 3 times the size of my average losing trade, you know, again, I could be wrong a lot more often than I'm right and still do very well with that. So in my opinion, I think that's an extremely important field to pay attention to. Then the other thing I like to look at too is down here at the bottom is how much we were in and out of the market. So here you can see that we were out of the market 600 bars. So what does that mean? Well, if you go back up here to the top, you'll see that we only tested 1,250 records. And if we were out of the market 600 of those bars, that means that we generated 101 points in half the time that it took to generate 300 points by just doing what we consider to be a buy and hold. So while that doesn't meet this number, that does change the value of it quite a bit, in my opinion, because of course that frees up your money to do other things. And if nothing else, you can always put it in, you know, an interest-bearing account if it's paying anything, of course. But there's a lot of other things you can do, and or look for just other trades. Now, the other thing, of course, is to click on this plot on chart down here at the bottom. And the reason why this is going to be important is because this will tell you exactly where you bought and sold, for example, during the system test. And this is the area where you really need to be careful that you are buying and selling exactly where you should be and making sure that you understand it. Now, as you can see here, we've got a lot of signals here on our chart. So I'm going to try to clean this up here a little bit. And I'm going to remove the expert advisor that's attached to our chart. So to do that, I'll right click on the chart. I'll go to the expert advisor and just choose detach. All right, so now what we've got is we just have these buy and sell signals, which are generated from the system test. So if you hover over any of them, you'll see these numbers here in yellow, in this case, for example. The first number represents the number of shares or items that you bought, and then the number in parentheses represents what trade number it is. And then again, if you hover over it, it'll also tell you the price that it was filled at as well. So trade number 3 traded 1 unit at 642.20. So if you look at this, for example, you'll see the opening price is 642.20. So in other words, in this case, you'll see the buy signal was 2 bars previous to that, and then you got in at the opening of this bar. So when I actually started looking at this trading strategy and running these system tests and taking a closer look at this, I'm wondering, like, for example, again, here's another example where this one traded above that upper band, but we didn't get in until 2 bars later. The question is why? What exactly happened here? So to kind of work around this, the first thing I did is I went back into the system tester and I went back to the trade options. Underneath the trade execution, I changed the delay here from 1 to 0, clicked on OK, and then we'll go ahead and just rerun that, and I'll show you what happened here. So we'll go ahead and rerun the system test. And down here at the bottom, we'll click on View Report. And here you can see now our points actually dropped a little bit from 101 down to 97. Okay, we'll expand this a little bit. We have 40 total trades. We have 16 winning trades, 24 losing trades, more losers than winners. We have an average profit of 14 and an average loss of 5. So again, a really nice ratio here, but not super profitable. So let's go ahead and take a closer look. We'll click on the plot on chart. We'll go back and we'll go back to the chart itself and take a look at this. And now again, taking a look at these signals here, for example, like here's a buy signal. So this one traded above that upper band and we did get in on that next bar. Here's another one that broke above that upper band and we got in on that next bar. But here, for example, then I noticed that we had like a sell signal here. And for some reason it exited at that point, not really sure why. And then over here, for example, I can see that this traded below that lower band and also the ATR, and it definitely got out there. So that one looked good. So based off of this, this is the kind of stuff that I go through when I'm working through these different strategies. Is first of all, making sure that I understand why it's buying, why it's selling, and if not, is there something else that we can do about this? So that's what I did is I went back into the system tester, and inside our system tester, I created 4 different system tests. So for example, if you go up to the search dialog here and type in LMS, for example, that'll show you, for example, like all the different LMS systems that you have loaded on your machine there. So here you'll see that I've got 4 different turtle systems here, or system tests that I've created. The first one just says turtle trader number 1, enter and exit on the bands, period. So I'll go ahead and select this, and let me show you how this one works. Go ahead and put in the same symbol as SPY, and then click on our start system test. All right. Now, the difference between what this one's going to do or show us is that this one is actually going to get in when the price bar crosses that upper line. Now, why would I do that, or how could I do that if I was really trading this? And the answer is that this upper line, we know exactly what the value is here. So if this value in this case, for example, is 689, I know for a fact that if the prices go above that, I could place something like, for example, like a buy stop and get into that trade at that point in time. I don't have to wait till it closes and wait for the next day and everything else. I can get in at that point. And same thing for the exit. I know exactly where my exit should be. So if the prices violate that level, I can get out at that point. So that's what we're testing here. So for example, by doing it that way, getting in and out exactly when those signals occur, that increased our profit quite a bit. We went up to now 191 points. And by doing that, you'll see that we had 18 winning trades and 14 losing trades. So we had more winners than losers. And the average profit is 16 and the average loss is a little over 7. So again, better than a 2-to-1 ratio. So that's the kind of stuff that I'm always looking to try to figure out how we can improve on that. And then of course, we want to plot it on the chart down here at the bottom. Click on the close down this dialog and just verify again, like I say, that this thing is buying and selling exactly where it should be buying and selling. So here we got in as soon as it went above that line. And to verify it, if you hover directly over those yellow lines, that'll tell you the price that it got in at, and then vice versa, where it would have gotten out at as well and at what price. So this is just a real quick, easy way to check or basically follow these rules based on the prices entering or basically going above the upper band and or going down below the lower band. All right. So taking that idea, and then of course, I always like to try different things. Well, what if I did this, or what if I did that? And this is the real power of MetaStock, is that once you start to get into this thing, this is what MetaStock will really help you do and allow you to ask these what if types of questions. And pretty much the sky's the limit as far as that goes. And it depends on how much you want to get into it and everything else. But this is an extremely powerful tool that you have available here. So the next idea here for me, for example, said, well, what if I only got out based off of the ATR, for example? Okay, so that's what we're going to do in the second test. So again, up here at the top, I'll put in the SPY. I'll go ahead and hit my start system test and begin that one. And when that one's finished, we'll go to the report and take a look at this. and say, okay, so now if I only get out based off of the ATR, now my profit actually dropped from 191 down to 123. So it actually dropped in points. The number of trades, I had 15 winning trades and 21 losing trades. So now again, I have more unprofitable trades, but I still have a real nice ratio of 17 and 6. So I still have a better than a 2-to-1 ratio. So this, again, if your average profit is substantially larger than your average loss, again, you can have a lot more losing trades and winning trades and still do very well. But that's a very, very important thing to understand about that. But to check it, click on your plot on chart, close down these dialogues, for example. And again, what you can do now is you can verify that, for example, like where you got in, now you're getting out if the prices break, for example, in this case, like the ATR. So taking this one step further, well, what if we got out based on the higher of these two different levels? Like, for example, in some cases, like you can see over here on the left-hand side, the lower band will be above the ATR. But in this case, for example, the ATR is pretty much above that lower band for the most part, but it does vary. So what if we got out just based on the higher of those two? So that's what I tested next, and that's test number 3. So we'll go ahead and test that one. And we'll see what that one comes up with. Go ahead and run that. And then down here at the bottom, we'll click on View Report. And now we're back up a little bit. We're back up to 163 points. So again, we're moving in the right direction, but not quite as high as we were just based off the bands. And again, looking at these again, we had 18 winning trades and we had 19 losing trades. So about 50-50. And 15 for our average profit and 5 for our average loss. Again, really nice ratio here, but again, not as quite of a high of a point total as we did previously just based off the bands. And that's where I came to next, is said that, well, if my highest or the best system test overall was based off of just the bands and using the standard bands that everyone talks about, using 20 and 10, for example, well, what if we try some different levels, for example, and not use just those levels? How would we go about doing something like that? And that's where, again, in the system tester, you have another feature inside your system tester, which is called optimization. And what optimization allows you to do is it allows you to put in a range of data. So, for example, if I want to try like a moving average. Let's say I want to trade a moving average system, but I don't know what length moving average to use. Well, I can tell this to say, hey, I want you to test everything from a, excuse me, a 10 period moving average to 200 periods. And then I want to look at the result and then figure out which one I want to use. Well, that's exactly what we're doing here. So for example, I put in an upper band level of a minimum of 2 and an upper band level of 50. And then a lower band level minimum of 2 and a higher number of 20 in steps of 2. And by doing it that way, what I found when I run it, let's go ahead and run it real quick while I get this going. I'll go ahead and put in my symbol. And what this is going to do now, if you look down here in the lower right-hand corner, this is actually going to run through 250 different combinations of those different band numbers and looking to see like, hey, is one, how are these, the 20 versus a 75 or whatever the case may be. And this is an extremely powerful tool. Now, this tool, whenever you optimize on something, there's always a lot of things that you need to kind of be aware of. But with optimization, what it does allow you to do is it allows you to see a massive amount of data at one time, and then you can decide how you want to use that data. So what we're looking at here is we're looking at our system test results. And as I said before, we tested 250 different combinations. And by looking at this report, it looks like everything tested positive, right? We had winning trades on everything. Well, that's not necessarily the case, because when you run a system test, the most number of optimizations that it'll keep will be 100 of the most profitable system test results. So in other words, these are the 100 of the most profitable system test results of that 250. So again, I'm sure we had a lot of losing trades, but the top 100, this is what it basically looks like. So now what we can do is we can then sort on this data. So say, for example, I'll sort on the net profit, and I can then take a look at what type of numbers by generating, using different length bands, what we came up with. So for example, like the top one generated 272 points. It had a total of 72 trades. It had 38 winners and 34 losers, and the average profit was 1.65. So let's stop here for just a second. 1.65, what exactly does that mean? That means that for every point that I lost on a losing trade, I made 1.65 points on a winning trade. So in other words, that's not quite a 2-to-1 ratio. That's, again, kind of what I'm looking for. I'm looking for at least like a 2-to-1, maybe a 3-to-1, and so forth. This is showing me that I have less than a 2-to-1. So if I go down here just even one down, you'll see that this one right here traded 20 times, so quite a few less trades. So again, this is 5 years of data. So this is literally 4 trades a year. It had 13 winning trades and 7 losing trades. And the average profit to average loss was 2.04, meaning that your average profit was twice as big as your average loss. And then to figure out what parameters it used, if you expand these last 2 columns, you'll see that for the upper band, it used a value of 12, and for the lower band, it used a value of 20. So this again is interesting too, because this is saying, rather than putting the larger number on the upper band, maybe put a smaller number on the upper band and a lower number on the lower band, right? So by doing it that way, again, if you were to follow this system, we'll go ahead and just open it up and so you can just kind of see it. But again, there's 268 points generated, total of 20 trades, 13 winners, 7 losers, 27 points for the average profit and 13 points for your average loss. So again, better than a 2-to-1 ratio. So what you can do then is you can plot it on your chart, for example, and you can see exactly where these signals would occurred, historically on your chart. Now, so let me kind of zoom out here for just a second here. And you can see that, for example, in this case, this generated a buy signal back here. And you can see our bands are way up here. And the reason why is because these are the bands that come with your MetaStock program. And the only choice that you have is you can choose to go either long or short, and then you can choose the 1 look back period. So instead, what you can also do is, again, take a look at our formulas that we've got. And inside the Learn MetaStock formulas, we've got another one here that you can download here. Let me go ahead and scroll down here. Is called the Turtle Bands Adjustable. So that's what we'll do is we'll go ahead and remove these bands first of all, and then I'll grab the Turtle Bands Adjustable and we'll drag that on top of our price bars. And then we can adjust these bands to anything we want. So I'll make the upper band 12 and the lower band 20, click on OK, make sure and merge it with your scale and click on OK. And now you can see exactly why you got a buy signal at that point and exactly why you got a sell signal at that point right there. So by doing it that way, again, I'll kind of zoom out here so you can kind of, whoops, maybe that's a little much. But of course, then you can see all the different signals here, going back historically, exactly where it would have bought and sold based off that information. Now, in addition to that, the other thing I created there to help as well is I also created an expert advisor. So first of all, let's go ahead and remove these signals here for a second. And to do that, a quick way to remove indicators, line studies, any type of symbols is to click on the edit button up here at the top, click on delete all, and then in this box, choose what you want to remove. So for example, like I'll remove the symbols and click on OK. Okay. Next, I'll go back up to my expert advisor and I'll type in LMS. And this time I'm going to grab the LMS turtle system right here. And I'm going to click on the edit button over here on the right-hand side. And what you want to do here is go over here to the symbols tab. And these are the different symbols that you can have plotted with your expert advisor. So in this case, for example, I'll tell it to plot a long signal and a long exit. And what you can do is if you open it up, you can modify the length of the bands inside your expert advisor as well. So for example, if we use 12 back here on the chart, we want to make sure that upper band is set at 12, and we want to make sure that the lower band is set at 20. So that's for our long signal. We'll click on OK, and then do the same thing for the exit signal. Change the upper band to whatever you tested it at or whatever you want to use, and then set the lower band, for example, in this case at 20. Click on OK, and then click on attach, and then click on close, and that'll place those arrows there on your chart there for you. So every time the price again violates, for example, like a particular level, let's just kind of zoom in here for a second. When it violates that, then this will generate that upward signal. And the nice thing about using or working with the expert advisor is that these signals are real time. So as you get data into your chart, if you have an expert advisor attached to your chart, those signals will update in real time. You'll get real time buy signals, real time sell signals, and so forth. Okay. Now, also in addition to that is I also created an exploration there as well. And for the exploration, what this will help you do is help you go out and search for other securities that are meeting whatever type of requirements it is based off that information as well. So for example, like here underneath the turtle band exploration, we'll go ahead and double click on it, but you'll see it's actually a very straightforward exploration. It'll give you the closing price in one column of data. It'll give you the value or whether you got a signal for the price crossing the upper band. You get or if you got a signal crossing the lower band, you'll have a column of volume, and also the last one is the percent change of volume. So very simple, straightforward. So let's say, for example, that you've modified these bands to you want to use 12 and 20 for your bands. So what you want to do is in the Explorer, you want to change this value here, in this case, for example, to 12. And then for your lower band, you want to change that one, for example, to 20. Okay, click on OK. And then to run that exploration, of course, select it. And then down here at the bottom, choose the database that you want to run it on. I'll choose, for example, the Dow Industrials. I'll tell it to scan the most recent 1,250 records, daily data, and I'll click on my Start Exploration. So this will go through those Dow 30 stocks. And what we're looking for now is we're going to look and see if we have any hits based on the prices crossing any of those levels there of what we searched on. And again, what we look for, what we change is we change the upper band to be 12 periods, and we change the lower band to be 20 periods. So when it's finished, as you can see here, now we've got the closing price. We have a column called upper, column called lower. And what we're looking for here is a signal of 1, for example, in any of these columns. So if you click on it a couple times, for example, like McDonald's is giving us a signal right now, meaning that the price is crossing the upper band right now. So let's double click on that one. And I'll move this out of the way here for a minute. And let's go ahead and apply those bands here to our chart. And we'll make this 12, make this one 20, click on OK, and merge it. And as you can see with McDonald's, the reason why that one came up in the scan is because this price is breaking above that upper band right now. So let's go back to that scan and let's look at some short, see if we have any others, because we only had one long here. So let's take a look at some of the lower band breakouts. And so we have 3 here. It looks like Visa, Home Depot, and Walmart. So let's open up Visa. I'll double click on that one. And then I'm just going to go ahead and close down this report. And then I'll do the same thing. I'll grab the indicator and we'll drag it here on top of the prices. And I'll change the upper band to 12, the lower band to 20. Click on OK, and we'll plot that here on our chart. And as you can see, this one right now, this is Visa breaking down below that lower band. Now, one of the really nice things, I'm sure they probably talked about this numerous times here during these different presentations here, but a really nice feature that I love inside of version 19 of MetaStock is that when you run an exploration, you can then, when you're looking at the report, you can search or sort the report in any configuration that you want, open up whatever security you want, and then once you set up the chart to make it look how you want, just click on your right pointing arrow, And all that information will then be passed to that next security inside that same report. So again, that's just a really, really nice feature that I like. The Explorer, in my opinion, is my favorite tool inside the program. It's extremely versatile. And that's a really nice feature that they added in version 19. But again, looking now at Home Depot, you can see why Home Depot came up on this report is because this security is breaking down below that lower level there. And so again, so as you can see here, Home Depot has had some nice runs both up and down, and this would probably be a pretty good candidate here for using some type of system like this, these band breakouts here. So that's what I have here for you. I hope that that makes sense. And what I'd like to do now is just take a couple minutes, and real quick, I just want to run through, just our website here and just kind of show you what we have available if you're possibly interested. But our website is up at learnmetastock.com. And what we do at Learn MetaStock, of course, is we help you with whatever it is that you're doing with MetaStock. And we really just want to get you up and running with the MetaStock program. There's so much to it and so much that you can do with it. I mean, we have a lot of different ways that we can help you. First of all, we do live classes, 3 live classes per week on Tuesdays, Wednesdays, and Thursdays. And all you do is just come up here to the live classes section. You can scroll down and you can see the different classes that we have scheduled for the week. But primarily where the majority of our customers spend the vast majority of their time is going to the video library, because inside of here we have well over 100 different instructional videos and tutorials to help you with your program. These are the different categories over here on the left-hand side. So for example, getting started is number 1. This is, if you're new to MetaStock, or even if you've had MetaStock for a long time, this is where I recommend everyone get started. And that is the area where I recommend everyone start, is to at least start watching these first 3 videos here. The introduction to MetaStock part 1, part 2, and then the next step into MetaStock down here. And what you want to do is just go ahead and select the actual video that you want to watch. And then if there's any resources attached to the video, underneath the video or this screen right here, you'll find a link here that you can click on. So for example, like with this video here, there's a quiz that you can select. And what this will do is, this is just a short quiz that you can take to help reinforce what you learned inside the video. So that can be a great learning tool there for you as well to kind of help reinforce things. So I recommend everyone right here, number 1, go to the getting started, go through those videos. And inside here, for example, we've got a lot of different ways that we can help you. So if you can't make, by the way, the live classes that we do on Tuesdays, Wednesdays, and Thursdays, we always put the previous week's recordings up on the website, so you can always go up and see those as well. But in addition to that, we also have the other these recordings. Everything that we do, you will find a recording of it on the website. We have this is a new area that we just added here under the drawing tools. And these will cover all the different tools and indicators that you have on both sides of your screen there. And we've received a lot of questions about these, but these are just short tutorials that kind of help you through that hump. And then, of course, we've got training on the forecaster, the expert advisor, option scope, system testing. I mean, you name it. Whatever it is that you have an interest in, you'll find the categories here. And up here at the top, you can always do a search up there as well. But probably where most people spend the majority of their time is underneath this trading strategy section. And this is where we take, ideas from books, magazines, the internet, whatever the case is, and we'll just show you how to duplicate that trading strategy. So for example, like today we were talking about the turtle trading system. So I'll go ahead and click on that one. And if you go here, if you want to download the formulas pertaining to the system that I was showing you here today, you just click on this link right here, and that'll download your formulas directly into your MetaStock program. So anyway, so that's what I've got. I can't make a lot of promises, but one thing I can promise you is that if you do spend some time here inside of our website, getting, working with our instructions and so forth, I can save you a massive amount of time, of effort, and everything else having to do with the program. So if you'd like to give it a try, we'd love to hear from you. So I'll go ahead and turn that back over to Jeff and let you take it from here, Jeff.
I'm just making sure we don't have any questions for you. We
Okay.
don't. So, but I want to talk a little bit about the offer that we're doing for the site and the service. Kevin, that was great. I don't know if you saw my fun fact that I put up about the turtle traders.
I did.
But I was. Did you?
No,
you
I did not. Did
Okay.
not.
So I thought it was interesting. It obviously was a different time, but out of the 23 traders that were chosen, you remember the 23 traders that were chosen kind of set?
Right.
Out of those 23 traders, 21 of them were male and 2 of them were female.
Say that again. One was what?
23 of them were male traders.
Okay.
And 2 of them were female.
Oh, gotcha. Gotcha.
In any case.
Thank you.
Let me go ahead. I thought that was an interesting fact. Let's go ahead and talk a little bit now about learnmetastock.com. So as Kevin, thanks again, Kevin. As Kevin said, hundreds of videos that are there, videos on basic, expert, system testing videos, videos on stops, all kinds of stuff. I really like all of this stuff that's included in terms of the systems and how those are modeled. There's 21 complete systems that are put together. You can just download them. In that, there's a breakdown of kind of the systems, but a good idea, Kevin gave a good idea of kind of how those work. He'll go up, talk about how the system works, how it's manufactured. He'll test it. He'll give some ideas in terms of what he likes about the system and what he doesn't like about the system. And then he'll let you download it and use it right in your MetaStock. I think it's the coolest thing ever. So what we learnmetastock.com is just $99 a month. That includes access to the site, all of the formulas, all of the kind of stuff that you might expect from it. As part of the conference, what we're going to do is we're going to do the extended trial for Learn MetaStock as we're doing for MetaStock. Whereas if you pay for a month, we'll give you the second and the third month for free. And I would recommend you do this, regardless of whether you've been with MetaStock for a while, or especially if you're brand new. But MetaStock's a tool. So it's a toolbox. It's been curated. It's been developed. It's been designed, and it's been winning the awards for the last 32 years in a row. But like any toolbox, the better you understand how to use it, the better that it's going to work for you. So you can sign up for this at the website metastock.com/conf-promo. Let me go over here real quick. All of the offers we talked about, metastock.com/conf-promo. If you have any questions, you can give us a call at 800-882-3040 or let us know in the chat, metastock.com/saleschat. As we get out of here, I want to thank everybody. All of the speakers that came and spent time with us, talked a little bit about how they're trading, what they're doing. I hope it was helpful for you. I want to thank our sponsors again. AAII is such a well-respected company. We're proud to be sponsored by them, AAII.com. Stocks and Commodities magazine has supported all of the events we've done for 13 or 14 years, and they do a good job. It's a great magazine, traders.com for that. And of course, right now, I just checked. Right now, we have 1,249 members of the Traders Forum. So if you go subscribe, you can do it for free. You might be 1,250 exactly, and I love round numbers. So you can join us at thetradersforum.com. We have a live market chat there. You can learn about the markets. We'll cover all kinds of stuff. A couple of weeks ago, we talked about canceling and Bill O'Neill's methodology, but it's designed to be a community of traders helping traders. And I think it's really cool because I've actually learned a lot just being there, and I've been doing this forever. So tradersforum.com, come join us, come share some ideas with us. It'll be good to see you there. Of course, now I want to say all of the specials we talked about. If you haven't tried out MetaStock, why not? You can try it for $75 per month, right? Like it comes with data, comes with everything you need to run it. You can also get that white glove installation support as part of it. You can also get unlimited access to our support. You can pair that with Learn MetaStock and get 3 months of that. But if you buy a month, we'll give you the second and third month for free. The thing about this time of year, it can kind of seem a little bit busy at times, but there's also a lot of downtime while you're kind of like, maybe have some time off for the holidays. And it's a great time to kind of get prepared and get ready for 2026, which is literally right around the corner. If you do an extended trial today, you'll be running until January 14th of 2026. So during that time, you can play with the software that's been rated #1 in its price category for 32 years straight. If it's not helpful for you, if it's not useful, you can just cancel your subscription. It's only going to cost you $25 a month. Somebody's honking outside. Anyway, I'd recommend that you give it a go. If you have any questions at all, call us 800-882-3040, metastock.com/conf promo, metastock.com/sales chat. Thank you for being here. I hope it's been helpful for you. A big goal that I had in this event is to kind of give you a lot of information, and I hope you've learned some things this week. I've hoped it's helped your trading, and I hope you try MetaStock. I wouldn't trade without it. Stay healthy, stay well. I'll see you at the next webinar. Thanks for being part of the November conference.